This theme is talking about the trends and innovation in the fintech space, changing face of banking and financial services. We live in very interesting times where the banks have become technology companies and technology companies have become banks offering financial services. The bankers will come for me and say, no, tech companies are not in any way close to banks. But to get started, I'll kindly request that we are upstanding for the anthems, and then we'll get running with the program. So can we get upstanding for the two anthems, the first stanzas, as we get our day running? Welcome once again. We will also wish to have this dedicated to prayer, and allow me, I haven't notified her, but she's ever ready. Patricia, is it possible for you to come and give us a word of prayer to get this conference running? We are here by His grace and not that we are super intelligent. And so let's pray that all goes well today. Patricia.
Let's humble ourselves for a word of prayer. Lord Jesus Christ, we want to thank you for the gift of life. We want to thank you for this day. We want to thank you for each and every one who's seated here with us, and also those who have joined us online. We commit this discussion, we commit the meeting, we commit all our speakers and all our guests into your hands, O Lord, that you shall guide the discussions, that they will be fruitful, and everything about this meeting will go smoothly. We don't take it for granted, and we want to thank you most sincerely for the grace that you've given us to be able to convene this day. We commit everything and pray and believe in the Lord Jesus Christ. Amen.
Thank you. So, because we're in the digital space, a number of us must be wondering, where is the program? So right in front of you is a QR code. Please scan the code, and you will be in position to access, 1, the program, 2, the profile of the speakers, and then 3, the speeches that will be delivered. And I would also like us to, I know you're very important people, but those of us that have the resources, and looking at the people here, I only see devices that are internet compatible. Last evening, I I logged on to X, formerly Twitter. I remember people who haven't even, like there's X, it's a confusing thing. And Bukedia was trending. And for a moment, I was like, what is happening in Bukedia? But today, let's make the Bankers Conference trend for the good reasons, because we are here for what makes this economy thrive. I know there are very important people here, but allow me recognize Dr. Rebecca Kichoncho, who is representing the Permanent Secretary Minister of ICT, and she's the Vice Chair of the BPO Council. Rebecca, you're very welcome. Now those are LC1 chair claps, so let's clap like we are real bankers. Thank you. And of course with us is the Deputy Governor, Bank of Uganda, Dr. Mike Ating. You're very welcome to be with us this morning. Doctor, very welcome and happy to have you this morning. I actually want to thank Wilbrod. We need to serve some good coffee so that we can demonstrate that we are happy to be part. Is it too cold? So let's welcome our governor better. That's much better. That's much better. Thank you. And without further ado, allow me invite Sarah Arapta, who is the chair of the Uganda Bankers Association, to come and speak to us. Welcome, our chairperson. Thank you.
Thank you, Michael. The Deputy Governor, Bank of Uganda, Permanent Secretary, Minister for ICT and National Guidance, represented by Rebecca Kichoncho, Vice Chair, BPO Council, the Country Manager for East Africa, MasterCard, and your entire delegation, Bank of Uganda senior officials present here, CEOs of public and private sector institutions, including all member financial institutions, development partners, our partners, the fintechs, MNOs, and all players in the payment space, members of the UBA committees for digital financial services and ICT respectively, all representatives of government ministries, departments, and agencies, representatives from the academia, civil society, and professional bodies, all our distinguished speakers, resource persons, and sponsors for this conference, distinguished invited guests, ladies and gentlemen, present here as well as online. A very warm welcome to you all. On behalf of the Uganda Bankers Association, I welcome you all and thank you for choosing to make time to attend our 6th edition of the Annual Bankers Conference that is being held today, the 14th and 15th of August 2023. We usually hold our conference in the month of July. However, this year, we, together with the Ministry of Justice and the Judiciary, co-hosted the first ever high-level national summit on alternative dispute resolution, ADR, on the 25th and 26th of July. And as such, we had to push the annual Bankers Conference to August. We thank you most sincerely for accommodating the change and putting aside your very busy schedules to join us this morning as we take stock of the trends and innovations in the fintech space, the changing face of banking and financial services. Ladies and gentlemen, the monumental changes we face today, from the COVID-19 pandemic, a very turbulent global macroeconomic environment, the impacts of Russia-Ukraine war, closer to home, the Ebola outbreak, and most recently, the consequences of the World Bank suspension of the funding of new products, the enactment of the Anti-Homosexuality Act. Such challenges remind us that throughout history, by innovation. The technology-enabled innovations in banking and financial services, known as the fintechs, is one such example, accelerating rapidly in reshaping the future of financial services and, in effect, clients by crushing barriers to entry and creating new markets to access to finance. The market has equally evolved with a growing young population under 30 years with preference for digital solutions. This collectively has positively impacted economic growth through expansion of access to financial services, which is financial inclusion, and reaching the underserved consumers, the unbanked, and previously hard to reach areas of the country. Today in Uganda, we have over 23 million bank accounts as of June 2023, coming from under 7 million accounts in 2026. Ladies and gentlemen, these are startling statistics. Thanks to the partnerships with MNOs and fintechs, this is a whopping 70% growth in only 7 years. 16 million accounts increment, or 2.2 million accounts added into the system annually. I think we deserve a clap for this. Mobile phones with ticket sizes for individuals averaging between 150 Uganda shillings to Uganda shillings 1 million. Out of the above 13.3 million customers, over 560,000 of these are SMEs who take between 7 million and 10 million daily or every 2 to 3 days to support their businesses. These include banking, mobile money agents, retail shop owners, suppliers, money vendors dealing in foods and products, etc. Customers are clearly at the epicenter of this revolution, and this new world of customer experience and data-based services based on analytics requires new forms of collaboration and partnerships, which as we in the participants in the ecosystem must embrace and make the necessary changes needed to deliver on these transformative outcomes in support of growth and development. Every partner in this value chain brings something to the table. For example, the banks bring the funding for lending, the MNOs bring sizable and mass customer bases, reachable over 24/7, that's the penetration that we need, and the fintechs also bring the soft tools and solutions and service offerings combined with the greater convenience, which is the efficiency, ease and speed, as well as enabling tighter controls, which is the safety element, and also controls around spending and budgeting. Digital transformation is, however, not without risks and has come with some challenges in balancing these innovations with safety, safeguarding competition, financial stability, integrity, consumer protection, as well as data privacy. I was speaking to my colleague from BPC just this morning, and he says the theme in his business is really around fraud mitigation. I'm glad to report that as a means to address and tackle some of these risks and challenges that are, amongst others, cyber risk and fraud, the industry, with the valuable support of Stanbic on the 23rd of March of this year, held the first fraud symposium with various stakeholders outside the banking system. The output of that fraud symposium has been converted into a phased fraud risk mitigation framework for the industry that will be launched by Q4 this year. The pillars of that fraud plan including, amongst others, empowering customers and end users, promoting integrity amongst banks and financial staff, enhancing systems and processes amongst FIs and our respective partners, and promoting collaboration among key domestic anti-fraud stakeholders. We have also stepped up our public awareness campaign in this regard and will continue stepping up our risk management strategies to appropriately mitigate the ever-evolving risk landscape. We're also in the very last stages of revising our industry code of conduct and ethics, which will be launched in September this year. as part of the many actions and initiatives to cope with the trends and challenges arising out of digitization of financial services, amongst other related industry risks. Ladies and gentlemen, we also will launch an industry framework on ESG and all sustainability standards before the end of the year as a minimum standard that will apply across the sector as our commitment to society, particularly in areas of consumer and environmental protection and other responsibility safeguards therein. It's not only a rich, thought-provoking and resourceful meeting of minds, but also one that will provide us with a critical roadmap required to continue unlocking the potential in evolving fintech space and wider financial sector, and by extension, propel the country to the much-needed socio-economic transformation. Ladies and gentlemen, finally, I'd like to to thank our sponsors, partners, resource persons, participants, and all the various teams, including the UBA Secretariat, that have worked so hard to put this conference together. And I call upon you to give it your best in the deliberations. I'll leave you by a quote by Hickman Ersky, who said, "Fintech is not about disruption, it's about collaboration. And it has the power to democratize financial services and empower billions of people worldwide." Ladies and gentlemen, I thank you all for listening and wish you a good conference. Thank you.
Another round of applause for Sarah Arapta. A lot of takeaways from her remarks, but I think the most important thing is the appreciation that there's been growth. And so we are here to have a conversation where we're talking about growth. But most importantly is the realization that technology in the financial services is actually playing the critical part of enabling and not just disrupting. As you're mentioning, as you're speaking and sharing, Sarah, I was reminded of the time when I opened my first bank account and what is happening right now, as in the bank app allows me to open an account and I have an account without bringing my mother's birth certificate to prove that I qualify to have a bank account. And times are exciting. For our children, they just can't understand when you tell them I'm going to the bank and they're like, "But Dad, don't you have a card?" Like, yeah, but there are certain accounts that don't have cards because the bank says if it is Mr. and Mrs., yeah, it becomes a little bit of a trick. So we will require you to come to the bank. Ladies and gentlemen, allow me now invite the Deputy Bank Governor, Dr. Michael Atingengo, to come and speak to us.
Thank you so much, my namesake. All protocol, as early observed, is maintained. So a very good morning to all of you. I really want to thank the UBA for inviting me to share a few remarks at this flagship annual Bankers Conference. It is an honor to open the Bankers Conference with two distinguished female leaders. Dr. Amina Zawede, represented by Rebecca Kichoncho, an outstanding digital transformation expert and a public servant, and Sarah Arapta, the CEO of Citibank and Uganda and chairperson of the UBA. Prominent female leadership deserves to trend. It deserves to be normalized and disrupt the banking system like financial technology fintechs have been doing. Sarah, you mentioned it's not disrupting, but collaboration. But in this case, I think it's disrupting. Ladies and gentlemen, I'm pleased to participate in raising the curtain for the opening session whose main act will be the keynote address by Mr. Ali on a most timely and topical theme, a theme that's also dear to the central bank. And that theme is, quote, trends and innovations in the fintech space, changing the face of banking and financial services, unquote. So as we look forward to the keynote, shall we consider three statements, i.e., banking or bankers' hours, people need banking, not banks, and Silicon Valley is coming. The Urban Dictionary defines bankers' hours as, quote, working or being open for the shortest and the most inconvenient amount of time between 10 a.m. and 4 p.m., unquote. It also includes a long lunch break and every possible holiday off. No wonder bank holiday became synonymous with public holidays. Bankers used to have limited operating hours due to several factors. First, manual and time-consuming processes of dealing with checks, deposits, transfers, all necessitated shorter hours for paperwork. Second, since banks traditionally catered for business clients that operated during day, aligning their hours was, of course, now more practical. Lastly, security concerns led banks to minimize vault access time by restricting hours. So in saying that people need banking, not banks, Bill Gates dismissed brick and mortar retail banks as dinosaurs that would be bypassed because people need the services that banks provide, such as storing money, making payments, obtaining loans, but do not necessarily need to use the traditional banks to get the services. So, stalking industry paranoia and evoking the David versus Goliath Bible story of an underdog defeating a seemingly unbeatable opponent, JP Morgan Chase CEO Jamie Dimon warned in June 2015 letter to the bank shareholders that digitalization would upend business model and facilitate greater competition for banking incumbents by prophesying, quote, Silicon Valley is coming. Now, of course, you know what the Silicon Valley here is. It's a region in Northern California that serves as a global center for high technology and innovations, the home of Apple, which has Apple Pay, etc. So, today, banking hours are a relic of the past. Fintech companies provide banking services more innovatively, efficiently, and often at lower fees. And to avoid obsolescence, traditional banks have embraced digitalization and are promoting branchless banking. I dare say that this trend will continue as technology evolves to offer more innovative ways of providing banking and financial services more conveniently, affordably, and hopefully universally inclusive. Technology-enabled innovation is transforming financial services by producing new business models, applications, processes, or products that enrich the people's access to safe and secure storage of money, easier and quicker payments, loans, effective financial management, and other financial products and services, including investment and insurance. Fintech is improving financial inclusion. Mobile money has enabled millions of people who previously had no access to formal financial services to send and receive money, make payments, and also save. Fintech has transformed the payment system, making them more efficient and accessible, such as through digital wallets and mobile payments. Also, through data analytics, artificial intelligence, and machine learning, this is facilitating rich insights into consumer behavior, risk metrics, and financial and economic trends. These fintech trends shaping the evolution of the banking and financial services within our operating environment is also influencing central banking. Indeed, the Bank of Uganda has prioritized several related initiatives in its strategic plan for 2022 to 2027. We are developing the capacity to leverage big data analytics to improve financial and economic modeling and forecasting for monetary policy and market operations, as well as adopting technologies for real-time banking regulation and supervision. We are also working with the UBA on a strategy to promote e-payments for a cash-light economy. However, as more financial transactions move to digital platform and online, our reliance on IT infrastructure grows, and so do the related IT and cybersecurity vulnerabilities. This was mentioned by Sarah earlier on. So cybersecurity, IT security, therefore become increasingly important because the new convenience comes with increasing risks as cyber criminals exploit the vulnerabilities in the digital systems to breach defenses and gain unauthorized access to valuable data, which is now considered the new oil. Cyber attacks targeting banks pose risks to individual institutions by disrupting critical financial operations, compromising transaction processing, access to customer accounts, or performing essential functions. This can, of course, diminish public confidence in the banking system, especially if the disruptions affect multiple banks or persist for a long time. The potential impact of cyber risks on the financial system invites a sector-wide approach to cybersecurity because a chain is only as strong as its weakest link. Seeking to promote the safe operation or adoption of digital electronic payment channels, which are crucial for advancing financial inclusion and the growth of the payment industry, the Bank of Uganda has instituted cybersecurity guidelines along with guidance on the minimum requirements for conducting system audits and vulnerability assessments to be implemented by the payment service providers. In line with its mandate under the National Payment Systems Act 2020, the BOU is promoting fintech innovation through regulatory sandbox, ensuring that the new product and solutions do not lead to financial instability or consumer harm. This development points to the requirement for the banking and financial sector to reskill and to retool human resources and ethically leverage fourth industrial revolution technologies such as the big data analytics, artificial intelligence, machine learning, etc., while minimizing the inherent risks that come with these technologies. Now, as an example, Bank of Uganda has already started capacity building and retooling initiatives for forex bureaus and money remittance operators. As I tuck the curtain away to clear the stage, I wish to applaud the members of the UBA for the virtuous collaboration with telcos and fintechs startups aiming to democratize access to digital financial services and serve our people who are still at the bottom of the economic pyramid. The fintech revolution is transforming the financial landscape. It is a force that demands thoughtful consideration and proactive risk management. The trends and innovations are not isolated occurrences, but they're interconnected threads weaving the fabric of the future of financial services. While they offer immense growth opportunities, there are, of course, other concerns that we have already discussed, like data privacy, regulatory complexities, cyber risks, AML, and CFT, including KYC. Therefore, as financial professionals, we are responsible for embracing these changes, adapting our strategy, and ensuring that these innovations are harnessed to create more inclusive and efficient and secure financial future for all. As for Bank of Uganda, we are committed to ensuring a smooth and orderly embrace of innovations to enhance financial inclusion, strengthen our operations and policy frameworks, and foster a resilient financial sector that supports Uganda's socio-economic transformation by increasing the economy's monetization. Ladies and gentlemen, I cannot live without pointing out that Bank of Uganda has effectively supported the resilience of the economy, which is steadily recovering from the external shocks that Sarah alluded to earlier on, and they hit Uganda, of course, and the rest of the world in the recent years. Suffice to mention that inflation has been successfully tamed, with the latest outturns for the last 2 months well below the 5%. The exchange rate has been very stable and is performing much better than in the peer economies, save for what we saw last week as a reaction to what Sarah mentioned earlier on. And the supervised financial institutions are strong, sound, durable, and profitable. Macroeconomic stability is a trend we have a strong reputation for delivering, and we are committed to sustaining its sustainability into the future. Indeed, the very reason why Bank of Uganda exists. Let me conclude by thanking the UBA for convening the annual Bankers Conference to consider and design effective responses to the forces disrupting and shaping the evolution of banking and financial services in our country. I thank you all for listening to me, and I wish you a fruitful Bankers Conference for 2023, and God bless you all. Thank you.
Can we give our Deputy Governor another round of applause? I think the first two presentations have set the pace in terms of the direction this conference is going. And I see people nodding and saying, yes, the pace is right. And thank you, Dr. Baika Tingego, for your remarks. Loaded, but also giving us a lot of hope as a sector, but as a country as well. The couple of things that you did mention, I liked the whole that the Silicon Valley is coming. I'd actually say it's probably already here, and we are beginning to, we either are in the valley or we'll keep seeing what is happening in the valley. And I want to believe from the works that have so far happened and the integration that is happening across the sector, the fintech, like I said, the banks have become technology companies. And I know how many banks now have a technology arm separate. We know them, not so. I know you can't mention them because they're probably competition. But that's the direction that we are taking. That's number one. Number two, we're also beginning to see quite a number of fintech companies that are becoming big enough to run operations like their banks. And so we're at a point of, like Sarah mentioned, convergence, but collaboration is becoming more critical. The one other thing that the Deputy Governor did speak to is the whole area of machine learning, artificial intelligence, and how these are beginning to disrupt. ChatGPT is becoming a big thing, or has become a big thing, that a number of us are not aware of how to respond. I'm pretty sure you must have seen what happened in Australia, where moving into exams with mobile devices was a good thing, and they had to reconsider. Why? Because ChatGPT was becoming a very good assistant. So how do we collaborate with technology? How do we set exams in academia and ensure that we are not necessarily pushing away the technology? The final thing that I'd like to speak to us and probably guide us is that these pictures are already loaded, and I would like to encourage us to do scan the QR code that is on your table, and you'll be able to access the program, but as well as all the speeches. I like this because I think the last couple of years you would walk away with a booklet, and I know very many times that booklet would be last seen when you're in this conference. And so the Uganda Bankers Conference has also become innovative and said, we know that you probably won't read this, so let's load it up in the cyber and minimize on the cost. So to the Secretariat, Well done. Finally, for the people that are here, tomorrow we have a session and it will focus on cybersecurity, and the target are people that are into the IT space in your organizations, your risk managers, but most importantly, this session will be run by MasterCard and it's on cybersecurity. So do register at the entrance to make sure that you're able to partake of this training. It's a half-day session tomorrow. Without further ado, allow me invite Dr. Rebecca Kichonjo, who is representing the Permanent Secretary, Dr. Amina Zawede. And like the Deputy Governor mentioned, the ladies need to be applauded, and especially when they are shaking the space. So Dr. Rebecca, please come and speak to us. We can do much better than that, Dr. Rebecca.
Thank you. Allow me to stand on the protocol that has already been observed by Ms. Arapta. Did I get that right? I bring greetings from the Permanent Secretary, Ministry of ICT, Dr. Amina Zawede, who couldn't be with you this morning because of earlier commitments that had been scheduled for today. A great morning to you, ladies and gentlemen. I am excited to speak at this conference where I wear two hats, one as a researcher in the fintech space. Specifically, I look at the enabling factors in this space, more so the use and usability of fintech. Secondly, as the vice chairperson of the Business Process Outsourcing and Innovation Council under the Ministry of ICT, where we are tasked to identify, among other things, disruptive technologies and support them to scale. I believe this conference is timely and dedicated to exploring the dynamic landscape of financial technology within the remarkable context of our country. Uganda's journey towards embracing fintech as a catalyst for economic growth, financial inclusion, and technological advancement is both inspiring and transformative. Our government's commitment to create a regulatory framework that nurtures innovation while safeguarding consumer interests sets a very remarkable precedent. By streamlining licensing procedures, fostering collaboration, and promoting digital infrastructure, Uganda has emerged as a beacon of opportunity for local and international fintech ventures. The Ministry of ICT has developed the Digital Transformation Roadmap, which will be launched this Thursday, the 17th, I believe at this very venue, and it hinges on 5 key pillars. The first one is enhancing digital infrastructure. The second is promoting digital services. The third, fostering innovations and entrepreneurship. The fourth, empowering digital skills and literacy. And the fifth, promoting cybersecurity, data protection, and privacy. As this roadmap is rolled out, development partners have been instrumental to support the process. The Japanese government, through the Japanese International Development Corporation, launched a project late last month that will play a pivotal role in providing the right skill set to the vast talent pool we have in our country, as well as support other key pillars through policy, business matching, entrepreneurship, and mentorship. I call upon the UBA to
take part in this project as key stakeholders that can benefit your consumers as well as your institutions. Furthermore, the role of Uganda's digital transformation roadmap cannot be overstated. This visionary roadmap lays the foundation for a digital economy, reinforcing the enabling environment for fintechs. The roadmap's focus on enhancing digital literacy, expanding connectivity, and optimizing digital government services resonates harmoniously with fintech evolution. By aligning these efforts, the government accelerates the integration of fintech innovations, ensuring that startups and established players alike can harness the power of technology to propel financial inclusion and economic progress. Moreover, as we gather here today, we are also very mindful of the remarkable aspirations set forth by the African Union. I had the honor of attending the Africa Jobs Forum last month with the PS in Ethiopia, and they have a vision of achieving at least 60% digital economy for all African countries. This opens doors to unprecedented potential. In this landscape, Uganda's commitment for fintech innovation harmonizes seamlessly with continental aspirations. By harnessing the momentum of rapidly digitizing Africa, Uganda's fintech ecosystem stands to play a transformative role in shaping the region's economic and technological future. In this context, the convergence of cutting-edge technologies like blockchain and artificial intelligence becomes very crucial. Blockchain's secure and transparent ledger system can revolutionize financial transactions, enhancing security, reducing fraud, and increasing transparency. AI, on the other hand, presents opportunities to optimize risk assessment, customer engagement, and fraud detection within the fintech landscape. However, as earlier stated by Ms. Sarah, it is important to acknowledge that the rapid development of fintech also brings unintended consequences. These include potential disruptions to traditional financial systems and concerns about data privacy and cybersecurity. You then deal with fraud that is both borderless and faceless. As we embrace innovation, the government's role in mitigating these risks is vital. Striking the right balance between innovation and stability, as well as implementing robust data protection measures, will be pivotal in shaping the future of fintech in Uganda. This is one of the key issues that will be handled in the project that the ministry has collaborated with the Japanese government. Amidst these challenges and unintended consequences lies incredible opportunities for startups. The vibrant young talent pool of Uganda, coupled with the government supportive initiatives and the digital transformation roadmap, positions our nation as a hub for groundbreaking innovations. Access to untapped markets, especially in rural areas, offers startups the chance to drive financial inclusion while addressing real-world needs. As you convene over the next 2 days, engage in insightful discussions on how government interventions aligned with the digital transformation roadmap and also our African Union's aspirations can help us overcome obstacles and magnify opportunities, all while safeguarding against unintended consequences. Together as stakeholders in this ecosystem, we can foster a fintech landscape that not only thrives on innovation, but also operates with utmost integrity, benefiting both our entrepreneurs and the broader Ugandan population. Once again, I would like to extend my gratitude to UBA for joining this transformative journey, more so for financial inclusion. Let us engage, learn, and envision a future where innovation, blockchain, AI, financial inclusion, and responsible governance converge for the betterment of Uganda, Africa, and beyond. As I conclude, I call upon the Uganda Bankers Association to work with government in providing an enabling environment for the fintech industry, and I congratulate the Uganda Bankers Association on hosting their 6th annual Bankers Conference and wish you great deliberations. I thank you.
Thank you, Dr. Rebecca Kichoncho, representing the Permanent Secretary, Ministry of ICT. So I'm going to request that let's stand up for a second. Let's stand up. It's cold. I see everybody on their machine. Say hello to your neighbor. Say hello to your neighbor. Just find out who they are. I know you probably understand each other. You know each other very well. It's So this is exciting. People were too serious. They can actually smile, eh? You can actually cross and say hello to someone. And then we get to the next session, the keynote speaker. Okay, so let's take our seats. Let's take our seats. One of the things, you can take our seats. One of the things I learned is with caution, allow a Ugandan to greet a neighbor. It becomes a difficult thing to break and say, let's get started, let's get seated. So for those who are still hugging, I will allow you to continue. And so we're done with the first part as we look forward to receiving our keynote from the title sponsor, from MasterCard. I would like to also request that those of us that can share this conference, because it's also available, it's running virtual, it's on BS Live, as well as our social media channels for the bank. Those that are not here physically, they can also still be part of this and learn as much as we're all learning. The one thing that I'm hearing from the first 3 speeches is that one of the areas that they're speaking to is the need for us to invest in our talent and human resource and make sure that they have the skills to respond to these emerging requirements. Machine learning, data science, artificial intelligence, blockchain, and new technologies. And for us to be able to respond, it is important that we have the skills that are going to enable us to maximize this potential. But allow me now request the team at the media table to play us a video, and then we will receive our keynote address. I thank you. Tim?
Technology is reshaping the way we live. It has revolutionized the banking and financial services sector in Uganda. Leading technology is reshaping the way we live. It has revolutionized the banking and financial services sector in Uganda, leading to an increase in the demand for efficient and cost-saving models with 24/7 availability. This trend has led to the innovation and variety of products and services that address the customer's ever-changing needs and demand. However, despite the benefits, these innovations also come with risks that financial institutions are constantly developing strategies to prevent and mitigate. Join us for the 6th edition of the annual Bankers Conference happening on the 14th to the 15th of August, starting at 8 a.m. under the theme Trends and Innovations in the FinTech Space, Changing the Face of Banking and Financial Services. Visit www.ugandabankers.org/ABC 2023 to register. This conference is sponsored by
Can we give a round of applause for those that have put in the money? One of the sponsors is looking at me and is like, really? Is that all you can do? Can we give them a better round of applause? Much better. Sometimes you need to give them that kind of encouragement that next year they can double, and who knows, we will be at a beach somewhere having this conference. But also, given the fact that I have the opportunity, we're running 3 new programs. I lead a software academy called Refactory. And we currently have 3 new programs that we're running. One in data science. It is a short program, 4 months. One in machine learning and artificial intelligence. And in 2024, we will launch the blockchain program. And so for you that have talent that you need to upskill, please do look out for us. I hope this doesn't reduce my invoice to the conference, because I say you've made an announcement, commercial interest.
I had prepared this. Wasuzu Otieno, preliminarily well-versant. But ladies and gentlemen, I will fall back on Ms. Sarah Rapta's very nice introduction. All protocols that were observed still stand. I would like oh, it's coming? Okay, great, thank you. So those of you who don't know me, my name is Shehryar Ali. I am the country manager for MasterCard. I cover East Africa, that's all countries south of Egypt, down to Mauritius. Thank you so much. I'm very humbled and excited at the same time for being an all-weather partner of Uganda Bankers Association, which is all of you. It's the 6th year running, and we are a proud sponsor. But I think what really excites us is the platform that this provides us in terms of collaboration, ideation, and then action. I think there's a lot of good networking I saw this morning, but I'm really looking forward to perhaps by the culmination of this event, that there would be crisp takeaways that we will work with together. The Ugandan ecosystem deserves it. The people of Uganda deserve it, that we put the best and the brightest minds who are present today at this platform. We think through the pain points which are real and look for solutions that come on the back of it and then execute on them. Now, this is not a one-person or one-party thing. We need regulators, we need government. We heard from our previous speakers all the great innovations that are coming through, but then also the fact that there needs to be regulatory infrastructure around it. Cybersecurity came out as a key theme, but we'll explore that a little bit more. So since this room is a bit cold, so we're going to try to get it to be a little bit warmer during this keynote speech. I would like this to be interactive as well. So it's an absolute privilege for me to be in the Pearl of Africa today in Uganda. You know, this morning I had my first bite of matoke, and almost a tear of joy went down my face because it's been a while since I had a good matoke. And I think, you know, credit to Ugandan culture and of course your fine cuisine that you do bring. But then beyond that, it's the history, it's the culture, it's the diversity, it's the nature. You know, there's just so much to be proud of. Ananasis, some of those best ananasis I've had in my life, you know, are from Uganda. So, you know, you have a lot to be thankful for and proud of. But today we answer a calling. And that calling is, like I previously mentioned, is to baseline where we are today, understand how the past has been, what were the learnings from the past. We are, as MasterCard, a 70-year-old almost organization, and there has been a massive transformation that we've experienced over the years, and I'll show you some of that shortly. So where is Uganda today? Where are we going to, where do we see it going? What's the future looking like? That's what we'll delve into in my presentation. I think what's also important is for you to understand what MasterCard is. So some of you, I mean, our name has a little bit of an issue, you know, card is in there, so everybody thinks. So how many of you think MasterCard is a card company? Wow, you've made my life so easy. Nobody thinks MasterCard is a card company. That's great. So yes, we are not a cards company. We are a tech company. We are a multi-segment company. We work with banks, with governments, with fintechs, with merchants, with telcos, and the list is going on. We provide technology. We're not a B2C company. We're a B2B2C company. And we enable technologies in a multi-rail fashion, which includes, you've got the card rails, but then you've got the account rails, you've got e-commerce, you've got blockchain, and that's also diversifying over time. So we said, okay, we're here. We're MasterCard in East Africa. What does that mean? So yeah, great. We have an international network. So what? How are we locally relevant to Uganda, or for that matter, any other East African company? And we took a decision that we're going to localize ourselves. And why was that important? Because unless I can design a solution which talks to a pain point in Uganda, my solution for US or UK or GCC or Asia is irrelevant. And so we said we're going to start looking at pain points locally. We're going to start designing solutions for them. We're going to localize ourselves. So I'm proud to announce on this forum that we will be opening our office in Uganda within the next 12 months with, of course, the blessings of Bank of Uganda and the team that are here. We are going to be hiring locally. We are going all lock, stock, and barrel in terms of our network and domestic network enablement. And when I say that, I mean that everything from commercial cost of a transaction that today MasterCard offers, it will be done at parity with what is the status quo. And if mobile money is the status quo, then our pricing has to be competitively placed there. So we are going all lock, stock, and barrel, infrastructure, people, office, solutions from Uganda, for Uganda. And that's my promise to you that we will deliver within the next 12 to 18 months. And you're going to hold me accountable because I'll be here after 12 months again to do a dipstick check on that. Thank you. Okay, let's see how technology works for me today. Okay. So, what do you see? That's the learning that I was referring to. 1950s is where we started it out. We had classic era, card came out, whoa, big innovation, right? But then look at the time it's taken. Card has been there. The online revolution only came in 2000. So all that period, card was the thing. Very slow movement, right? Suddenly, in the online evolution between 2000 and 2013, before mobile became the thing, e-commerce started picking up. And so MasterCard pivoted again. And we said, okay, we need to be looking for dual authentication, 3D secure, we need to enable websites so they can accept payments, etc. Well, what was happening behind the scenes? Mobile convergence was coming through. And you will notice that towards the last 5 to 6 years or 7 years, everything is moving from the card form factor to the mobile form factor. 4.5 hours every day we are spending, we in SSA, we are spending on the mobile phone. And I don't want to even get into what my son or my daughter are spending, how much time on that phone, but it's immersive. It's on the verge of immersion, where I actually saw a digital avatar for all of my children, and I was worried. So what I did, every time I get worried, I pick a book. So I would recommend you guys, if you have the time, to pick a book by John Blix, The Digital Twin. It's quite an insightful book. And there's a beautiful scene in there where, there's a gentleman who wakes up in the morning and he's got this screen that pops up and tells him how great his portfolio and his investment banking, portfolio is doing. It tells him that he's got 81 meetings in the day. And, interestingly, his digital avatar is attending 79 meetings of those 81 meetings. He is physically needed for only 2. And one is with his banker, because he is about to get a mortgage. So since the audience is predominantly bankers, so that was interesting. And one was with his health professional, which was a doctor. And so, so interestingly, doctor, because whatever the doctor decided in terms of his state of his health, that information will go to the insurers. That will go to his underwriters. And so that was a critical meeting for him to physically attend. But everybody else, it was the digital twin who was programmed to go and interface. A bit in the la-la land, isn't this? This is not something that we can all perhaps foresee ourselves doing. But surprisingly, what with ChatGPT being there and how Michael was pointing out to the whole change in approach in terms of that comes on the back of artificial intelligence and information being on your fingertips, it makes you think. And trust me, those concepts that you think today are unfathomable, may not apply, they will come. They're coming already. Okay, so ubiquity. For those of us, let me level set. Ubiquity is basically about being everywhere or very fast expanse in terms of access to your platform. So if you think about ubiquity, you'll notice that it took airlines 64 years or 65 years to get to 50 million customers. It took phones 50 years, right? Remember those dial-ups where you dial and then you wait for it to come back? That phone, it took 50 years to get to 50 million. But guess what? If you go down that track and you see how the time is actually shortening. Pokemon Go. Do any of your kids play Pokemon Go? They used to. Maybe it's already gone, right? Now there's something new. But Pokemon Go, it took only 19 days for it to reach 50 million users, right? And you thought that was shocking? Well, let me tell you how much time ChatGPT took. It's not on the charts. Points for guessing. Anybody can guess how much time it took ChatGPT? If you're brave enough, raise your hand and we'll listen. Okay, since I only got this information 2 days ago, so I'll spare you. But if you want to take a guess, please go ahead. ChatGPT? 1 month? Nice try, nice try. Okay, anybody else? 3 days? This guy's hot. I mean, in terms of your answer, otherwise as well, but you know what I mean. Yeah, but it took exactly 5 days. 5 days to get to 50 million users. Now, if you're a banker or a fintech player right now sitting in this room listening to this, and you are thinking, I'm set, I've got, I don't know, 1 million customers, they're going to stay with me, my platforms are solid, I'm well regulated, therefore I don't fear disruption. I think you need to think again. Process re-engineering, value re-engineering, business model re-engineering is becoming a BAU now. Your customers, again, honorable speaker from Bank of Uganda mentioned that people are not looking for bank, they're looking for experiences, banking experiences. That's what matters. What's your technology stack at the back of that? What your processes are secondary in nature to them. I mean, that doesn't really bother them. It's about what I expect from my financial services provider. How quickly can I get it? How easy is it? Is it safe? Can I trust it? Is the infrastructure something that I feel confident in? And am I getting the value in the back of that? Those are the things that people are actually looking forward to or expecting. Okay. Any lovers of web? The different versions of web, we hear 1, 2, 3. I've even heard 4 and 5 these days. But, it's exciting. It's super exciting when you think about what we've seen. You remember that strange sound it used to make when the modem used to be connected? I mean, I'm sorry, I'm dating myself. You remember? You almost felt like you were about to have a seizure. It was like, it was painful. So that's where Web 1.0 started. right? So in Web 1.0, it's the information highway, information highway. You had offshoots of e-commerce slightly coming in Web 1.0, but that's where it kind of got stuck. Web 2.0 comes in, and you have social media, you have mobile first, always on services available, engagement, cloud came through. So there's a slight difference between cloud and edge computing, which I'll explain in a bit, but most of you may already know that. So that's where we are, kind of like at the edge of Web 2.0, somewhere getting into Web 3.0. Now, social media has been a revolution. Yeah, how many of you use, I'm going to date myself again. Anybody still uses Facebook? I hope Facebook's not in the room. I'm sorry, otherwise I'm in big trouble. Yeah, Facebook, I use it. I'm a proud user of Facebook. But now when I'm listening to the younger generation, what are they talking to me about? They're talking about, well, Insta is there. And then there are a host of these new names that are thrown at me, which I barely kind of, have any affinity to or connection to. But these platforms are coming in and taking over that, behavior very quickly. Now, what is happening? Why is it happening? They're seamless. The new platforms are easy to get onto. It's easy to connect with your networks. But there's Web 3.0 at the horizon. Now, what Web 3.0 does is that it brings semantics to your web experience. It brings in data points which are relevant to you, either from a profile perspective, geography perspective, your background perspective. It looks at your previous patterns, and it gives you the relevant data. Have anybody experienced where you're talking to your wife or your friends or anybody, and you're talking about a particular topic, and suddenly feeds start showing up to that effect, or you've just searched something, and then you go onto your Insta or your other reels, and you suddenly start seeing those reels coming in. That is semantic web. It is a kind of like a more focused nuance for you to consume the areas that you're interested in, right? Now, there's all these concerns around security, data, privacy, GDPR, and so on and so forth, which I think are really important for us to build on as we charter this course of AI, because AI has to be structured to an optimum level for the ecosystem to benefit from. That's the core intent of AI. How many of you have invested in crypto? Or maybe this is a painful question to ask today. Any crypto? Yeah, I see some hands going up. Great. Well, I hope you invested in the right time, but as an asset class, crypto has been quite problematic for some. So, what did crypto enable? It's something called decentralized autonomous organizations, called DAOs. DAOs is a term that you'll start hearing if you haven't heard already, you'll start hearing about them very, very soon. So Ethereum would be a DAO. Bitcoin would be a DAO. There's no central party owning these platforms or entities. These entities have a decentralized nature. There's all these users, miners, who are actually members. They have voting rights in terms of how the entity is going to function. So it's quite a unique model that's coming out that I think we need to keep an eye out in Web 3.0. And then last but not least, edge computing. So we heard cloud computing. So, most of us probably use cloud, right? You've got your phone, you take some information, you put it up on the cloud. You access it as and when you need it, right? Now, edge computing is something where you, so let's say if you're at your home, Internet of Things warrants that the devices in your home are also the holders of data, information. So edge computing is in that if you're in a certain place, it will pull the data necessary for you to make a decision or form a view or form an insight from the area that's around you and make it visible to you. for you to make an optimum decision in that moment or the time or a project that you're doing. So that's edge computing, where devices, not necessarily computers, it could be your security devices, it could be something else, but that is, and the periphery of where you are. So this is coming up, guys, so keep an eye out on Web 3.0. Immersive experiences are on the rise. All right, let's go with whatever the technology enables me for. So, on that note, it's important to absorb the first thing. 76% of the people surveyed globally said, we would be happy to switch from our current financial services provider if we get better value, better service, and we trust them more. It's not a very comfortable fact to absorb, let's say, for those of us who are used to long-term loyalty. Our children, the next generation, is not staying put. 68% of them are happy with banking with a non-financial company. So that's another message that we're getting, that if a fintech makes it easier, leaner, I don't know, lesser KYC, easier access, lesser documentation, but still enables me to do all the use cases that I'm used to, then I should. So for example, a super app that's picking up in Uganda is Tuko. Any of you use Tuko? Little app. Yeah, so some of these are going to be, they're coming up the curve. If you look at Safaricom and M-Pesa, that in Kenya obviously took off, right, as a big super app. So all the multifunctional usages were catered for. So these apps will at some point in time plug into that segment, the new generation, who will then only know that as their financial services platform. Last but not least, 38% of unsecured loans were also issued by non-financial institutions or fintechs, for that matter. So something to keep an eye out for. This is one of my, I think, last slides on the current. So what's happening is there's a singer or a rapper called Travis Scott. Anybody listens to rap? Oh, good. We've got a few rap. Oh, great. Lovely, lovely. So Travis Scott decided to do his first metaverse concert on Fortnite. Anybody plays Fortnite, or your kids play Fortnite? Yeah? Okay. So guess what? In a normal concert, there's only 150,000 capacity. So he made about $1.7 million on the back of that. He goes on to Fortnite, does a 90-minute gig where who was watching? Avatars, your children's avatars. Those who play Fortnite, they were their avatars in that session. Obviously, your kid was sitting behind the screen watching it. But in that, he made $20 million. 90 minutes, $20 million. Connected to sensors in some studio, and he was doing his concert. The concert was free, so there was no ticket. How did he make money? He made money by selling skins to the avatars which our children were buying. So imagine when you talk to our children and we say, oh, metaverse is something far in the future, digital twin is a concept. Sorry, no, digital twin is alive now. Your avatar is there now. That avatar is getting commerce, is attracted to that avatar. Can you believe, I heard about a Gucci bag being sold in metaverse at an exorbitantly high price, which will only be worn by the avatar of that person. Mind-boggling, right? So these are things that are just coming up. Okay, so we call ourselves the original fintech as MasterCard, but if you think about it, it's not totally off. You think about Apple Card, that we launched in the US. Nubank in Brazil. It's one of the leading use cases for a totally digital bank. 22 million customers in Brazil, and we are their backbone in terms of payments and enablement for virtual cards. We have Orange in Europe. Again, MasterCard has got the capital in terms of their tech stack, which enables them to provide services seamlessly. And then a little closer to home, MTN, Airtel. I don't know if some of you may have seen our announcement yesterday as well on Airtel regarding the seamless remittance service that we have launched. So that's something that's in the pipeline. MTN is home here. So I think you would know as well, we've got virtual cards that we do issue on the back of MTN. But then in that box that you see on the right, you'll notice a number of names which are predominantly fintechs. So we believe in the power of collaboration. Fintechs need support. I was sitting with the founder of Shazam in London in Feb this year. How many of you have used Shazam? Oh my goodness, music lovers. I should have started with a song. Oh, goodness me. Okay, so Shazam's owner, Dheeraj Mukherjee in London, he shared with me something. He said, I started my journey out of university. 3 colleagues, 3 friends from, it was UCLA and Stanford. And these 3 people who were the founders of Shazam, they started with an idea in the garage and it just worked its way out. And they made something which totally flopped. This was in 2000s early, right? No record company would want it. They didn't see the sense of it. Napster was the big thing back in the day. Some of you may remember Napster. It was a cool term to use at that time, but now nobody knows what it is. But they said that music recognition at one point in time will become a thing. So they had that belief. As a fintech, nobody really supported them much, he shared. At one point in time, they went ahead and they sold the rights to the software, and the platform of Shazam was sold at peanuts. Later on, they actually ran into certain entities who said, okay, let's try this out. Music recognition is increasing in demand, especially with phone becoming the form factor. And lo and behold, soon it was Apple knocking on their door saying, we want Shazam. They bought that back. They sold it to Apple for $400 million. Right? So today, all of our Apple phones have Shazam built in. His message to all fintechs was, you might have a solution, but may not be ripe for this time. You may have to struggle to convince people that something is new, something is disruptive. But one thing you have to hold on to is belief. If you believe in your idea, you believe that this is what the future will be about, or this will complement the future generations, you have to drive it. You must not give up. You need to look for like-minded partners. There are enough people who will say, this is not possible, it's not doable. I mean, you try a new idea. I would challenge anybody in this room. Go try a new idea. Try to sell it to a VC. You'll find maybe 50 people who will say this is not doable, and then you might find somebody smart who might say, hey, I think there's a time for this. Maybe not right now, but there's a time for this. So that belief, that determination, that courage, and looking for the right like-minded partners, that's critical for any fintech, trying to have a go at it. Okay, I'll skip this one. So there are 5, let's say, predictions, for that matter, that I think are known to you. So shifting from cash to digital payments is accelerating, and rightfully so. If you have a GDP of, let's say, $50 billion, the amount of money being spent on managing of cash is 2% of that GDP. Now, whichever way we do our math, that's a lot of zeros going into managing of cash. Okay. Last time I checked, no, illegal business was doing their business on the back of KYC, AML, CFT bank accounts. The cash is always hovering around anytime, whether you talk about drugs or whether you talk about any kind of illicit business. Cash is somewhere around because it doesn't leave a trace. So cost to the economy, doesn't leave a trace, is clunky, securitization of cash, transportation of cash. We always think we go to an ATM, we take out the cash, we're like, there's no cost to this. If I use my card or if I use my mobile money, I'll be charged money. Sorry, no, you are paying for the cash. Because every time you go, well, firstly, it's access to cash, then it's managing of cash, pilferage of cash, risks around getting, God forbid, robbed, increases if you're carrying a ton of cash as an SME from your one transaction to the other. So that's going to happen, and that's happening already. Mobile is at the center of all kind of innovation and co-creation. I think that's a given. We see that it's becoming, you can leave your wallet at home. How many of you are comfortable with leaving your mobile? You almost have a panic attack, like, okay, how am I going to spend my day, right? So that's happening. Thirdly, mobile is also giving you use cases which previously you would think, hey, I might still go to a bank if I have to do a remittance, might still go to a bank and stand in a line, bother some very nice banker sitting on the other side to do my remittance. Actually, really, do I really need to do that? They say, oh, KYC, I need to make sure you're the right person. Well, yeah, that's correct. But liveness check, there are other methods of virtual KYC that have been tried and tested that one should consider. So before joining MasterCard, I was working for a bank in Mauritius, and we ran into the same problem. And we sat down with the regulator, and we said, let's do a demo of liveness check, and let's really try to poke holes into that and see how bad is it. So when we sat down and we did that liveness check, we realized that frankly, it does a full 360, so you have to obviously move around your face, it does a full check on your biometrics. It gives you a very high sense of confidence. Unless you have the other person sedated or something and then you're moving their face, you're pretty safe, And we got the provisional approval. And I was so delighted that I heard from the honorable speaker from Bank of Uganda that sandbox licensing, test and learn, is already thriving here. I met one of the leaders of Wave who've just recently been granted that license, Rashmi. Great stuff. We have to have that test and learn capability. Let's try things. Some of it will require refinement, as any platform does, but we must be open to that. And I think the regulatory framework in Uganda is providing you that. So I think a big round of applause for the regulators who have to do the tough job of balancing the opportunity, the innovation, with the right controls and safeguards. Now, let's move to something really interesting, which is socioeconomic challenges. COVID came, went, right? Now, we talk about this theme coming up, about social ESG. How is my financial services provider talking to my values, whether it's around people, it's around poverty alleviation, it's around skill set development, supporting of SMEs, MSMEs, who perhaps don't have access to credit. I love Uganda. I just heard recently about Numida securing some funding, and I heard about M-KOPA, HIP IPO. How do we say HIP IPO? I say HIP IPO, but maybe it's a different pronunciation. But HIP IPO, securing funding. And a lot of their work is around enabling, for the unbanked, for the gender gap affected women. Those are really noble causes. And if we can somehow provide the technical platforms to deliver those gaps, we are doing our job in terms of ESG. So in MasterCard, I'm proud to mention this because, our bonuses are linked with ESG. So if I don't deliver on my ESG goals, say bye-bye to that bonus, That's how simple it has become. And I would recommend that whenever we're looking at performance management and people, we think of that. Yeah, it's good to embed it into the system. Regulatory landscape, we've already talked a little bit about it, but I think interoperability, cybersecurity, test and learn, sandbox licensing, all of that is the focus areas these days, and we need to really appreciate them, use them. Please don't think that, oh, a regulator means that probably I'll be asked 100 questions and nothing will move. No, things happen, and things happen sometimes faster than you think. So kindly use this platform. FitSPA is another platform. There are a number of platforms in Uganda which I think we all should utilize to create opinions about things that we're unsure of. The more we discuss, the more we are open to discuss, the better it is for us. Okay. So, Metcalfe law. How many of you know the Metcalfe law? It's university days stuff, so who remembers that? But anyways, so Metcalfe law is that 70% of any flow will fall in to the top platforms that enable the processing of it. And these would be the big names, right? The aggregators, the marketplaces, the Amazons of the world. The top 70% of all the e-commerce volume, let's say, will fall through those 5 or 6 platforms. Now, why is that the case? Because they provide a seamless service. It has very little friction involved in them. And obviously, they've made a name for themselves over the years. And their service levels are as per the customer's expectations, right? So in East Africa, I already see those platforms coming up. So these super apps that are the talk of the town, they enable ease for you in terms of accessing information, doing transactions, whatever use case you're looking for, it solves for them, whether it's hailing a ride or paying your utility bill. These super apps are becoming instinctive for our next generation because they think, hey, I want to get by easy, I don't want to face any friction, let me just go on to that super app. So that's something to look out for. In-store check-ins and checkouts. So I recently tried a payment with a ring on my finger, and it's such a nice feeling. You go to a shop, you do your transaction, and then you pay with your finger, and you're out. Tap on phone. It's like, yeah, you got your phone, even if you don't wear a ring, on your finger, and you go and you tap the phone at the checkout place, and you just walk out. Now biometric-based payments have started in the US where you can actually just go and look into the camera and your payment is done. They all come with their own security challenges and so on, but this is already happening and it's coming, whether we like it or not. Seamless experiences. Open banking is a difficult cookie to cut, especially if your data structures are not evolved enough. And the data controls are not strong enough. And it's always difficult to say, hey, I'm going to share my information with my competitor. No. Is third party that I'm going to submit my data to, my customer's data, are they going to take care of that? Are there enough guardrails around it to keep it secure? And yes, these are real challenges. But in a lot of the markets where open banking has somewhat succeeded in terms of especially the credit space, that there is an infrastructure and there is a use case. I would love that if I go to a particular fintech, that fintech would have some of the information regarding, not me personally, my private information is my private, but they have my profile based on, okay, where am I coming from, what do I do, what kind of facilities I already have, and then take a decision on me and underwrite me instantly. Right? So open banking has its use cases and it's coming up. So on sustainability, I'll just jump over to the next slide and I want to share with you, this is not Standard Chartered here, it's a Standard Chartered in Singapore. And there is an API called the Carbon Calculator app. We dropped it into East Africa 3 months ago. So we have that available now. What's the purpose? So if my son says, hey, I only want to bank with a bank where I can see what is my CO2 footprint, right? So based on my usage, how much CO2 emissions am I causing? This app enables, or this API enables you to track that. It will enable you to say, okay, instead of taking your cycle, you're going on a car, or you're taking a train, or you're using your funds for, I don't know, something that leads to higher CO2 emissions. By the end of the month, the API in your mobile banking app will show, I need to offset this by planting 6 trees at $2 each, or $1 each, whatever is the cost. So what does that do? In that moment, you've done your value check in terms of your sustainability value and goal, and you say, okay, I'm going to offset this by paying right now, so I'm in my app, I'm going to make a payment towards my favorite charity or favorite organization which actually does the plantation, and I'm feeling good about this, right? So this is another one that I would recommend you explore. It's real time and it's backed by a Nordic company called Deconomy, and we'd love to share more details with anybody who's interested. Okay. Technology is giving up on me a bit. Okay. All right. So multi-rails. In order for a fintech to be successful, and today we're discussing around the changing trends and fintech's innovations, I think when you're looking at partners like us, or for that matter, any other partner, you should look at, is there a diversity or diversification in terms of the rails that that partner offers, right? If somebody comes to you and says, well, I've just got the mobile money rail, well, that's pretty much it. Well, okay, that serves for one particular use case, but then what about, I want access to e-commerce, I want access to ACH or bank accounts, I want to enable blockchain, private label wallets. Well, what we are doing at MasterCard is we're trying to diversify that so that depending on whatever use case you're trying to solve for, we have those plug and play options available for you. It enables certain experiences for the customer. For example, click to pay. Today, if you go on Amazon and you want to order something, or for your local website here, you want to order something, what happens? You have to put in your card number, you have to put in a little bit about your information, about who you are, where you live, all of that good stuff. Well, is it really necessary? Could we not just use a directory service where no matter which website you go to, the directory just pulls in most of the non-authentication based information already? And then what you do is simply put in the OTP to feel safe. Right? So that click-to-pay optionality is live in East Africa with us. Would love to share that as well. But it's just thinking through certain friction points, pain points, things that take time, and removing them one by one. So I think that makes a big difference. So secondly, QR is something that Michael spoke about in terms of the agenda today, and you're scanning your QRs. My business card is on QR, which took a little bit of time for me to get used to. But QR payments is critical for MSMEs. So if you're a fintech or you're a financial institution who is looking for supporting MSMEs, QR is one that you must look into, just because it's very light in terms of lift and shift. It's simply, there's no POS terminals involved, there's no phones involved in terms of the holding of the QR, it can just be a sticker. And that QR comes at a fraction of the cost of the conventional acceptance methods that we're used to today. Tap on phone is another one, which is really good, because everybody has a phone, so why not use that as a point of acceptance, right? Maybe I was just plugging it wrong. Okay, Uganda is definitely more than ripe for innovative acceleration. You have got a flourishing ICT unit. You have 160 fintechs in Uganda. FITSPA, a big shout out to FITSPA. If FITSPA is in the house, a big round of applause for them for the great work they're doing. And mobile money penetration is growing. I think, Sarah, thank you very much for giving us the latest insight on the number of bank accounts that you've grown. I mean, that's tremendous as well. It doesn't grow that fast. You know, I've seen some of the other markets, so the bankers are really doing a great job. But then, what are those pivots that we are missing today that we need to look at? So let me give you an example. Policy making. A lot of us might be thinking that I have to make a policy with some seasoned, experienced professionals, some government officials. I'll sit down, I'll make a policy, and that policy hopefully will be reasonably well baked and it'll work. In real life, the policy is only tested with the successes that it brings after the policy has been implemented. Did it open doors or did it close doors? Did it bring foreign direct and tech investment into Uganda, or did it leave something at the door? So I was sitting with the US ambassador for Kenya a couple of months ago, and she was solving for a problem. She wanted one of these vaccine companies to set up a $500 million plant in Kenya. Okay, Moderna. Moderna was the name. Now, what was the issue? Issue was that there's an equity rule. In order for you to set up a company in Kenya, you need to put in, the 50% of the ownership has to be with the local Kenyan. The taxes that are allocated to a tech company are, let's say, was slightly higher. So what happened? In that room, there were policymakers, there was Moderna itself, there was obviously the government representative and the US Embassy covering the interests of Moderna. And they agreed that for that particular vertical, which is healthcare, they don't necessarily need to follow the same route. And so a tweak was made. 2 days later, an announcement was made by President Ruto, His Excellency, in Kenya, and Moderna signed the contract, and $500 million of investment came through. To me, that was a live example of how that's, you know, there's policy, yes, there are rules, we keep the rules, we respect them, and they're absolutely serving a purpose. But when it comes to actually, you know, making that policy work for you, that's only when you have these successes that are being tested in real time with that policy. And we need to be nimble enough to see where that policy's original intent still safeguards and where, you know, it makes sense. Let's go ahead with a slight deviation if it's needed. So I think in the banking industry, for example, we have a lot of tick boxes, right? We have checklists, we have all of this great stuff. I would recommend that from a banking community perspective, and I've been a banker most of my life, it's important that our teams, our colleagues, the front lines, are told about the purpose behind that tick box. What was the intent of that tick box? They need to pass intel back up to the chain to the decision makers in the bank that, yes, there was a purpose, but for certain use cases, that purpose, it's not fulfilling what it was meant to do. In fact, it's creating inefficiency, customers are not happy. A gentleman sitting next to me in the flight last night told me he had to go for 3 weeks to just change his mobile phone on the system in a bank. 3 weeks to change one mobile phone. 3 branches. Went to one branch, that system didn't apply there, went to another one, so on. So what I think, and that's a customer, plain customer, right? So if you think about it, these are all things that probably you know. There needs to be intelligent decision-making that's distributed within your organization so that it feeds you back with the customer experience, either being at par, meeting or exceeding customer expectation, or just not doing the job. And for you to relook at that and say, okay, I think we need to, instead of looking at this policy renewal as per the SLA, I have to look at it after 2 years. No, I think I need to look at it right now. Yeah? So this is the kind of dynamism that any industry, it's not just the banking industry, it's any industry. It could be a fintech, it could be a government, it could be anything. I mean, but we need to apply that lens. The world is moving a bit faster. Our customers' expectations are moving a lot faster. I think I might be eating out too much of the time, but I'll just spend one more minute on securitization. And I think we have a very big session. I think Diana is in the house. I saw Diana somewhere. Oh, she's come, okay. So we'll have a great session tomorrow. Please do keep a lookout for that. Deputy Governor, thank you very much for sharing your insights. But I think there's full focus. There's a 5 vertical decision that has been taken that we're going to drive the cybersecurity agenda in Uganda. I'm really looking forward to how that progresses because it's the need of the hour. Now, NuData is a company we've just bought in US, and it's a very cool thing. So you hold your phone, right? You do your transactions on your phone. Now, what this does is it creates a transaction scoring, NuData. It simply enables you, the way you hold your phone normally versus when you're doing that particular transaction, triggers a score. The place you do that transaction normally, where you're doing it right now, it triggers a score. And this is happening in real time. So please do look out for those assets that come through, because if phone is the real form factor, then we need also cybersecurity frameworks around the form factor of the phone. Yeah? But lots more on that. Okay. For fintechs, we talked about Shazam and all the great work that a fintech has to do. It's not easy. VCs and people questioning how you're bringing the product to the market. Will it sell, not sell? You got your segmentation right. Okay, fine. You were able to design it. You were able to design the product, but how will you plan to actually launch it? What's your digital acquisition strategy? How will you get to the growth phase? How will you optimize your portfolios? These are all things that a fintech has to think about and go through. So we have a simple platform or approach to this. We have a Start Path program. Any new fintech, we'd love to welcome you there. We have up till now worked with 200 plus fintechs, VC capital securitization of $1.5 billion globally that it has reached. We connect you to the right partners. We enable you to think through your product launch. We have a wonderful asset seamless. So when we're designing our acquisition to make your onboarding even more seamless or better. Let me go back to grow. Okay, we heard about machine learning, AI. So at MasterCard, we have 70 years of transaction behavior changing patterns. They are all patterns. And that really enriches us, because when we're talking to you as a fintech or an FI, we can tell you that a person whose cycle is starting with you in a particular product, how do you build on that cycle, but then how do you diversify that customer's needs or meet their needs by diversifying into your other solutions over time? So that data is rich, and that can enable you to optimize the portfolios that you have really worked hard to build. Because customers need constant engagement. You leave a customer too long with one product, somebody better will come along the way and say, hey, I can do multiple things for you in addition to this product. Why don't you move over? Right? So I think that's something that we need to be thinking of in terms of segmentation, machine learning, artificial intelligence to a great extent. Why do the heavy lifting if you can do majority of your lifting through AI? Emotive experiences, on the other hand, is different, right? The human touch is still critical. It's very critical. A lot of us might be doing our business because the other person who's serving us is making us feel good, making us feel special. The service is top notch. So I think that's something that we have to make sure we balance. All right, last but not least, I mentioned already about 200 plus startups that MasterCard has kind of worked with, 1.5 billion of VC capitalization already done. Digital NFC solutions are the thing. So if you've got a solution you're coming out with, might as well layer a digital NFC on top of that. Yeah, it's a basic expectation from our customers and the new generation. Our APIs are available. We see a 400% improvement in terms of usage of your banking platforms if you plug in some of the APIs that are relevant to your customer expectations. So we're entering into a great new era. Uganda is ripe for it. We just need to make sure that we are nimble, flexible, open to new ideas, Sandboxing, testing, and learning, those are critical, but nothing can replace the power of collaboration with like-minded parties. Nothing. And what I see today in this audience is hope. I see hope, and I see the active engagement, and I'm really, really optimistic that every year that we hold the UBA, there will be new models. Even this time, I came here a year back, didn't know about some of the fintechs that have sprung up and done so well. And I think we need to keep supporting the fintechs. So a big shout out to the fintechs, those bold and brave hearts who are trying to solve for real pain points in Uganda. A big round of applause to all the fintechs, and we hope to see that work that you're doing as fintechs solves the pain points for Uganda and the people of Uganda. So I really appreciate your time and your attention. Thank you very much, and congratulations again for your commitment to join UBA. These 2 days hopefully will be life-changing, and we'll see you on the sidelines. Thank you very much.
Ali, I have a question for you. Does MasterCard offer a certificate of attendance? Because this has just been a master class, and I think all these people here need to qualify for that certificate. Done. Okay. So guys, by the powers entrusted to me, I confer upon you a certificate of attendance. Let's continue. Can we give him another round of applause? Because I think this has shown us where we have been, where we've come from, and the trajectory in terms of where we're heading to. I had a friend of mine who, did I say friend of mine? My wife, she's also my friend. She got notification from Google that her flight had been rescheduled. And she said, they have hacked my email. I said, why? How did they know? I said, well, that's
digital transactions and give people more choice and flexibility. And multiple payment options make new choices possible. Where fraud and security concerns are reduced and every transaction can be trusted. Where we leverage our technology leadership to develop digital-first, data-driven innovations and enable new networks beyond payments. And where people everywhere connect to the priceless possibilities in life. At MasterCard, we're creating this world right now. And we're creating this world not for a few, but for all. Because our focus, as always, is on improving people's lives, on working side by side with our partners to deliver game-changing capabilities, and on building one of the world's most admired brands. At MasterCard, we are focused on a world beyond and on all the people who live there, because that's a world that's truly priceless.
Thank you. Now, from a housekeeping perspective, we are way into our program, and so gone into significantly into our next session. So we are going to bring the tea here, and the health break will be that you walk to the tea and come back to your table when the tea gets here. But if your sugar level is significantly low, even a much better health break is for you to walk up the stair, have your tea, bring it back here. So we're going into the next session, and I hope that is permitted. I am permitted? Well, so we're going into the next session. Allow me invite my good friend Peter Kaumi to come, and he will be moderating this session, and he will introduce his panel. Peter, you'll have about an hour, and I know you'll do it, and then the next session will come in right after you. So welcome with me Peter Kaumi, who is the country manager for InterSwitch. Peter.
Good morning, ladies and gentlemen. Good morning. Okay, this is the time of the conference where we check who's been paying attention. Okay? Okay? So we're going to have a breakout session. We'll have the bank CEOs and EDs. We'll have the regulators. Dr. Twine, relax, don't worry, you'll be okay. And we'll also have the fintechs. By show of hand, who do you think would win that quiz? What do you think? We're talking technology, we're talking collaboration, and I must congratulate UBA for really leading this collaboration talk, and the rest of the UBA for inviting us to this conversation. Thank you very much. And thank you very much for inviting me to motivate. Richard, if you could just take the other one. Thank you. Okay, a very good morning to all of you. So we'll start with, first of all, just a brief introduction from each one of you. And, you know, what's on your mind? We've had very eloquent speakers this morning. What is on your mind as you heard them speak? What are the key things and the key takeaways that you may have heard? Noah, we'll start with you.
Oh. Hello. Okay. Thank you for the opportunity to be here. Noah Balesanvu is my name. My background actually is in cybersecurity. I've been in the space for the last 20 years. And so, segueing right into my reflections, I agree with you in terms of celebrating how the financial sector has embraced technology. When I started off in cybersecurity, I was the lone voice. It's hard to believe that I walked into banks and they didn't know what I was talking about when I was telling them about cybersecurity and how money is going to be managed by computers and they need to be thinking about their security. But it's such a transition that now it is the driver of a Bankers Association conference. And so there's been a leap, and technology is going to continue playing a critical role, especially now, as the previous speakers have mentioned, the advent of the fourth industrial revolution. Unlike other industrial revolutions, this one is not only questioning the way money is moving. This industrial revolution is questioning money itself. How do we transfer value? And the very definition of money is now is under question. And I'll leave it at that because it can be a debate for a long time. But then that shows you that not only has society changed, but the way we interact with technology has changed. So it's great to hear that these conversations are now center stage, and that the regulators, the innovators, the mainstream players like MasterCard, who have been in this space for a while, are now starting to sing the same tune. Now it's how do we capture what is left of
use of Shazam as an example, and to see what Shazam cultural perspective, which we haven't talked about, and just using the data that we have. So there's a lot of opportunities out there. And I was just looking at my notes. I like the DAO, which was something that was a good reminder. And then Web 1, Web 2, Web 3, and the power of all of that. And I'm sure we've all experienced it. You talk something, and then the next thing there's an email about what you've experienced. So looking forward to sharing all of this, and especially looking at the financial services. I think it's interesting times. The key thing is the kind of partnerships we have, and it's going to be partnerships from a regulator, from the fintechs, and the banks. This is something that I've always encouraged. Looking forward to a big discussion. Thank you.
Thank you, Herbert. Josephine?
Thank you, Peter. My name is Josephine. I'm currently the chairperson of FITSPA, the FinTech Association. My background is in technology, and I've morphed into FinTech quite recently. But as I sit here as a representative of the FinTech Association, I think I'm very excited that we are on the table, we are talking. I think as an association that was formed 5 years ago with pillars which looked at collaboration, innovation, community, and also opportunity, it is so exciting that we are talking about all those things here. This is exactly what we want as a FinTech Association, to be able to collaborate with our partners, to work with banks, to address the issues that are pain points, to address pain points, to make sure that we're connecting securely. So these are all very exciting, and I think all the speakers talked and touched on those subjects, and this is really, really right up our game. So thank you very much.
Thank you, Josephine. Richard, initial thoughts, please.
Yeah, thank you very much, Peter, and a very good morning to all our delegates, the Deputy Governor, the CEO of Uganda Bankers Association, the chairperson. Really happy to be here and all protocol observed. Richard Diego is the name, the CEO of MTN Mobile Money. We have been in business for about 2 years, give or take, from the time we're incorporated, following the National Payment Systems Act, rollout that we've had in place. But really great discussions that we've had this morning. Really the key takeaways for me, really starting from the Deputy Governor, he spoke about people needing banking services and not banks. I think that's a good wake-up call for all of us to say we can access these services not physically at the bank branch, but wherever we are. The other one for me, again, was from the Minister of ICT, which is really to harness technology to see to it that then we drive economic development of the country at large. From the keynote address, the key takeaway for me was really, solving for the pain point. I think that is the purpose for which we should all be, toiling on a daily basis to see to it that we solve for the pain point of the consumer. The consumer does not care about the process, but they want to see the service working for them. Of course, that speaks to, collaboration, and the example that he gave about Kenya, how, that $500 million US investment happened in a very short time, I think speaks to the power of collaboration right from the regulator. The Deputy Governor talked about the regulatory sandbox, which we really can take advantage of to be able to harness the fast-growing needs of the consumers to be able to deliver, the solutions that matter to them. The other element was in terms of, the technology that has been continuously evolving, artificial intelligence, machine learning. I think all these are available for us to be able to work closely, as different partners from the banking industry, the regulators, the policymakers, to see to it that we roll out services as fast as possible to the consumers, because we do not have a lot of time, in our disposal. So very important messages for us really to be able to harness technology. But key takeaway for me is the collaboration. We can't do it in silos. We'll work together, and that's when we should be able to get to where we want to be in the shortest time possible.
Okay.
Thank you.
Thank you very much, Richard. As it so happens, it just dawned on me that, save for Noah, you have a panel full of ex-bankers. And a current banker, of course. So, Sarah, you've also done a great job of training people in the entire industry, not in just in the banking fraternity. Herbert, since we're at a banking conference, we'll start with you. I was counting, right? The word disruption was mentioned 17 times this morning so far. So the question is, are you feeling disrupted? And if so, what are these trends, innovations that we're seeing? I mean, I know that ABSA is working not just in Uganda, so what are the trends and innovations you're seeing in Uganda and across the continent that you believe will drive the industry forward?
No, thank you very much. That's a very, very good question, and I'm very glad to share. There is actually lots of trends that are driving the industry. I think one big one is the mobile banking and mobile money as well, and that we've seen is happening everywhere. I mean, the previous speaker referred to us using our phones to be able to do everything, and specifically at ABSA, we've taken that a step further. We're using QR, quick response codes. I mean, someone said you can, would you be comfortable leaving your wallet at home? If you bank with ABSA, you actually just need your phone. QR code will get you money from any ATM. You'll actually be able to pay and do much more. So that is one of the big trends we are seeing across. The other is agent banking. We're seeing a lot of use of agent banking, and this is bringing the services closer to people and making it easy to transact. And even the platforms, the shared platforms, and the ability to do that is becoming very, very key. And then we can't run away from the partnerships with fintechs. And you, even as a bank, and all the banks are running FitSPA. I've seen FitSPA grow. Thank you very much. So that part one. I think the other thing as well in that space is a real focus on data privacy and cybersecurity. Those have become very, very important. When Noah was speaking earlier about cybersecurity, we've been speaking over years. And I remember at one time, cybersecurity was one of those that was an afterthought. But today it's different. To think the conference has got a day for cybersecurity just tells us how important this is going to be for us. Of course, I wouldn't forget sustainability that we've talked about and the real focus for that, a lot of initiatives and the importance about that, especially with our environment. So that becomes very key. And that's something very key even at ABSA. That's one of our big pillars, and we want a good environment. So sustainability is very, very big. Of course, there is lots of investment that is being done on digital transformation, and there's investment in different ways. Of course, in the technology, and that is very, very key. So at ABSA, one of our big pillars is technology. So that investment focus in technology. So not only the money, but like we've said, the skilling up and just being aware and agile, just the methodologies we are using to deliver value. I think at the top of my mind, those are the ones I would start with, but all of these are really just driving the change that we are seeing in the sector now. Thank you.
Thank you. So are you feeling disrupted?
Well, I would say we are actually part of the disruption.
Okay, great answer. So Richard, this morning we've had very many terms used, right? We've had, big data analytics, machine learning, decentralized infrastructure, AI. I mean, every time I open my Twitter, my X feed, I see a new version of something being rolled out. So my question to you is this: how are you, as MTN Momo, keeping up with all of this? Are you keeping up at all? And how do you see all of these changes and innovations changing the face of financial services in Uganda and across the continent? Thank you.
Thank you, Peter. That's a broad one. But I will just speak to really, it is coming from the perspective of the consumer's demand. The consumer's demands are evolving every day. We are talking about the Gen Zs. I think the biggest, demands that we see coming through are demands from the Gen Zs. We're talking about, the population that was born after 1997. That's quite, an active population. When you look at the African, in the African context, the average age is 19.6. That's the median age. That speaks to you in terms of which customers we are serving. We are serving customers that are continuously demanding for more. They will not sit comfortable with the traditional, channels of delivering services, and that means, looking at their, their behavior patterns. At MTN, for example, usually when the children get holidays is when we see a huge spike on data usage. What does that say? It means that these students who have come back home then do have, they interact with their gadgets. So that speaks to the phone, the smartphone, utilization. which currently stands at about 35%, 35 to 36% of the total consumer base that we have of 18.1 million. That shows you that there is still a huge opportunity in, making use of that behavior pattern that we see. We have what we call the social network analysis that we do at MTN that really gives us, insights in terms of what kind of products do we need to design for the various segments of customers that we have. We also realize that products need to be designed for different, categories of consumers. We have consumers that may not necessarily be as excited, with using the app. Number one, because the access to the smartphone is quite low, and therefore we also have to design USSD, solutions that can easily be accessed to the consumer. So for us, in terms of, for example, the artificial intelligence, machine learning, we're able to mine a lot of data. We have a separate, division that actually handles data analytics, and the business intelligence to be able to, give us insights in terms of what kind of loan products do we have to design for what segment of consumers. Today we have various loan products, More Cash, which is your term loan that we do, we provide in collaboration with NCBA. We have the Momo Advance. Momo Advance is an an overdraft facility that a certain segment of consumers would actually be excited to use. We do also have MoCenter, which we deliver in partnership with Jumo. We are soon rolling out new other products, again for the consumers, because we do understand these consumers have different demands in terms of what they actually need. What need are we solving? Because the needs are not standardized, Peter. Agents have their own needs, merchants do have their own needs, and therefore this advanced analytics of information that we do really gives us insights not to shoot blindly, but to develop what is relevant for the consumer that is in the rural area, the consumer that is very urban, the urban consumers, and also depending on the age group. So it's very crucial. We have women groups, we have VSLAs, we do have SACCOs. So all these sets of information and data that we mine does give us very good insights in terms of what kind of solution to design for what segment of the population. So it's very crucial. I think I'll give a quick example, Peter, if time allows. When you look at our recent FMCG digital suite, that is a solution that was informed by the data that we do mine to see to it that, specifically the FMCG sector does have a need that needs to be solved, the SMEs. What is it that they're battling with on a daily basis? What are the challenges? We then had to sit down and then, come up with, craft a solution that is end-to-end for them, right from the factory, which we recently launched with Uganda Breweries, down to the farmer, because all these participants in the ecosystem, it's important that we do understand their needs, what their challenges are, to ensure that the final consumer benefits at the end of the day, because in everything that we do, the consumer is the overall beneficiary that then feeds into our entire business chain. So really, and like I mentioned earlier, we can't do this alone. We have to work closely with other fintechs. Yeah, I'll just mention a few. And Subuco is doing a lot of work for us, partnering with us in terms of, serving the SACCO communities. We have aggregators in the chain. So the ecosystem is quite large. InterSwitch, you're one of them, and so many others. I can't mention all of them, but it's a partnership-led, service delivery that we do at MTN Momo, because like our vision goes, we are building the largest fintech platform, not just in Uganda, but across the continent. And that is what wakes us up early every morning, because in line with our belief, we believe everyone deserves the benefits of a modern, connected, but also financially inclusive, not just connecting the consumers to the smartphone, but also improving their livelihoods by providing financial services that are relevant to them.
Okay.
Peter, just to mention but a few. Thank you.
Okay. Thank you, Richard, and thank you for the kalango. I'll come to you now. During your introduction, you said you've been speaking to the sector about cybersecurity for more than 10 years, right? I know that you've also been speaking to us about blockchain and crypto and all of these emerging technologies. Last week, the Bank for International Settlements released a report that said 93% of central banks globally were at some point of understanding, adoption, exploration with central bank digital currencies. Is this a good thing globally? And do you know anything that's happening in relation to that here in Uganda?
Okay, thank you. I seem to have a knack of finding things too early, so I have that difficult task of trying to convince people that they're important. It started with cybersecurity back in 2003, and it was interesting, but time has proven me right in some cases. So again, another thing that we saw early was the fourth industrial revolution, bringing many technologies that Min mentioned, blockchain being one of them. But we can't talk about CBDCs, we can't talk about blockchain without talking about crypto, the topic that many people cringe about. But it was good to see some hands go up when they asked about people who have crypto wallets. Again, time will prove us right or wrong. But the thing here about CBDCs is that slowly financial institutions have realized the benefit of blockchain technology without having to go into too much technicalities about blockchain. Blockchain is just a new way in which data is structured that allows it to be more secure and more transparent at the same time. We have had this silent competition in IT. For you to have security, you must conceal information. And so the idea of having available information or open information while having high security was almost unheard of. And so when you have the advent of this new technology called blockchain that allows you to have both using advanced cryptography, it is revolutionary to say the least. And so this was ushered in a few years ago through Bitcoin, where financial transactions could happen autonomously. Ali talked about decentralized autonomous organizations, and Bitcoin Network is such an organization where the rules are written in the code and the system just operates. And it has been ticking like a human heart for the last 13 years without skipping a beat. Despite states, institutions, big organizations, most of the internet trying to bring it down, but has been resilient, and that proves as a testament to that technology. And so realizing the advantages of that, central banks have now gone back to the drawing board and say, hey, maybe it's not wise to throw the baby out with the bathwater. There could be some good things about blockchain, especially when it comes to the issuance of currency and being able to not only solve existing pain points. You just had the cost of running cash. I think you mentioned 2% of GDP, which is a lot of money to keep, to maintain something that we want to get rid of. Our central bank has a cashless policy, and we're all trying to move towards digital, but there's this animal called cash that is opaque, that is hard to track, expensive to maintain. And so in comes a technology that allows us to have digital cash. And I think that's why CBDCs are proving interesting, because it gives central banks and the existing financial institutions level of clarity into their economy that they have not had or ever. Because with a digital currency, you can account for every shilling that is in circulation, something that you need right now formulas to estimate. And so that's one thing, transparency that can be brought. Then just it's such a powerful tool to take to the last mile, because once you have a digital currency at the last mile, it drives inclusiveness really well, it lowers the costs of transactions because the infrastructure costs, of moving money around is expensive. And then also depending on how it is configured, because there are different ways of configuring CBDCs, it can prove as a very powerful tool for monetary policy. But then also when we talk about transparency and KYC, many of the CBDC is basically introducing programmable money. And so to paint that wild future idea, imagine if you could program your money to do exactly what you want it to do and not have to trust in the audit trail. Because right now we have two financial systems. We have the accounting trail and the audit trail. And the reason we have the whole audit profession is to make sure that the accounting is doing what it was supposed to do. But with blockchain, you bring these two together, and so you have the audit and the the accounting trail in one. So I don't need to come after the fact to check whether the thing that I wanted to have happened. It's proven that way. And so it opens up many opportunities. And so the banking sector, seeing that these opportunities can be harnessed, have started talking about CBDCs. And we have had various implementations. I think the most mature is the one in China, the Chinese CBDC. The latest statistics, which are a bit old, on 2001, they had about 146 million users on it, and they had an average transaction of about 14 billion US dollars. I think it was per day or per month. I'm not sure, I need to confirm that. And so it is working. And again, we stand to learn a lot from that, because this is China, the most cashless economy we have, almost the most cashless economy we have in the world. Yet they still saw a benefit of using a CBDC. Of course, there's all the political talk about whether they want to use it as an authoritarian tool, but that's out for debate. But there's no debate on whether the clarity and transparency they have into their economy. And so those are some of the drivers. But one of the key things that are also going to drive the adoption of CBDCs, because a CBDC, again, because it's programmable money, it merges KYC with the transaction. Because right now in finance, we have KYC as a separate thing. You do your KYC, then you can allow the customer to transact. So it's like two different things. That's why you have a scenario where one face has 150 accounts. Why? Because they're two separate entities done by two separate departments doing two separate things. As long as you're past KYC, you're good to go. Now, on this other side, you can transact all you want, but the KYC could have changed, could have evolved. And if this side is not notified, then that's where in that gap, fraud happens. But with digital currencies, they marry that. And again, you see that, again, in the crypto space, because, again, you're working with an autonomous organization. They KYC you, and every transaction is being KYC'd again, but it happens so quickly and so seamlessly, you don't even notice it. And so because, as he's mentioned, Gen Zs are now on demand. They require these services quickly. I don't have time to go to the bank. I don't have time to start sending you a passport scan of my pictures. If you just take information that's already available on me, I can 3D scan my face and I'm good to transact. And the company, one of the companies that I lead, Crypto Savannah, does that. We do digital KYC. And so you can fully onboard on a service without even having to go to with publicly available infrastructure that we have right now in Uganda. An API to your telco or to your regulator can confirm your phone number, they can confirm your national ID, and you're good to go. You can consume any service at even up to level 3 of KYC. And so that is happening now. We're extending that as well to cover even things like proof of address. You can claim to live wherever, but your water bill and your Yaka bill will not lie. So if you have national water integrated, you have other physical utilities integrated, you have a single KYC platform that can serve your full 360 KYC in real time. And we're offering these services to the likes of NSSF, UCC, and others. But just to bring back to the point that the digital currency allows us to benefit from having a unified KYC and transaction so that you're curbing fraud. AML is quicker and easier, and because you're not dealing with two separate entities. So those are some of the benefits that the central banks are looking to harness by implementing CBDCs. It's a bit early for us in Africa, but like I've mentioned, many other countries are moving very quickly. I was recently speaking to some people from the Digital Dollar Foundation, and there's very active, very active work happening to digitize the dollar by the US government and partners, not just them alone, but many of these commercial partners. Like they said, Apple Pay is already a financial, Michael Zano talked about how the technology companies are becoming fintechs, the fintech companies are becoming, the banks are becoming technology companies. So they are involved. So now imagine if Google, if Facebook, if Amazon all become part of the digital dollar project, you will not avoid a digital dollar. So we must as well be thinking about this either now or it will be forced on us. We have no choice, just like the internet. I don't think we were there dreaming of a technology that would keep us connected. It was brought onto us, we have to use it. But how do we go from being just good users to becoming innovators and value creators with these new technologies? And so that's the challenge that remains with us. Yeah.
Okay, thank you very much, Noah. It's all very exciting, yeah? And Michael, I note that there might be some questions from the audience, so I'll ask 2 or 3 more, and then if it's okay, what are some of the recommendations that FITSPA is giving to the fintechs to prepare them for collaboration with the banks? I mean, we've heard some of the speakers speak about cyber risk, about ability to properly contract, etc. What are some of the tips and some of the support that FITSPA is giving to the fintechs?
Thank you, Peter. I think as an association, we represent over 200 members. So, and in those memberships, we have large fintechs, we have startups, and we also have banks. So we are already working with banks, and that positioning is there. But in recommending fintechs, especially to work with banks, we look at key areas. The most important one is regulation. We expect that fintechs would be regulated if they are going to be working with banks. I think that is important. It's also compliance with their, making sure that their solutions comply with standards and with the regulatory issues. Fintechs are obviously innovating and they're working to address gaps in the market. They're working to address pain points. They're working to look at underserved communities. They're working in new services. So we encourage them to continue to do that because that then allows them to provide a value proposition to the banks. To say, listen, we can reach areas that you can't reach. We have solutions and sectors where you're not present. But it's important that they understand the needs of the banks. What are the issues that they're going to address? Are they addressing the reach and the underserved, or are they addressing operational optimizing operations? So it's important that that is done, and so that they can then demonstrate the value that they're bringing to the banks. Because there's no point having a solution that doesn't talk to the bank's pain points, that doesn't help extend the bank's reach in the market. We can't talk enough about security and data privacy. There have been a number of initiatives where we have called our members to collaborate in the area of security and data privacy. I think awareness, sharing stories, and partnering with all the stakeholders to make sure that we are addressing security and data privacy, given the sensitivity of financial information that is there. We're also looking at interoperability. If you're going to approach a bank, your solution needs to be able to talk to the bank systems and the bank's platforms. If they can't talk, then what is the point? So we're saying, look at APIs. MTN and Airtel have launched APIs. Collaborate with those MTNs and the Airtels who are providing APIs, and make sure that you're following standards, so that the interconnection is seamless and not going to be a challenge in adopting your solutions. Obviously, you want solutions which can scale. You want to be able to scale depending on the growth of customers, depending on the growth of transactions. I think what the central bank has done in terms of providing the regulatory sandbox has allowed the piloting of projects, allowed the piloting of solutions. That is important in when you're offering a solution. Pilot it first, test it for that it works, so that builds confidence in being able to have the solution adopted. So I think fintechs, it's about collaboration, but also about being transparent in your operations. No longer having briefcase type companies. You need to be transparent. You need to have good governance. You need to have comply with laws and regulations. Look, we're working to address, to walk the journey of our members towards regulation. We provided a lot of material. We hand walk our members through the journey to make sure that they get to regulation. We're not saying it is easy. We're saying it's something that needs to happen, but we're also supporting our members. Obviously, there's cost involved, but we need that support to make sure that our members get regulated so that they then can provide the solutions and talk to the banks as required. So looking at regulation, providing training and support, building relationships, and making sure that you're not just providing a solution. It's about strategic partnerships with the banks, but also being very flexible and agile and open to tailoring your solutions so that they address the needs of the banks, and also, if needed, if you needed, you can then change your business model. So that's generally what we're doing, but on top of that, support that we're providing is regulation, the journey to get regulated. Thank you.
And last I checked, 25 licensees under the NPS now?
Yes, I think so. But maybe, I think there are many people on that journey.
27
now? 27,
wow,
yeah,
okay.
yeah.
Congratulations to you and the FITSPA team. Herbert, it is clear that fintechs are here to stay, right? All the discussion we've had today is related to how collaboration is driving and supporting the future of financial services, right? As a bank, what are you looking for from fintechs to allow that collaboration to happen? But also, I know the ABSA story has been quite successful in terms of partnership with fintechs. So what advice might you also have for other banks that want to partner with fintechs?
Yeah, thank you very much for that question. What are we looking for? So I think the time has come when the banks appreciate the partnerships that is happening. And so what we'd be looking for would be partners to innovate with, to serve the customers. At the end of the day, just appreciating that we need to serve the customers. So who can we innovate with to serve the customers? And like has been mentioned, it's got to be controlled, it's got to be regulated, it's got to be secure, but also be able to serve the customer. So that is one of the real big things that we are looking for. And also collaborate. See, you partner, you collaborate, so you form a relationship that is not one of supplier and vendor, but one of partner. Because that way, we will actually be able to serve the customers well. And it's key. I mean, when you think about it, the banks have got something that makes them unique. The banks are trusted. And we also know that the fintechs come with that agility. So just putting the two together would definitely give us a lot of benefit and a lot of value in order to serve the customer, which becomes very, very key. And like you correctly stated, ABSA, that is very important, being able to use the technology to give us value for our customers. So I think that is really the biggest thing that we would be looking for from the customers. I think the message for everyone is there is the natural tendency to be afraid to start. I know the regulator has provided, we've got the sandbox where we can do some of those tests. But I think we just have to get in and do it. It is here, and it's something we've got to accept. It's going to make things better for us. It won't come without challenge, but I'm sure we won't know those challenges until we put our feet in and step and do it. Thank you.
Okay, thank you. I now welcome 2 or 3 questions from the audience for the panel. Pardon? Okay, there's someone at the back.
What's that?
All right, there's a question in the corner over there.
Thank you very much. Am I audible?
Yes.
Okay, that sounds like a Zoom question. My name is Ben Kinara. I am a consultant with the IFC and formerly InterSwitch, formerly DFCU Bank. The CBDC question intrigues me, and maybe I want to direct it at Noah, but anybody else. How will the CBDC, central bank digital currency, reach the last mile, the common man? Because you mentioned that it is key for financial inclusion. But at some point, especially when we're still a cash-based economy, the users will have to convert their CBDC to cash and back and forth. And I'm thinking Richard, with his 500,000 agents, will not be handing them off onto the bank in order to reach the people. So how do you envisage, and maybe you can't answer this right, but how do we envisage that happening? Thank you.
Okay, thank you, Ben. We have a question from Dr. Twinemanzi here at the front.
Thank you, Peter. Allow me to start by quoting Gordon Melvin, the former governor of the Central Bank of England, who once said that the central banker's job is like that of a party pooper. When the party is going on, their job is to take away the punch bowl. Noah, you talked about CBDCs, and I largely agree with some of the benefits. But I think it's better to help the discussion in this room if you highlight the key risks that come around CBDCs. Now, you are correct, you say it is programmable money, and that an individual can program it for what they want. But you also need to talk about the fact that those who issue the money, if they're central banks or governments, can also program that money for their own purposes. In other words, CBDCs are actually very attractive to potentially dictatorial states. Now there's the issue of privacy. So as you talk about CBDCs, I think it's very helpful for everyone in this room just to understand that whilst there are benefits, there are also risks. Thank you.
Thank you, Dr. Twinemanzi. Any other questions? There's another at the back.
Thank you very much, Peter. I'm Margaret Nagwovuma, lecturer, School of Computing, Makerere University. From the keynote speech, I noticed aspects of policy. In this regard, I don't know which panelist is going to respond to that, because one of the things is he noted that when it comes to policy success, it is about the results or benefits it yields after its implementation or operationalization. So if it is operationalized, you find that, for example, in the banking world, others or other institutions do not need to carry out similar studies. For example, it could be in terms of market intelligence, whether in telco or others. The question is, due to the dynamism in technology, what are some of the other factors that would help flourish a similar policy, maybe adapted from a different environment to environment, for example, in the market in Uganda? Thank you.
Okay, a great question, Margaret. Okay, we must take the question from the Deputy Governor.
Thank you, Peter. And my question is directed at Noah. This has got to do with the CBDCs. Noah, I like your analysis of the benefits of the CBDC and what have you. Now, me, I'm looking at it in terms of the applicability to some of the countries in the region. Take, for example, in Africa. Well, you did mention that it's been adopted in other countries, outside Africa. Now, in the case of Africa, we've seen Nigeria, we've seen Ghana try to move in there, but I think Ghana is having some problems with it. Kenya also was trying to make a move towards the CBDC, but their recent publication on it, there was a very interesting outcome there that, look, while the benefits exist, we don't think it's time yet for Kenya to move. Now, the most important thing here, what are the objectives of getting the CBDC? You talked about financial inclusion. And then there's the aspect of intermediation, how it's going to be intermediated. So my question to you, Noah, is why reinvent the wheel? If we are talking about objectives for financial inclusion, mobile money is already addressing that. And this goes to the first question you asked. How does it reach the last mile? Because for someone in the last mile to access a CBDC, I'm just trying to imagine what kind of investments these guys have got to make. So why can't we invest in a tool that we've already started, the mobile money platform, and try to see what are the benefits that a CBDC can deliver, and see how we can tweak even the mobile money to get in that. It may not be perfect, but it's already suitable. It's been well adopted by those are the last mile. So what can we do? What are we looking for in the CBDC that we cannot get from the mobile money? This is a question that is going on in the region, even at the Monetary Affairs Committee level of the EAC. Many central banks are asking that. I thank you, Peter.
Thank you very much, Deputy Governor. Margaret, I will allow the panelists to respond to your question, but just to note, the next panel is about regulation and actually has 4 regulators on the panel, but I will allow the panelists to respond. Noah, you're in a safe space, don't worry. Please respond, and of course all the others can respond as well.
Okay, thank you for the questions. Clearly there is a lot of interest on CBDCs, which is good, and this is a healthy space to have this conversation. I think the questions, maybe I'll start with this approach and hopefully it'll answer many of the questions. That when we talk about CBDCs, there are a number of ways in which many countries are looking into it. Again, I'm going to try and avoid technicalities, but there is what they call the wholesale CBDC and a retail CBDC. The implementation on a wholesale CBDC is where the central bank retains direct access to the CBDC itself, and then issues it to financial services institution, FSIs. And so basically, the central bank will just be responsible for what it gives the FSIs, then the FSIs then distribute it through their own means and through competition to the general public. Then there's what they call the retail CBDC. A retail CBDC is when the individual, the citizen, has an account with the central bank. Now that one is what, when people say CBDC, people automatically go towards that one as a retail. And on record, I'm not a proponent of that one. As much as I love the technology, I love the heart behind it, a retail CBDC is actually dangerous because it's, in my view, it's a financial atomic bomb. And speaking to the risks that Dr. Twine mentioned, in the wrong hands, it can be used as a very powerful tool that can be used actually to the detriment of the actual citizens. So I move for a more hybrid solution, which is a wholesale CBDC. which then answers the access question, because different financial institutions are serving different customers. There are those who will service the SME customers, there are those who want to go for the last mile, like the mobile monies, the Airtel monies, those ones want to go to the last mile. So they will be issued CBDCs or currency, and then they will then use their technology, use their platforms to then distribute it. And so they can access the last mile that way. Some of the ways in which that can be done, for example, is by enabling, feature phones, like the same way you can access Momo or Airtel Pay via your USSD codes, you could, in theory, access a CBDC that way. And so it then can be accessed by the last mile. But then again, that will then be going to a retail CBDC if you have to bypass Momo and Airtel Money, which in my view is a risk, because by the time the central bank issues to the last customer, then there are zero costs on transfer. Then that completely evaporates the business case for all the payment service providers. And then it's also risky in some senses. And so to speak on how the last mile can be done, that is the way in which some organizations, actually I'm quoting from a BIS paper and a World Bank IFC paper, where they actually recommend wholesale CBDCs, where the central bank continues with its relationship with the financial sector players, issues the digital currency to them, and then they issue it to their customers, as opposed to the Chinese model. Now, the Chinese model, for reasons beyond my knowledge, they have going to decide to go to the retail. Now, their CBDC is competing with WeChat and Alipay, and it's competing very, very aggressively. In just about a year of its implementation, they had around 146 million accounts on their wallets, and they're transacting up to $14 million per day, billion per day, which is, again, they have their reasons. But again, you can see that it's also having an effect on the financial players that are there. And so I don't know how that will play out, but it's the most mature. They're the ones who started it. They started their CBDC in 2014, actually. And then they rolled it out as a pilot in 2019. And so to answer the question of access, my recommendation or my advice is that a hybrid CBDC, and I'm sure that we've been engaging actually with the central bank for some time, and these are some of the things that we're putting on the table. The risks on privacy, definitely CBDCs have risks. I've just mentioned one. Yeah, by the time a CBDC goes to the last mile, then you're putting your entire financial, it gives you good control, but the only beneficiary there is the government and the citizen, if the government is, if they're in good terms, relationship-wise. Because the citizen can then have a digital payment that is near free and almost ubiquitous because it has the backing of a government. The government has 100% visibility into the entire economy, but that visibility comes at a cost. So because if you're in good terms with the government, then things are good. But if you're not, they can simply switch you off. And again, that's a control the state would want, but is it right for the state to have such control? That's not for people higher up than me to decide. But then that's one of the risks, privacy. Again, remember my analogy. Here you have the KYC and the financial instrument merged. So then your privacy will be breached if someone has 100% visibility, again, and the risks. So the privacy risks are real. And, but then the privacy risks, again, are seen as the biggest risk for CBDC if you're thinking about it as a retail. But if you're thinking about it as a wholesale, the people who are issued the digital currencies already have a strong relationship with the central bank, which is the financial institutions and maybe payment companies and the central bank. Then how they then distribute it is based on the relationship they have with their customers. And so the privacy issue is addressed there. I've had people say that also cybersecurity is a big risk. Cybersecurity has always been a risk, will always be a risk as long as you have digital systems talking to each other. Yeah, whether it's a CBDC or our current banking systems. CBDCs might introduce certain levels of security, but might open up other areas of vulnerability. So cybersecurity risk is standard all across, whether we go with digital currencies or not. And so that one still remains as a risk. When you talk about the objectives of a CBDC, again, like to reiterate, the primary drivers of of driving this is innovation. You know, long before vehicles came, we were happy with our horses. You didn't need to service them. You didn't need to, if you just give them food, they will transport you to where you go. But as life evolves, so does society. And as society evolves, so does the demands of society. We are currently serving and preparing to serve the Gen Zs. These are hyper-connected people. They want instant everything. They want their money to be instant. But the financial system, which by all our admissions, by having this conference this late in the evolution of technology, shows that the financial sector is still slow in responding to the need for speed. The need for speed has been the driver for the evolution of money. That's why we don't move around with gold bars. Because gold bars are heavy, they are slow, yet gold is still one of the highest things we hold in terms of esteem when it comes to storing value. When worst comes to worst, people will fall back to gold. But gold is not a good medium of exchange because it's not portable and it's not fast. Even the fastest transaction, and you know, I'm going to poke at MasterCard, but I'm sure they've done, these and mobile money, these are very good, efficient messaging systems. Money doesn't move when you receive that message. Money moves days later. And everyone is trying to get to the speed of cash. That's why the demand for digital currencies is there, because there is a demand for instantaneous settlement. I was reading one of the white papers, and actually this is an ambition of the digital dollar, is to replicate cash. So to have a peer-to-peer transaction that is fully settled without having financial institutions come in after the fact. So to answer your question on the premise, it's pure demand. Do we need 5G? No. Is there 5G coverage all over Uganda? No. That doesn't stop MTN from putting 5G masts, which each is a significant factor more expensive than the previous G. And it's still going to be. So the younger, more apt are the ones who push technology forward. But because I understand the position of a central bank, central banker, as Dr. Twine put it, those are the guys who spoil the party because they are designed to take care of the least common person. They are thinking of the whole state. And so maybe a conversation that we can have in a room like this is how do we draw a balance between the push for innovation but the need to bring everyone along? Because innovation is not going to wait for the slowest person. It's always going to move. But then there's a tendency for regulation to slow down so that you keep everyone ahead. But then we're having this conversation now when China had it in 2014. Okay? So there's always going to be that pressure to move quicker and to respond to new opportunities and innovations. So yeah, it's demand that pushes for digital currencies. And we are going to see it play out. But hopefully I've answered as many questions as I could.
Thank you very much. No, I allowed you enough time because many of the questions were clearly directed at you. Margaret, is she there? Okay, she's walked out, and with hopefully her permission, I'll allow her question to be addressed in the next panel. So just one last question, and it does relate to the next panel discussion we'll be having. So recently, we've seen some government policies that seem to be targeted at digital transformation. So a few years ago, we saw the mobile money tax. This year, we've seen the agent banking tax, etc. What message, and this goes to everyone here, what message might you have for government, policymakers, etc., regarding facilitation of what is clearly an important sector, technology, fintech, and supporting the growth of that? Richard, we'll start with you, and Noah will end with you. Thank you.
Okay, thank you, Peter. So for the 0.5% withdraw tax, that I think came in 2018, 5 years ago. Of course, this has generated quite a bit of revenue to the government, Of course, we do understand government needs to collect revenue, but at the same time, we are also trying to go cash light. So we looked at it, in a more opportunistic way of, how do we drive more cashless? And I think that is what has really driven, from the perspective of, mobile money, because this tax is really on the mobile money side. It's not on the side of the banks. So what we had to do quickly is to ensure that we set up infrastructure that then drives the cashless proposition, which is what you see today as MomoPay merchants. It's around the same time that we introduced MomoPay, which is then, a behavior. It's a channel that is driving a behavior change, because the fact is the market has been by and large cash-based, and therefore the message we're trying to drive is to say, how do you go cashless as much as possible? And that journey has been quite, a successful one for us, because just in the past 1 year alone, we have tripled the merchant network from 80,000 to 270,000. That really speaks to, giving that convenience to the consumer, because predominantly the consumer was interacting with an agent. But today we are saying the merchant is also available for the consumer to be able to avoid cashing out that money, because it is even a risk to carry cash around. So our message really, to the public has been, transact smartly, just use your phone, move anywhere, and you will be secure as long as you do not share your PIN. So, we did look at it in that perspective. Initially, yes, it looked to be a negative intervention, especially towards driving financial inclusion and the rest. But it also gave us a challenge to be able to roll out a new solution, which then has actually transformed the way consumers carry out their transactions on a day-to-day. And of course, that also gave us more perspective in terms of how do we develop new solutions that are going to support government programs. I'm talking about the parish development model. Again, we are saying the smarter way of doing it is digitize it. Do not have to line up for cash. Let this money come right to the parishes, and then from the parishes to the household. So for me, Peter, from the way we looked at it, we saw it also as an opportunity to think outside the box and be able to roll out solutions that really drive customers away from cash. But I will also look at another intervention, which we recently benefited from. That is the new spectrum. We received 140 megahertz of spectrum, and the impact that is created in just 2 weeks is much faster speeds. In the previous, about just a month ago, you'll agree with me that the internet speeds were quite slow because the highway was not as wide. Now, with support from the Uganda Communications Commission, of course, and government, we've been able to expand the highway. The traffic is now, we've eased the traffic. There's no more congestion, and that, speaks to, the impact with which, creating more connectivity enablers like Spectrum has really done, especially for the country. And of course, that also enables 5G launch, and then you can only imagine what 5G is going to do. We're moving from 40 Mbps to 1,200 Mbps, or 1.2 GB. Those are electric speeds. I would call it, you can only imagine what these faster speeds are going to do for, the different SMEs, the banks who process a lot of heavy data. So for me, yes, some of the interventions initially were detrimental, but then the opportunity that we quickly, get into implementation then drives more of the use cases for us.
Okay, thank you, Richard. And we look forward to those faster speeds. Josephine?
Thank you, Peter. I think it's good to see that, that some of the incentives that have enabled 5G to come on board, but I think ultimately the tax increase is eventually borne by the consumer. And I don't know if it's it's good to have a balance between revenue generation, but there also needs to be allowance for innovation to happen without a very high tax burden. We've seen that the impact of this tax increases is like an increase cost for fintech companies. It's an increase in cost for fintech companies, which means then the opportunities for investment are also reduced. Again, reduced access to financial services because the impact is really, the cost is really borne by the customer. How competitive are we also? We want to be a fintech destination. We want to be recognized in Uganda as a fintech destination, an economy that is fintech savvy, that can attract investment and is innovative. But we can't be if we're not competitive in terms of the taxes. If it drives away investors, it's not going to help us. So I think, without going too much detail, I think some of these tax, we need to work together. Again, it's about collaboration. Government talking to the fintech sector and the players, so that we mitigate some of these negative impacts of fiscal policies. I mean, yes, you could provide tax breaks, but before you even implement the taxes, can we talk, can we discuss and see how this is going to impact and how negatively it will impact the end consumer, the companies that are in the sector. But I think working together and collaborating will help us to ensure that we are contributing. Yes, we want to contribute to the development of the country, but we also want taxes which are not restrictive in innovation and for companies that are entering, for startups. So that would be my message. Thank you.
Thank you, Josephine. Herbert, speak for the banks.
No, thank you very much for that. Yeah, I think the key stakeholders, the regulators, are actually doing a couple of things in there to get us where we want. I mean, I would talk of a balanced regulatory framework. I would talk of fostering collaboration and innovation, which we are seeing the regulator is doing. Of course, investing in education and training. But just the realization we have is that we need to have thoughtful and informed, forward-looking policy decisions, especially looking at even the discussions we are having. There is growth. Everything is changing extremely fast, and I would say it's exponential growth. It just reminds me of someone I've taken interest in, Peter Diamandis, who is the co-founder of Singularity University. He talks about 6 Ds of exponential growth, and I really believe in them. He says you start with digitizing something, and at that point you're only converting it, and that's the first D. You're converting digital to analog. And then the second one is deception, because when you've done that converting and things are supposed to grow exponentially, you're multiplying 0.1, 0.2 by itself, but the moment you hit a complete number, you hit 1 times 1, 2 times 2, 4 times 4, then exponential growth happens. But before that number, there's that deception stage. So even as we adopt digital, we should expect that to happen. So that's why the thoughtful nature in which the stakeholders will need to look at this. Now, the next D he talks about is disruption, because after you hit the whole number, then you get disrupted because the rate of change is very fast. And as key stakeholders who are looking at supporting all these changes, I mean, we'll talk about the CBDs, we'll talk about just going digital, the increase that MTN has told us about. All of those would mean exponential growth. There will always be disruption. But then now we'll start getting the benefits, which takes us to the next D, which is demonetization. So here, new technology, you're taking the money out, the costs associated with traditional ways of doing things become lower. A big example in that we have seen is, look at digital photography. When the phone came and took over, digital cameras disappeared, and the cost of the camera is not worth anymore. Then after that, you go to dematerialization, and finally, democratization. Democratization gets to the point where it becomes widespread. We have seen examples of how fast digital goes. ChatGPT was 5 days. I mean, if we look at what happened with the previous one, it took a longer time. So just to the stakeholders, we appreciate, very key in terms of this journey. but just the partnerships and collaboration with the financial institutions, with the fintechs, further study and awareness of what is happening globally would really help us keep abreast with what is happening and be able to adopt the technologies. Thank you.
Thank you. Herbert, Noah, is your message we should just roll out CBDCs?
No. I think there is dialogue, or still more dialogue to be had. Being the crypto and digital currency proponent. But then again, it's important to have an educated regulator. Yes, that goes without saying, because either they'll not understand what's happening or they'll kill everything. And so walking that journey with them. And actually I want to applaud BOU. Right from the first time we started talking about blockchain, back in 2018, they were partners for the first Africa Blockchain Conference, the largest we have had in the continent. They were still partners with us in 2019. Despite our disagreements on many things, they're still available to talk and to move forward. And so I applaud them. Dr. Trina knows the number of arguments we have had. But also to applaud government for embracing new technologies, fourth industrial revolution. Dr. Trina and I sat on the national task force of the fourth industrial revolution, where His Excellency had tasked us to look at these new technologies and see how Uganda can take advantage of them. And it's good to see that they're already taking root. We're using AI, even at government level, many government institutions are using AI. A number of government institutions like UCC and many others are already using blockchain to secure their critical processes. And so that is already happening, and it's just from that dialogue and working together. Not at the pace that innovators like us would want, but then also understandably, we have a bigger considerations to put into place. And so that dialogue to continue and making sure that we're working together, but then also to always remember that the speed at which things are moving is much higher. The distance between the first industrial revolution and the second was a number of 100 years. Between the second and the third was less than a decade. It was 25 years between the second industrial revolution and the third. Now, between the third and the fourth is barely a decade, because we're just celebrating social media and all these things. Next thing we are hearing ChatGPT, blockchain, crypto, all these things are hitting us. So our response times are much, much narrower. And so we don't have the luxury of time to wait and see how things will pan out, then come up with the rules. So we also have to be mindful of those changes. But other than that, it's good. Right now we're having collaboration and conversations around a digital asset law that is going to go into Parliament for its first reading. And I believe that's a step in the right direction. It doesn't solve all our problems right now, but it's a step in the right direction to get digital currencies and digital assets as part of the fold in the financial institutions, so we can deal with them with confidence and start. Those are powerful tools to wipe out the bad actors. Bad actors exist because we allow them to. As we bicker here with the regulators, the bad actors are making all the money. But once we get speaking the same language, it becomes that much harder for the bad actors to operate. Yeah, so that's it.
Thank you, Noah. Ladies and gentlemen, I hope this panel has helped to drive the collaboration and trend discussion a little bit further. By way of thanks, please give a round of applause to the panelists, and we thank you very much for listening to us. Thank you.
A round of applause to Peter's masterclass. I think, first of all, to the panel, this was quite deep, and thank you to all of us, to the panelists who were able to dissect some of these concepts and bring them to us. I hope they did. Now, without wasting the next few minutes, I know some of us have been seated for the last 2 hours, and I'm going to request that please stand. Let's stand up, stretch a bit. There are those of us who haven't really moved and have been here glued on your laptops or devices, so stretch a bit. A high five to your neighbor, high five. Yeah, high five to your neighbor. And just check that they are still alive. Eh? Just check that they are still alive. Okay. Allow me now invite the next moderator, who is my brother, Maurice Mujisha, to come and take it on for the next 45 minutes. If you feel hungry, grab a cup of tea or coffee, and then we will take it on from there. And I want to thank all of you for keeping alive and alert. Enjoy the next session. Maurice, over to you.
All right. I see you didn't tell them to take their seats. So my session is a standing session, Michael? All right, please take your seats. I thought it was a standing session. Okay. Two things. I have been told, and thanks to Noah, that UBA is thinking of paying all the facilitators using cryptocurrency. And unfortunately, Michael then said he pays school fees in Uganda shillings. So he will still need to find a way of converting that. Ladies and gentlemen, we'll do this very quickly. Our topic, digitization and the regulatory challenges. I want to invite our panelists very quickly. Again, their profiles are in the booklet. You can scan the QR code. They have very rich profiles, and I'm glad we are not doing the profiles. I would have spent 10 minutes running through everyone's profile. So I'll begin, of course, with the regulators. I'll start with the Executive Director of Supervision of the Bank of Uganda, Dr. Twinemanzi Tumubwene. A round of applause, ladies and gentlemen. And my regulator, the Director of Industry Affairs and Content Development at the Uganda Communications Commission, Ms. Julianne Mwehire. Please come. And from the banking world, the CEO, Standard Chartered Bank, Sanjay Rohani. Please come. Another round of applause, ladies and gentlemen. Jules, you can take the middle seat. Feel free. So we will then sit around you. So, two things. I will note that Sanjay will be careful because his regulator is on the panel. And I'll also be very careful because my regulator is on the panel. And so it's going to be quite a conversation. We did receive apologies from NITA and NIRA. Again, these are key players in this conversation. Because, when you work for organizations like ours, like mine and Jules, you're on standby for any phone call. So they were asked to join Cabinet today to present a paper on data protection, which is another conversation we're having today. And so Sanjay was kind enough to join, not as a regulator, but as a player in the sector. So I wanted to open this up and request that, and maybe can I also prepare McKay? I'll prepare you because there's the question around the national switch, the establishment of a national switch. I don't know if you're willing to come in at that level. I'll come to you. Is that okay? Excellent. So Manzi, you're saved, Doctor. Because I'm told the bank is very inclusive, so everyone has a key role they're playing on that. So let's begin with the pace of digital transformation. Dr. Manzi, as a regulator, what do you have to say about this pace at which technology, and the panel that's just left was speaking to that, the pace of technology and how this is either facilitating or creating challenges for the sector?
Thank you, Maurice. My understanding of digital transformation is that it's the one major consequence is that it's changing the way banking is being done. Okay? But as a consequence, it's also changing the nature of the risks inherent to banking. Invariably, it also changes the way we regulate banking. So digital transformation has an impact, one, on how banks conduct their business, the nature of banking itself, and even we as regulators, what it means, what we're supposed to do as we regulate the banking sector. Now, yes, there are certainly positives to this, but like I said earlier on in my earlier comment I made, I like to keep on referring to the words of Gordon Melvin, the former governor of the Bank of England, we tend to focus, as a central bank, our focus is on the risks. As the technology evolves and the risks evolve, our understanding only improves for the risks that have already either materialized or about to materialize. The newer risks, we find ourselves playing catch up. So I think our role as regulators then is, we don't want to be the kind of regulator that stops innovation, which is what digital transformation brings, but we want to be too far behind. So we try to maintain and keep ourselves within the shadow of the digital transformation process. We can't go ahead of it. We don't want to stand side by side, but we just want to be right behind the various developments. And I think in the earlier panel session, or at least I think it was a gentleman from MasterCard who made reference to the sandbox. That's one of the reasons why we have the regulatory sandbox. So that in a kind of controlled environment, before the banks introduce some of these digital products, we have the opportunity, from our limited knowledge, to understand, identify, understand, and look at the risks that all these new products and digital transformation is bringing, test the efficacy and the effectiveness of the risk mitigation measures the banks are putting in place, and then, of course, ask the fundamental question in terms of how do you manage the residual risk that comes with digital transformation.
All right. I'll come to the other regulator who's regulating some of the players, and I saw MTN here on the platform before. You regulate the telecos, and speaking to also one of your critical areas, content development. When you look at the transformation in the digital space, how does that play within your regulatory framework?
Thank you, Maurice, and good to be here. I think what we've seen right today, and we've seen over the last years, is that I think it's a fantastic time to be alive, for sure. A lot of us who have witnessed, all the Gs, as they call them, and we're still here, functioning and seeing the effective transformation. I think particularly speaking about digital transformation, a few years ago, we were looking as a regulator at, communication regulation only in the space of, telecoms, in the sense. But what we have seen as regulators now, we have to think way wider, and how the implications of our regulations are directly impacting, other service spaces like the financial services. We have had to adapt our regulations to be able to ensure that anything that is born out of the communication infrastructure has got to be taken into consideration. And I think this is all speaking to the way all these services within the communication space are fully intertwined, not only in the financial side. We're talking about insurance, we're talking about anything that, that survives off the communication infrastructure. And I think regulation now speaks to that, and I think Dr. Twine has said it. We cannot be fast enough, even in terms of regulations. We have got to see what happens and test it, through our various sandbox mechanisms, and see if, in terms of regulation, we're even up to speed. And I think all the different mechanisms we have put in place are making sure that innovation is not stifled by regulation, but regulation tries to keep up fast enough, just for purposes of ensuring that customers are protected, and we're ensuring that there's sustainability in the sector. I think a lot of times regulation has been mistaken, to keep things within, certain context or space. But I think it's really more to ensure that there's a lot of protection and standardization, but not to stifle innovation, I think, as Doctor has said. And, digital transformation is such a major example of what regulation has been, and what regulation can be in the support of innovation. And I think that is why we're even talking about the Gs today, because we as a country, even as Uganda, we're moving almost at the same pace as all other countries in the globe, because we've allowed regulation to follow, all the different innovations that are happening today. Thank you.
Sanjay, as a banking institution, clearly one of those that's leading in this space, in the industry. How easy is it, first of all, for your institution to be able to catch up and be able to actually lead in this conversation, especially when you have this fast-moving industry?
Hi, I think for those who don't know me, Sanjay Rugani, CEO for Standard Chartered Bank in Uganda. Very interesting conversation we are having. And good words from the Uganda Communication Commission regulator saying this is the best time to be living. I also, as an individual, as a leader, and as a banker, actually think that we are living in the best times, because the world has never been as equal as it is now. You know, she said what technology is happening in maybe US, Singapore, India can happen here or is happening here. I think what is important is leadership. And I think it's really about digital leadership. Now, when it comes to staying apace or taking the lead, it comes with a whole host of, strategic mindset. For Standard Chartered Bank, we decided we are going to be leading in innovation and technology way early in 2000. I remember, Maurice, when we were trying to close our branches in 2012 to 2015, there was an outcry, including internally with our board, certainly regulators, clients, and today I think we are celebrating that first mover advantage. Now, what does digital transformation mean? I think from morning we've been talking about it has changed our lives, it has changed our relationships, it's changed our interaction. Dr. Twiney cannot stop talking about it brings a lot of risk. It does. There's compromise to everything, and you've got to regulate that. But for banking, it is bringing innovation, creativity, certainly partnerships, things that we could never co-create. Now there's so much to co-create. There's the whole issue of new information, alignment, knowledge, intelligence. Let's not forget, this is really about empowerment. In the morning, we heard the governor saying we are at 24/7. In the olden days, banking was, is it 10 to 4? But now it's 24/7. It's also about culture. We are actually fundamentally changing the culture of humanity. And I think this is another area of risk we need to continue to evaluate. And finally, mindset. And I do want to say something that probably Dr. Twiney should have said is governance, because he's really a great example, continues to talk about this. Digital, innovation, technology, disruption also needs the right kind of governance. So plenty happening, and I think for Standard Chartered, that's how we work.
All right. Let me come to Dr. Manzi. Let's talk to the issues around coordination, because what technology does is facilitate, the ease of doing business, especially, the ease of transactions in your sector and connectivity. But there's the risk of a lack of coordination. So if, say, yourself as a regulator, you're doing your own thing. NITA, as a facilitator for e-government, is doing its own thing. But also UCC, as a regulator on the telecom end, is doing their own stuff. How does the bank play a role in this coordination space? Amidst these changes, yes.
Yes. For Bank of Uganda, the coordination we've been dealing with largely, again, like I said, is about risk. So Bank of Uganda is currently the chair and also provides the secretariat for something called the Financial Sector Stability Forum. And this brings together all the regulators within the financial sector: Uganda Microfinance Regulatory Authority, Insurance Regulatory Authority, Uganda Retirement Benefits Regulatory Authority. It also brings on board the Deposit Protection Fund and the Financial Intelligence Authority. The whole point is, and I think Sanjay said it in terms of governance, is that all these new products, like I said earlier on, come with risk. Digital transformation is inherently risky. But that is not the reason why we should, stay away from it. So on the coordination point, we say when you look at the FSSF, and the focus of the FSSF is on one, to the extent to which we standardize things like regulatory reporting. We are in advanced stages of currently conducting a crisis simulation plan because we've realized there's something called contagion, that a problem in, say, insurance can potentially spill over and create problems in banking or in the pension fund subsector, or even the microfinance subsector. So that's what we do in terms of coordination. Now, separately, because technology is significantly involved, Bank of Uganda, I believe it was last year, we revised and amended, significantly enhanced the existing cooperation agreement we have with the Uganda Communications Commission. Again, the idea behind this is that if the banks that we regulate are relying on technology and there is a sector regulator, we need to be having common conversations, or at least reading from the same page when it comes to what digital transformation means and what it means for our coordination role within the sectors. Thank you.
And Jules, or Juliana, you know, for us to call you Jules, the risk therein of, you know, when you're regulating the sector amidst this transformation, that you're going to stifle innovation, that you're going to burden the customers with all these regulations. As we were listening even from the previous session, the fact that technology is moving a little faster than our own regulations and policies. How much then can UCC play a lead role in facilitating the necessary innovation in the sector without burdening the customers?
I think I can just, first of all, to reiterate what Doctor has said, the issue of open communication and open dialogue with our fellow regulators. I think that's somewhere that we focus quite a bit of our efforts. Just to give you an example, when the National Payment Systems Act was being drafted and enacted, the Uganda Communications Commission was a co-chair, even in this particular bill, because we recognized very quickly that while the UCC was initial regulator, quote unquote, because, you know, we obviously paid, you know, quite a bit of role and functions in the mobile money process, we recognized with the Bank of Uganda that, you know, this is not something that can be done in isolation of both of the regulators. So one of the things that we do is that we've got an open dialogue, open communication with Bank of Uganda. And I think, as Doctor said, through our MOU, we define very quickly what our individual roles are as regulators, so that we don't step in each other's feet and we don't duplicate some of these functions, especially to burden the players, particularly who are regulated by both entities. So it's very clear, and through our MOU, we have been very precise and definitive on what our individual roles are. And then as the UCC, we carry out what we call a regulatory impact assessment. And this is very clear to ensure that in all the different functions that we carry out and all the regulations that we draft and we put out for our entities, we're able to ensure that, again, all the other regulators are involved and all the other regulators, you know, positions are defined, and we're not duplicating or even in this case, conflicting in terms of the regulations that we are putting out for the market, and particularly those within our space. And what this has helped us to ensure is that we're very, you know, we make sure that in all the regulations that we have open and direct communication with our regulators in the other spaces to ensure that their position is directly, you know, realized within these regulations. And maybe quickly, Maurice, a third area that, you know, we also ensure in this process is collaboration, even with our sector players. We do not go out to draft or even come up with any sort of guidelines without sharing these with our sector and having their input for completeness. And what this has, you know, helped us in a lot of ways is that in terms of the effectiveness of these regulations, by the time these regulations are out, or even guidelines or directives in whichever way you want to put it, is that the market is fully prepared for them and the implementation of these directives or regulations. So I think what this has helped in a lot of ways is that there's no conflict with the industry. There is no, you know, reason for failure to effect in a sense, because the market is fully prepared for them at the point of implementation. Thank you.
Sanjay, I want to take you to the fit for purpose regulation. I mean, as a player in the sector, you're dealing with both the innovation that is coming through your team, the technical teams and the IT teams, but also you're dealing with existing regulation in your space. And my question then would be, what's that fit for purpose, kind of regulation you'd be looking at from your regulators that would help you, first of all, support innovation in the sector, but also help you provide a great and good service, seamless service for your client and your customers? Is there a space within which you're saying, listen, regulators, this is where the banking sector is going, and we want you to come in and support us, but we need regulation because clearly there will be a challenge ahead coming soon?
Maurice, I think that's a very important question. And maybe with your permission, I'm going to take us through a little bit of a journey. So think about a bank which is 170 years old globally. We just completed 111 years day before yesterday in Uganda. Known to be a pioneer bank. In fact, one of the global leaders just sent me a message. It's a matter of time. I was just here to commission the first ever ATM in Uganda, which happened, quite a few decades ago now. The first ATM, card we got, the Visa card, So we have been in this constant debate, deliberation, engagement with our regulators. I think what Standard Chartered does very uniquely, in the year 2010, we came up with our digital 2020 agenda. And we took a lot of time engaging different regulators, including regulators in Uganda. And this is really because you have to keep up with pace with each other. What a good business does is it looks at the whole equation of client centricity, which is critical, stakeholder centricity, but much more importantly, regulatory, framework or mindset is very critical. So as you're building your strategy, I know our first mobile app ever came in, I think close to 2005, somewhere in our group. At that time, we were like, this is bonkers. How can you do that? But what has happened over time is we have also, digitization, by the way, many of us think is just software systems, technology. Digitization is really a culture. It is the way you adopt, you respond, and you continue to progress. It's really about leadership, governance, strategy. It's so much more about what's changing in customer and how do you continue to keep in pace. It's about the kind of talent you have. It's about the change culture, your ability to take risk. It's really about process change. It's about mitigating a lot of risk that happens not only in your space, but in the ecosystem, working with third parties, process re-engineering. Then there's the whole change agency and change management. I do want to compliment, Central Bank. Really, I think, when you say fit for purpose, because even 2 minutes ago when I was talking to now, there's evolution that has happened. So this fit for purpose game will be an ongoing journey. But I think keeping up with pace, I've worked in many countries myself, having the sandbox, the open banking regulations, constant engagement, being in the reality zone, whether it's UCC or BOU, I think we're doing well. But remember, when you talk about regulations, it's not only these two regulators. What's happening in the judiciary space? Many of our cases take forever. In a digital journey, it's like today you find a problem, you have to escalate today, and you have to solve tomorrow. That mindset is not there. It requires regulators to have a national, inclusive connectivity. Rural population at the moment is struggling. That's a reality. Regulators also change education. Do we really have fit for purpose and fit for growth regulations in terms of what education should be provided? Our financial literacy as a nation, from what I know, and I've been here 1 year, is less than 20% on basic financial management. For women, it is maybe 16%. In the rural zone, it's 15%. So why don't we have regulations to enhance that, a national collaboration model? So the journey is half fit for purpose when we only have few regulators who are fit for purpose. and the rest are not there. So I would just say it's good. Standard Chartered has done well, but I think if as an ecosystem we do better, we can all progress together. Thank you.
I like that, the fact that, you want a more inclusive system. And I'm speaking to the fit for purpose vehicle we are discussing. But I want to request Michael if we can give Director McKay the microphone. He's on this side. I don't know if Michael is very close, or we can get a mic to McKay here. He's here, he's at the front. McKay Aumo is the Director, National Payment Systems at the Bank of Uganda. Director, I want you to speak to the national switch. You're championing the establishment of a national switch. How far is this project, and what are the specific benefits you envisage from the national switch?
Thank you very much, moderator, for the opportunity to speak about the national switch. This came out of a midterm evaluation. The Central Bank is the Secretariat for the National Financial Inclusion Strategy. And one of the issues which came out is the issue of infrastructure. How do we improve the infrastructure? Because there are many challenges, like failed transactions, high transaction costs. And so it's a research that to be able to expand financial inclusion, a switch would play a role. And the thinking was that should be public offering initially, so that we hope that this should help to bring down the transaction costs, increase interoperability, because currently interoperability is based on bilateral agreements. And so there's a cost of interchange and all these challenges. And we also think that there will be efficiency gains, because now all these transactions will be settled through the central bank and through central bank money. Central bank money means that we already have the system that will run the RTGS connectivity to the commercial banks, which will sponsor like payment service providers. And when that is achieved, then we also think that it will bring some gains in liquidity management. You have the issues of running a float for the agents and all this. And it requires maybe pre-funding different wallets. And so the switch should be able to bring in some efficiency gains and improve on liquidity management. And of course, to do this, like it has come from Dr. Mansi and also from Juliana, there has to be some collective consultation with the industry and a lot of collaborations. We had to run some workshops, get views, and then we had to go into consulting stage. We got sponsorship from FSDU and African Development Bank, so we got 2 consultants. The bids are open. We hope to open the bids on 24th this month. That's where we are. I don't know whether I've been clear on this. Thank you.
Yes, you have. And again, thanks to the bankers who are here, that we're getting the latest update. And so whoever attended this particular conference is happy to get a quick update on the status of the national switch. But I'll come to Dr. Manzi. With artificial intelligence and all the transformation in the digital space, the risk for data, data protection, consumer protection is high. And that's where I would like to know what the bank is doing, first of all, in your space as a regulator to protect the consumer. And the same question for you, Jules, would be how much more are you doing as a regulator in the telecom space to protect our data? Because we see young kids who can do so much on their gadgets. And, there was a time someone was giving out free Yaka numbers. Yeah, I don't know if any of you benefited from that in this room. And that's the risk for the industry, the risk for the bankers, the industry. And Sanjay, you'll speak to it at some point, but I want the regulators to come in. Dr. Manzi?
Consumer protection. Before I talk about consumer protection, I just want to have a quick question to put to the crowd. And you don't have to answer me, but just think about it. How many of you have bought a brand new device, electronic gadget, computer, phone, maybe even perhaps car, and actually read the manual that comes with it? Just by a show of hands. I thought so. You see, there's a presumption that government has the responsibility to protect you from everything, including from yourself. And on that one, I slightly differ. Yes, the government does have a role. As regulators, we do have a role. But you as individuals also need to educate yourselves about what you're supposed to do. For example, Bank of Uganda has published the Financial Consumer Empowerment Guidelines 2011. Again, by show of hands, for those who have taken loans in Uganda in the last decade, how many have read them? I know everyone in this room has a loan. Now you see my point.
Doctor, it's about how fast I get the loan. Eh? It's not also really...
Okay. But again, the same banks will tell you, and when you look at the loan documents, they require you to sign and confirm that you have read the terms, you have consulted a third person, and you agree to the terms. Now, if you can sign for money without reading the terms and conditions that come with it, and then expect a regulator to protect you, you are basically asking us to protect you from yourself, which maybe perhaps the initial idea about CBDCs makes sense. We need to protect you from yourselves. But that aside. So consumer protection, yes, every regulator seems to work on protecting consumers within their subsector. And therein is the fundamental problem we have as a country, is that in any jurisdiction where consumer protection is taken seriously and is actually effective, you have one central consumer protection agency, okay? I know some time back, I think about 2008 or 9, there was some discussion about a competition authority that will also have a consumer protection role. I believe that was under the Ministry of Trade. There's been a back and forth. I don't know how far that argument has gone. So, given that we don't have a central consumer protection agency or authority, then each regulator is required to protect its consumers within each subsector. There is a contradiction on that. It is sometimes possible that in protecting banking consumers, protecting the providers of telecom services. So that contradiction needs to be reconciled. So, like I said, for the banking sector, you have the Financial Consumer Empowerment Guidelines 2011, and I ask for those who are going to apply for a loan or an overdraft, please read them before you sign. But separately, we're pushing, as Bank of Uganda, we're pushing for the idea that it's time that we have one central agency that looks at consumer protection. Because consumer protection makes certain presumptions, at least for the financial sector, and within the context of today's discussion. Financially literate, but they're also digitally literate. So whatever initiatives we put in place as Bank of Uganda or as any other regulatory agency, if those who are supposed to benefit are either not digitally literate or financially literate, we are actually doing them a disservice. We're just piling them with information on their rights and obligations to be accountable for those. Because every time there is a right obligation upon me to ensure either you enjoy that right unfettered or within some limitations. So besides the employment guidelines, we are looking at extending that protection regulation, consumer protections for banking systems, consumer protections for telcos, for provident funds, for insurance companies. You end up having the likelihood of having one contradiction or two, even clashes, is very high. So I think what we have done so far, I think the next is not something that the Bank of Uganda can do alone. It is something that requires all the regulators to work upon jointly. Thank you.
All right, Juliana?
I think, thank you so much, and I think this is a very important question because I think as regulators, one of our core objectives is, consumer protection. That's really at the heart of our function and, and our objective as regulators. I think to answer this question, I want to also, not only add to what Doctor has said, but, also to put a spin on it. I remember about 5-6 years ago, I decided to take my SIM pack for my SIM card that I had bought. I've had the same number probably like 20 years. And I looked at the terms therein, and it basically said that the operator will use your information, as they so please, and if you're not happy with it, please do not use the service. But as a regulator, that is information. When you look at from a regulator point of view, the information has been given to you, use it as you please. And one of the things we're pleased about the DPPA, or the Data Protection and Privacy Act, is that it actually provides that there's certain critical aspects of data that will only be used with your consent, but the service will be given to you. And I think that's a very critical step that we have taken within this whole data protection and consumer protection side of things, where the entity that you're interacting with can only use what you're allowed to give them, which is very different from what it was years before, where there was only take it or leave it kind of model of data usage. But I think to add what Doctor said, where there are rights, there are obligations. And as regulators, I think the question that Maurice asked was, are we adequately protected? I think to an extent we are, in the context of what consumer protection is. One, do you have access to information? I think as regulators, we ensure that all the information you require for a service is provided to you, and this information is very transparent, and you are fully made aware of what this service particularly is. I want to speak on the side of the Commission, the issue of pricing transparency. I think in the past, before the regulations were very transparent in themselves, there was no need to provide all the information required to pricing. But I think that's one of the things that we have ensured as regulators, that at the point when you consume a service, all the different aspects of pricing, there are no hidden costs and no hidden information. And as a consumer, all this information is provided to you, not even on platforms that are probably very difficult to access, as Doctor said. What about the people who are not digitally literate? But even in locations where you can access these services physically, the pricing information, right choice on the consumer, either through calls or through offices in locations that are close to you. I think this is one of the critical areas of protection that we offer as regulators. I think I can stop there.
All right, Sanjay, you have the final word before I open this up.
Yeah, I think this data consumer protection is going to be an ever-evolving game. But I must say that what both the regulators have said is that it's not the regulators' responsibility, it's everybody's responsibility. And I think since we're all CEOs and leaders here, the more important thing is what kind of data governance do we have in our own organizations. Uganda has a law. Many of us are also, because we are bankers and do international banking, come in the remit of the whole GDPR. So there is a whole equation of the internal management of governance of data, which starts with how do you collect, how do you store, who is responsible, what kind of training do you give, what data are you allowed to collect or not, do you use technology to see if there are any leakages, what kind of internal models you have around accountability. This is real-time internal regulation that you need to do, which is very critical. Then there is the whole issue of what does data governance, data protection, consumer protection mean to you? It needs to be understood by every staff of the organization. Now, moving on to the customer side, more than just data, I think there is this concept called treating customers fairly, TCF as we call it, which is super and very, very, very critical. So, how do you be fair to them, including on pricing? I think that's an area Uganda will need to continue to be very carefully monitoring. You sometimes hear some crazy numbers of, how customers are being priced. You have to take time to educate your customer. Now, it's very challenging in a country where the literacy is so little to really educate. But I think some of us do a great piece of work to do that. Then there is the whole issue of, consent. And Dr. Twini said, how many of us consent to many things? I think that's a natural fundamental because we all trust each other. So within the trust, what are the minimum 3 to 5 things you should make sure your customer knows that is consenting to? The amount of information you provide, when the customer asks. So all these are very critical aspects of data. Dr. Twini said, in Uganda, we don't have a central model around data protection, consumer protection, or treating customers fairly. So I think this is an area we need to probably take in as a next step, because whilst we have 2 great regulators, there are many. There is the capital markets, there is the pensions authority, there is the whole thing about education, RITA, NIDA, etc., etc. So it'll be nice to see how we can collaborate, etc., etc. So it'll be nice to see how we can collaborate. But I think we should also recognize we are progressing and we're doing some great things. Thank you.
All right. Opening this up, question. I saw a quick question. I think that's Silva. I'm worried there's one there. Any other? Very quickly. We need to support you because we are the worst panel. We are between you and lunch. So it's difficult to regulate that space. Since I'm with regulators, I don't know how to regulate the next phase of our conversation, which is lunch. So Silva, you want to start? Yes.
Yeah. Okay. Thanks, Maurice. My name is Silva Kayondo. I'm a technology and financial services lawyer. I think I'll direct this to Julian. The aspects around sandboxes, one of the practical challenges we are finding with it is that almost every regulator seems to be creating a sandbox. BOU has, IRA has, UCC has, CMA is cooking something. Yet the products we are advising on are coming converged by design. You find an app is a wealth management app, it's a regulatory tool, or rather a RegTech, it's all these kinds of things. Is it time we move also maybe to a converged sandbox or something of sorts that can clearly take? Maybe if you permit me, I have one more for BOU. Dr. Twini or Mr. Aumo can answer this. Almost 60% of the things we've talked about here have regulatory gaps. Cloud banking, not regulated. Open banking, not regulated. Neobanks, not regulated. APIs, not regulated. Digital credit providers, not regulated. I know Parliament really takes long, but is there a way we can maybe have some sort of loose guidelines or even periodic, maybe quarterly advisories? Because clients come to us, I cannot be the lawyer saying, we don't have a regulation for that in Uganda. I don't make money that way. Whereas you have Kenya, you have Mauritius, you have all this. In a call, I have 1 minute to speak. Other lawyers in other jurisdictions have 1 hour to just say what they've done about open banking, about all these kinds of things. Otherwise, for Stanbic Great, I'm a big fan of Standard Chartered Ventures. I've had the opportunity to visit, and it's really exciting work
All right.
you guys are doing. Thank you.
Thanks, Silva. I think we have a question here. Yes.
Yes, thanks everyone. I'm called Nelson Mandela. I'm founder and CEO of a company called Stanfield Commodities Exchange Limited. So I've been in fintech space for about 7 years now. And my question goes to the CEOs of the banks. First question is, how far have you guys gone with open banking? Because we all know that open banking, especially in the UK market, is something that has been approved by the government and people are already implementing it. Then the next thing is also about the issue of digitization. We're talking about digitization, but when you come to opening bank accounts, especially in Ugandan banks, right now, carrying physical ID to open a bank account is still something which is sort of like a must. And the question is, don't we arrange the database of the central of the National Identification Authority linked to the banks? Can't they can't we go digital on that? Because it's preventing people from accessing financial services, especially for those people who are already registered.
All right.
Those who have the national ID number. Thank you.
Okay. Do we have? All right. So I'll begin with you, Dr. Twini. Before I come to Juliana, because Juliana had the issue around sandboxes, but we'll begin with you're losing lawyers' money.
They say 1,000 lawyers at the bottom of the sea is a good beginning. No offense. He raises some important issues, you know, cloud banking, neobanks, open banking, digital credit providers. And then you ask, so what are we doing as regulators? I'll give an example for Bank of Uganda. And I believe it's the same with UCC. As regulators, we're increasingly moving away from the regulating of services to focusing on the risk that those services bring. Okay? If I attempted to regulate cloud banking, or if a bank, Postbank, or whoever decides, for example, to put their core banking system in the cloud, how am I supposed to regulate that? Okay? Or how would UCC, if it's a technology service, regulate that? However, if we focus on the risks that each of these entities or these services bring or products, I think then we provide a room for their regulation. Within the banking sector, so far we've had 4 banks that have applied to Bank of Uganda to have certain parts of their services moved to the cloud. Granted, we actually don't have a regulation on cloud computing, but our focus then was on asking 3 or 4 fundamental questions. The first one is, do you understand as a bank, if you want to do that service, do you understand the risks that come with it? 2, what risk mitigation measures have you put in place to deal with that risk? 3, what is the efficacy or the effectiveness of the risk mitigations? And 4, for any residual risk, what kind of capital are you holding? So when a bank answers those 4 questions, be it on cloud computing or neobanks, we have a starting point. Our idea is then when we have this, we are getting from a point of managing the risk associated with the products, then we can work backward and figure out, working together, of course, with those entities, and work out and figure out either coming up with guidelines, criteria, or even regulations for that particular service. Also, just to note that I want to go with the national ID. Yes, there's been discussions between the Bankers Association, Bank of Uganda, and NERA on enabling for, in the process of authenticating identity, that somehow an image is shared. If you look at the majority of the fraud right now, someone will get a copy of your national ID, so however they get it, walk down to 2 roads down, Nasa Road, and just change the image, and walk into a bank and open an account, or walk into MTN and get an account. Why? Because at the time of authenticating, NERA only focuses on the date of birth, the NIN, and the national ID number. But me and you both know that the better way of identifying it is to introduce some kind of biometric in the process. That capacity has not yet been developed yet, but that is where we are going. Even further, again, looking at the fraud that we have in Uganda, the fraudsters have been able to move the money within banks, but we have noticed one commonality. The money is always removed from mobile money agents, never from banks. Why? Banks have CCTV cameras, okay? Banking agents require an ID for you to complete the transaction. Mobile money agents don't. Again, it goes back to, can we attach image authentication, identification, or image comparison at the point of cashing out, or make it an integral part of the process of the onboarding process? So that, for example, when you're, because I know StanChat was the first one to come up with an app for digital onboarding, that as you go through the whole process on your phone or on your computer, at some point it requires you to take a photograph of yourself, okay? I think it's very hard for me to create an account in saying the names of my friend Liz, and then somehow put my image. Because then the national ID or the NIN will not match the image, in which case then the process gets stopped. So, and for now, it is always going to be an inconvenience. Don't think of it as an inconvenience, think of it as a step along the way. That you can begin the process of opening a digital account, but the completion is going to require someone to match the face with the detailed information provided.
All right. Juliana? And be mindful, Julian and Sanjay, that now is, it's low down because of lunch, huh? So I need to manage the expectations of our people.
Thank you. Thanks, Silva. I think this is a really good question, and I think from where we sit in as far as trying to make sure that our regulations are very agile, as a regulator, we've moved away from very prescriptive rule regulation to more outcome-based, making sure that our frameworks speak to the innovations that are going on within the sector and allowing people to be, very innovative. But at the same time, we do recognize from a consumer protection perspective that we cannot allow everything to just go into the market without understanding the risks. And this is really where the whole sandbox measure comes in. And if we go to a point where the risks are similar in all the different sectors, we're talking about the banking sector, the financial services in a whole, from a communication space, then maybe, Silva, what you're proposing as having one central sandbox would probably make sense. But we're seeing that the risks really differ sector to sector, even if we find ourselves being a lot more agile in as far as our regulations are concerned. The agility we speak to is if a person or an entity applies for a communication license, let's say, for what we have as a national telecom operator license, they can almost do anything. They can run a mobile communication platform, they can run a mobile money service, they can run a television, they can run a digital audio broadcasting service, and that's what we're speaking to in terms of the agility of the frameworks. But what if they want to develop something that has not been seen in the market before, but the wording of the regulations allows you to do it? And really that's what this platform does, is it allows you to come into our space that is controlled, and we're able to purposely just test the risks to the consumer, but not to stop the innovation of that particular service. So I think, Silva, I hope that answers your question, that the reason why we have all these different sandboxes in different sectors is just to see how the customer will respond to this particular service, but not to stop its innovation in entirety. And I think that's really a good place to be in as an innovator. Thank you.
All right, Sanjay, 30 seconds.
Yeah, 30 seconds. I think, first of all, maybe I'm going to, they say, spill the beans. So Sarah Wilbrod, sorry. But with the fact that, Silva mentioned that we don't have regulations for many things, I think as a banking industry, soon we are going to come out with a code of conduct. And the code of conduct is a self-regulatory mechanism. So when it comes to customers, regulators, stakeholders, or society issues, we're going to have fairness adopted in the way we bank. So you don't really need to bother the regulators on everything. I think we're adults, we know how to do business, and we create a framework. So more when it gets released. I think on the open banking, open banking regulations are not there, but there is some framework there. It's really working with third-party agents. So working with third-party opens you to plenty risks. So some of us have done well. We know how to assess third-party risk. Remember, anything that happens in the third-party space, you are completely accountable. So that's hard work because you also need to have a judiciary system that supports that. So I know we've made progress, but it's not adequate. And as the regulator said, it's work in progress. And finally, opening accounts. I know Standard Chartered is broken through. You don't need to come to our branches. But we use multiple IDs. And like the regulator said, you take your picture. And your KYC model is done when when we come and deliver our products to you. So, when your card is delivered, a lot of KYC is done. But there's a lot of risk analysis. All your transactions are, risk evaluated. So up until a few dollars, it's fine. But beyond that, we'll do another KYC very quickly. So you have to manage risk in a very measured way in Uganda. Thank you.
All right, thank you very much. Ladies and gentlemen, can we give our panel a round of applause? Sanjay, Dr. Twine, and Julian. Michael, I really tried, but it was very difficult to sit within the 45. And to reward my panel, we'll have a group photo for the panel. Please come. I'm the only one who's doing these things. So Peter, you can learn from me and do that for your next panel after lunch. So Doctor, please, it's not every day when you have a regulator in your photo.
Clearly, we can see the family portfolio enhanced. So my brother, when you are appointed to regulation, remember me. That I allowed you to take this photo. But can we give a round of applause to this panel? As we head out, allow me to remind us that tomorrow we have a session that will focus on cybersecurity, and this will be conducted by MasterCard. It will be a largely morning session up to about 11 here. And we would like you to register in order for us to be able to manage the logistics. The target audience is people that are into the security within your institutions, risk managers, but also the IT infrastructure managers. So please do register for that. It's right at the entrance as you go for lunch. We are breaking at close to 1:30. We are going to have approximately 45 to 1 hour. I see my good friend has a bell, Wilbrod. So when that bell goes, just remember lunch break is over. We come back to class. We've just been going through master classes, not so. But allow me once again to thank you so much for your attention, for your presence, and not leaving us with empty tables. So we break for lunch. It's upstairs, and we, in the language that I know, they say bon appetit. Enjoy your lunch. Thank you very much. Have a good afternoon. We come back at 2:30. Thank you.
Ladies and gentlemen, we need to move up for lunch, and so that we are here at exactly 2:30 to get started. We don't want us to be the reason why you're held up in traffic as you get back home. Thank you.
started getting low. I found my way, found my heart. Now my life can really start. Journey, looking for someone to please me. Now I see, pleasing's got to start here with me. Still I've fallen and out of love. Now I know just how I wanna be. I know what makes me happy. Looking for my soul. Started getting low. Found my way, found my heart. Now my life can really start. Journey, looking for someone to please me. Now I see, pleasing's got to start here with me. Still I've fallen out of love. Doing it so good, making it so tight, trying it out now, making it feel alright. Doing it so good, making it so tight, trying it out now, making it feel alright. Doing it so good, making it so tight, trying it out now, making it feel alright. Doing it so good, making it so tight, trying it out now, making it feel alright. Doing it so good, making it so tight, trying it out. Never seen someone so fine. Never seen someone so fine.
Hello? Yep, good. Good afternoon, ladies and gentlemen. Welcome to this afternoon session. We will start as people trickle in. This next session is going to look at digital services and other fintech offerings, trends, challenges, and opportunities. And it's going to be moderated by Richard Jebel, the CEO of Agent Banking Company. So allow me to invite Richard. Please do make your way here and take it away as the session moderator. My hope is that we can work within 45 to 1 hour so that we are able to let these people go before the Monday traffic craze. So welcome with me, Jabel, who's going to lead this session.
We promise that we will attempt to stick to the guidelines, so 45 minutes. Good afternoon, everyone. It's hard to rouse the participants after lunch, but we'll attempt to. We have a very dynamic and interesting panel for our next session. Please allow me to welcome the members of the panel, beginning with Mr. Joel Muhumuza, the Chief Executive of FlyHub, a subsidiary of Stanbic Holdings, Uganda Limited. Mr. Gerald Otim, founder and Chief Executive of Ensibuko as well. Mr. Victor Ndlovu from our sponsors, MasterCard. He is the Regional Business Development Executive for our region. So we are very expectant. Mr. Paul Chirunji, the Chief Executive of Zofi Cash. He will tell us about Zofi Cash and what we do there. Mr. James Biaruhanga, the General Manager of Raxio, the infrastructure providers. Yes, sir. You're welcome. All right. Dear members, you're welcome. I think as I've mentioned, the afternoon session needs to be very exciting and dynamic. So we have set some very good questions to frame the discussion. And after that, we will then open it up to the audience to be able to receive and respond to some questions. I think we'll begin with you, Mr. Otim. As one of the fintechs that is very much involved in supporting VSLAs and SACCOs, could you share with us some of the learnings that you have had in your journey, the challenges you faced, the opportunities you see, and then what are your thoughts around what we should be doing going forward? We've got our regulators in the room. We have the financial institutions here. We've got other fintechs that you could collaborate with. We also have international players as well, like MasterCard. And I'm sure they are more than happy to hear about your journey. I think you will begin by introducing yourself and telling us a bit about Ensibuko and what you do in just 2 or 3 minutes, and then take it away.
Thank you very much. My name is Gerald Otim. I'm the CEO at Ensibuko. We are a fintech partner for SACCOs and savings groups. So what we do is we provide, for SACCOs specifically, we provide a cloud-native banking platform. What in the world of bankers, you would describe as a core banking system for SACCOs. And we also plug in payment services, MNO services and bank payments. For savings groups, we provide digital banking app. It's a smartphone app. And we focus primarily on rural-based savings groups, what you'd call VSLAs, or Village Savings and Loans Associations. And we help them automate their procedures and their payment services. For those of you that understand VSLAs, then you probably know that they're mainly characterized by paper and cash or lock boxes. They meet every once in a while, once a week, and they keep all their records on paper and then have a lockbox where they keep most of their funds. And so what we do is we come in and help village savings groups go digital by helping them, go paperless and cashless as much as possible. So that's primarily what we do. We currently support about 120 SACCOs and just over 5,000 village savings groups that we currently work with. Now, I think for today, I'll specifically talk about our experience with SACCOs, what it is, with village savings groups, what it is that we are seeing out there, what's interesting, where the real opportunities are, and where the actual challenges are. We started working with village savings groups in 2019, and generally there's been this unending conversation about financial inclusion, and there's been a lot of initiatives by various players, including formal financial institutions, to deepen financial inclusion by targeting rural customers. And for a very long time, I think the primary metric for financial inclusion has been the number of bank accounts opened. And there's been a lot of initiatives around helping people in rural areas, refugees, smallholder farmers, get integrated into the formal banking sector, supporting them to open a bank account. So there's been work around policy, financial literacy, to help them understand the opportunities, but also there's been work around improving KYC so that it's easy for them to get integrated. And, these initiatives are great, and there have been some interesting scores in regards to how many people are getting into the formal banking sector. But I think it's also important to talk about how slow yielding some of those initiatives have been, especially in reaching the last mile customers. And, after several years of work, there's still quite a number of people that are still locked out of the formal banking sector. And so in the work that we've been doing with village savings groups, we have collaborated with financial institutions attempting to do the same things, which is attempting to get as many people to formal banking. And there's a couple of things that we have learned. One of them being that the conversation and the metric for financial inclusion needs to shift from number of accounts created into conversations around value. I don't believe that access to financial services necessarily means that someone, an individual, needs to have a bank account. I think now with technology, there are a lot of other interesting ways that we can get people to access and utilize formal financial services without necessarily having a formal bank account. And that's what we do with village savings groups. We realize that there are a couple of realities out there. One of the realities being cultural limitations. By fact, the rural communities that we operate in, by fact, a lot of those people are communal in nature. They love to do things together. And they do the same with savings. They love to save together. They love to access credit together. And so initial attempts, you know, in the older collaborations we had with banks, the collaborations were designed in the way that when we partnered with a bank, the first conversation on the table was always, how many individuals are you reaching through the savings groups? How can we help each of them open a bank account? And a lot of those conversations were not leading anywhere. So we have since changed the type of conversations we have. And the idea now is to promote what we call collective banking, which is really focusing on making sure that everyone, every individual in a savings group has access to the value that formal financial institutions can offer without necessarily having a bank account. And we do that through what we call facilitative banking. And facilitative banking is really the kind of banking where you focus on the village savings group as a customer and work with them to facilitate banking amongst their members without every single member actually having a bank account. And we have also done what we call shared infrastructure, where there are certain realities in these communities, things like knowledge and skills gaps or infrastructure challenges. You find, you know, there's a savings group that needs banking services, but in that community there's no bank branch, there isn't bank agents, and even where they exist, there isn't enough float. Or the members just lack knowledge and skills of how to utilize these services. So what we do is that we really focus on, you know, helping financial institutions look at savings groups as partners that can facilitate banking. So whether it is skilling and knowledge of financial literacy, the model that we have what we call a digital agent. And a digital agent for us is a representative of a village savings group. This single individual is the person that we focus on. We build their skills and knowledge and build incentives around them. And we use this individual to facilitate banking within their members. The second thing that we do is what we call shared wallet infrastructure, where we provide a single wallet, and in that wallet we're able to integrate MNO services like MTN or Airtel, and also able to integrate banking services. So for example, we are now integrating with ABC to allow, you know, bank transfers from a wallet. So a VSLA, during their typical meeting, members meet, they save money in a lockbox, they move that money to a mobile money wallet, to a wallet through mobile money, and they're able to move that money from a wallet to a bank account. So that, for us, is what facilitative banking is. And I think that it's the kind of conversations that we need to start having, because otherwise, if we continue to use the metric of number of individual bank accounts created as a metric for financial inclusion, then we might be underscoring ourselves on the efforts we are putting towards financial inclusion.
Yeah. Thank you, Joel. Thank you, Gerald. Very insightful comments there. I think maybe to follow that up, we'd like to hear from Paul. Paul, in terms of your journey at ZofiCash and the work you're doing in digital lending, what are your experiences? What have you learned? Where do you see the opportunities? And what recommendations would you have for us as an industry, from a regulatory perspective, financial institutions, and any other?
All right, thank you so much, Richard. My name is Paul Kirungi. I'm the CEO and founder of ZofiCash. Now, ZofiCash, cash, we know what cash is, but Zofi it's an acronym of Zeal of Financial Independence. That is what we want to promote. And how we're promoting this, we are challenging the 30 payday cycle. We believe it is very, very, very outdated. I always give this example on events like here. I always tell people if they had asked all of us to pay entrance fees here today, probably
some of us wouldn't have been able to afford it because we are waiting to get paid at the end of the month. But thank God, the sponsors who paid for it. But also, to bring perspective, when we don't access our money when we need it, we limit the way we live, the quality of the life that we live. This affects the businesses. For example, if we didn't have sponsors to afford this event for us today, probably very few people would have made it here, which means the hotel would not be able to make enough revenue from this event, right? Now, we do have service providers, not just the hotel. We do have people who work at the hotel. Imagine all of them not being able to access that money because we couldn't, right? Now, that effect actually trickles down to the tax base for the central government, the agencies such as KCCA and others are not able to collect because people are not in position to spend money. But also businesses are not in position to efficiently serve us, right? So what we are saying is, let's at least try to make sure that people get paid at least twice a month. You know, the countries that we love so much, like North America, it's been over 50 years ago since when people last got paid once a month. People in a developed world get paid as soon as they are done with work, you know, which limits them from running from friends to families, using credit cards, but they are able to use their cash that they've earned. Now, we are a lender, but our approach to lending is different. We clothed it as salary advances, so we work with businesses. And the value that we bring to businesses is, I'll give another example. If a company had a wage bill, let's say of about 500 million shillings, and they have to pay it at every end of the month, but they also have to make sure that their employees are motivated, their financial emergencies are taken care of. Most of the time they have to spare at least like 50%, which is like about 250 million, put aside just to make sure that their employees are taken care of. Now that is money that can be used to actually grow the actual business, because, I mean, we run businesses to make sure that the businesses make money, not just to be taking away money from the businesses. So those are some of the values that we bring to the businesses that we work with. We take that burden away from them. But also, employees are able to access the money that they've earned in as little as 2 minutes. What we are seeing is that employees are able to take care of those emergencies, like someone has a sick child. They don't have to really go through the hassle of filling paperwork, taking it to their employees, and then, I mean, their employer has to approve. Now, you go into an office where someone who is supposed to approve money that you're supposed to pay to take care of your sick child in the hospital did not come in office, you know? Those are some of the pains that we are solving, and the opportunities are enormous. Right now, it is estimated in Uganda that over 10 million people get paid, whether formally or informally. They earn a living from the work that they do. Imagine all these people being able to access their money, right? Not even Zofi Cash is able to meet that market's expectations. You know, those are some of the opportunities. The other day I was attending an insurance event. They said that the insurance penetration in Uganda is less than 3%, right? But imagine if every single transaction that went through mobile money, the MTN or Airtel, even the banks, like every transaction, let's say that's above 500,000 shillings, comes with a microinsurance, you know? Like if you transact anywhere from 500,000 shillings, If you are hospitalized for 2 days, you can get insurance, you know? All these many and many opportunities. There's a lot of opportunities when it comes to embedded financing. They're just so much. So yeah, I'm happy to share those with anyone who is up there.
All right. Thank you for that, Paul. I've seen some bankers making notes here. I think that we'll have a few people speak to you about that opportunity. I think, Joel, good afternoon. So I think for what we'd like to know from you, I think you have heard from Gerald and from Paul around what they're trying to do out there to extend financial services and the opportunities as they see them, some of the challenges they're facing. What we'd like to hear from you is from your perspective as a bank-owned fintech that has that close relationship. What have been your learnings so far in the market? What opportunities do you see? And what are some of the challenges that we need to overcome? And what are your thoughts around how we could then move forward?
All right. Thanks, Richard. I was, when you said my name for a minute, I was just looking back there and seeing Annual Bankers Conference. And then I was seeing my face here. And I remember I swore I would not become a banker at some point in my life. I started, my first job was as a teller in Crane Bank, as a bulk teller. Do you know what a bulk teller does? You receive coins from all the petrol stations around the city, and you count them one by one. So it's a bit absurd that I'm sitting here, but you know, life throws you different curveballs. Yeah, like you've said, so I run FlyHub, and FlyHub is an ambitious project that Standard Bank started as part of its ambition to expand beyond banking. Created 4 new subsidiaries, the incubator, which supports new businesses, helps them understand how they can go from being an informal business to something that could receive credit or receive financial services and even be able to win tenders in different market spaces. We've got SBG, who does wealth management. We've got SPL, the Stanbic Properties Limited, the only listed properties company. The CEO always tells me to say that, providing real estate services. And then there's FlyHub. So FlyHub's ambition really is to become a technology enabler. The passion of the business is to become a platform business. As a platform business, it means connecting different businesses and opportunities together in one place. So our first task was largely creating a cloud-native environment to host all these applications which cannot share space with the banking environment. And as the 2 gentlemen were speaking, I think the fact that Gerald is talking about creating a cloud-native sort of core banking system and is going towards where people are, the mass of our Ugandans are in the SACCOs, that's an ambition of ours. Actually, Nsibuko is one of our partners. And the idea for us is that we can't really build everything ourselves, but we can partner. The challenge has been often that partnership is quite painful. What was it? I think Facebook was saying that you have to move fast and break things. You try and move fast in the bank, and the only thing that will break is yourself. So we've had to learn that you have to move with caution. And the reason for that for myself is that we exist because the DNA of the bank has been set in over 106 years. There are certain ways things can be done. There are certain approvals that have to be done. There are certain processes, certain committees. And for me, the challenge and opportunity that I've had is to try and create an alternative pathway to allow for easy partnership with the different fintechs, with the different providers of solutions who are thinking beyond the normal, and how can they, receive something from us. So in the last year, one of the things that we've tried to do is, on top of landing our cloud environment, is creating an API gateway that we're trying to build and complete so that it will be open to the public next year. And really what that's supposed to do is reduce the time for integration with us from 3 months to no more than 2 days. One of the things we've learned is there's sort of companies that are ready to do that kind of integration, and then there are others who might need a bit of support. So what the bank does is they maintain their services, and we do the work of connection. I think the challenge that we've had being a fintech within an established environment, number one is that our approach, our trial and error, because I believe a lot in making mistakes early, in trying low fidelity prototypes, and that approach at first didn't rub everyone the right way. You know, you need to have a very good business case, and you need to know exactly where the money is going to come from. And in my thinking, that's what leads you to creating the same kind of thing over and over, because you're staying in the safe environment. If you create something that's new, that you want to try something out, we need to be ambitious. And I've fallen on my face a number of times. There are a number of things that I've suggested, a number of ways. My boss tells me that I'm not doing my job if I'm not scaring him. So I think I'm doing my job pretty well. I scare him from time to time. But where we've landed now, I'll just probably mention 3 things and 3 lessons. The first one is to understand the responsibility that comes with a banking license. It's something I had to appreciate, number one. There's an incredible amount of respect and incredible amount of trust that's given into the banks that exist in this country. And it's not for naught. I mean, to change too quickly is going to upset the order of things, you know? You can change really fast and say, well, technology is coming through, let's hurry up and adopt that. Tomorrow we'll probably highlight some of that for everyone here. Technology is great, but it also opens you up to higher network connectivity. It opens you up to more threats. And how are you going to manage those threats? It's the duty of the people who manage the funds that we're going to be dispersing to the businesses responsibly, that we manage that risk appropriately. So for me, it's understanding why those committees exist, why that approach exists. And for us, it meant creating a separate entity like us to be the face of that innovation, to be the face of that kind of partnership. 2, it's creating, on top of that environment, different rules. So as we stand right now, we started offering cloud-based services, meaning if you're a fintech, meaning if you're a company that wants to partner with the bank and you're probably thinking about going cloud, it seems quite easy. Yesterday, my cloud engineer was telling me something along the lines of, you can stumble very easily and end up with a $50,000 bill from Amazon Web Services if you're not careful. Because everything is so simple, you just toggle a few things and add security here and then put a database here, and then everything seems so nice and good, and everyone has sold us on cloud being really cost effective, but what the quiet part is, it's cost effective as you scale, as you have more and more services, as you get more and more engagement. And so for us, we found there's a hole in terms of having that managed service, being able to guide a business in terms of saying you may not have a cloud team, but we can provide that for you. You can be embedded in our space. And the advantage that comes with that is you then get connection into the APIs that the bank is building. And you also get a chance to have a sandbox environment where we can test out your solutions before we say that we can offer them as a service back into the bank or offer it to our customers. So for us, I think the last thing I'll say is getting the right people on board. It's easy to get developers, I would say. It's easy to get bankers, but to get a developer who thinks like a banker, or a banker who's thinking about proper dev, those are unicorns. And we've had to, I guess, get to a point where we're trying to break the mold through our everyday habits. So we have something called Toolbox Sessions that happens every Friday. It's actually open to the public. It's something where we come and learn. We learn about cloud, we learn about blockchain, we learn about artificial intelligence. For instance, the things that I was learning about AI and LLMs of recent have given me some bit of pause around exposing them to so many different services, because the appearance of what they look like and what they exactly do are quite different. So in a nutshell, I would say it's quite difficult to build within an environment that has an immune system that's trying to prevent you from doing too many things. But for us, it's creating a sort of reason to the madness. We try and, my personal favorite saying in the world for myself, my personal motto is to live as fruitful failure. You know, you fail, but you're learning something. You keep moving forward and you make a mistake. If you're not making mistakes, you're probably in too safe a space. So that's our work, and we say that for those who've had some frustration trying to deal with Stanbic Bank or trying to work with us, there is a space. We exist to be able to help you in that kind of engagement. With us, you may be able to break a few things, be able to make a few mistakes and not touch the core banking system. And then when you're done, we get you ready to be able to connect to the full banking system. I hope that answers the questions.
Very interesting perspectives there.
You know when people say interesting, it means you're in trouble.
No. This, I believe that when the audience responds, they will say the same thing. I think you've shared some very good insights there. They're really food for thought. James, as an infrastructure provider, technology-wise, what are your thoughts? What has your journey looked like so far at Traxio? What are the challenges you see, you've experienced, and a bit of how you've been able to overcome them? What do you see as the opportunities going forward? I think you've heard from Joel, the FlyHub experience, Gerald, and then Sivuko, our friends from Zofi Cash. In that context, what are your thoughts?
Yeah, hi. First of all, good afternoon, everybody.
Good afternoon.
If I was the one moderating, I'll tell everyone to stand up.
The first stand up.
Greet everyone like Michael's making us do the whole morning. Yeah. But anyway, yeah, my name is James Biaruhanga. I'm the general manager for Traxio Data Center. We are, we like to say, we are the only neutral data center in the country, but we are privately owned, and we are certified Tier 3. A lot of that is marketing, but also a lot of it is true. First of all, I'm happy to see my customers in the building, active customers. I'm also happy to see my next customers. I would like to say I'm the only person in the building who's here and can provide the service to all of you without competing with you today. So I'm excited to be here. Now, from our perspective as an infrastructure provider and a tech provider, we're in a very interesting space at the moment because everything is happening all around us. I want to just specifically focus on the theme of the conference, which is basically fintech, the trends that we are seeing around fintech, and of course, fintech just being one of the elements within the financial services industry at the moment. When we first came out to build this data center, we had to build, of course, the motivation, the business plan, who are your uptakers. Personally, I come from an internet background. A lot of those noisy people there, I worked with them when we were still network engineers. And I was moving into a whole new space. So I was thinking about the data center from an internet data center perspective, because ideally, what really makes data center businesses work across the world is the internet, the growth of the internet, extension of these same cloud providers like AWS, Google Cloud, Microsoft Azure, coming closer to the market, and of course, whoever else they come with. But very soon in the journey, I realized that what really is happening in what Peter Kaumi mentioned earlier in the morning as the Savannah Valley was this eruption of the fintech space. And the eruption was not organic, right? It was the telcos disrupted the market by getting the mobile money platforms based on the M-Pesa, success. The banks reacted with moves like FlyHub and what everyone else is doing on their side. And then the sharp people in the building, Pegasus, I can see Ronnie over there, came up with the independent fintechs and Sivuko, as we've had, from Gerald earlier. So you find that now finance and tech have merged to build this whole fintech sector that right now is basically the vehicle, right? So from our side as an infrastructure provider, we have to figure out how do we fit in and how do we provide services for this kind of evolution that's happening. So the data center side of things, what we do is we provide a home, first of all, because all these amazing ideas you're all talking about have to run on some kind of infrastructure when all is said and done. The first class in computer science is basically about the 7 layers, which is the physical layer, network all the way to the application. Right now, this room is having conversations around applications, application, whether it's cybersecurity, whether it's the collaboration platforms you've built, whatever it is that's happening. Now, we play at the base of everything. We play at the infrastructure layer because if the infrastructure is not available, then you can't actually build anything. So we had to build a very resilient data center that could actually provide the service that everyone could work with. Now, the infrastructure is one thing, but as you could tell from also the theme of this conference, collaboration is really what gets us there. Now, the banks, traditional banks can do so much on their own. The regulators who are here in the morning are playing catch up. The fintechs innovating. The telcos, as Richard Diego told us also this morning, are also really trying to find a way of accommodating the whole thing. So you find that the infrastructure is just one thing. So we are really now building and focusing on the ecosystem itself. Can we be seen as solution providers rather than infrastructure providers? And the solution in this case is really getting the ecosystem to work. We need to make sure that when this man puts his whole app out there, his Zivo app, and then you have his Civico there, and like I said, they're partnering with FlyHub in some way. All of those guys can only exist by working together. The time to compete is no longer quite relevant. It is a time to collaborate because fintech basically brings that to the world. So for us now, we found it as an easier way to provide the infrastructure that the banks can put the infrastructure. The fintechs can take some cloud services from either cloud providers that we provide infrastructure for, but then they can collaborate by cross-connecting with each other, and ultimately that creates the ecosystem that also insurance companies can plug in, telco can plug in and everyone like that. And that really has been what we have seen as the first real genuine spark of this same fourth industrial revolution conversation that Mike talked about in his opening remarks. And also just demystifying the whole idea, again, from Mike's conversation this morning, based on Bill Gates' famous quote that banks are not necessary, but banking is. So where we're playing our role here in terms of the financial services space is to really catalyze it from the beginning. Bring your infra, connect with other people, be part of the ecosystem, and then you can utilize collaboration to provide the banking solution that the market actually wants. That's basically where we are.
All right, absolutely. I think very exhaustive there. So Victor, you've heard from a cross-section of players in the fintech industry. At lunchtime, the executive director of UBA was saying that this panel is the one that drives the theme we have here today. So they're very representative of what the fintech space looks like in Uganda. So we would just like to hear from you from a MasterCard perspective. How are you thinking about this opportunity or this market? How are you positioned for that? What are the key elements of your approach or your strategy? What do you see as the key challenges in the market? And how do you think we would go about overcoming some of these challenges?
Good afternoon, everyone. So I'll start by introducing myself. My name is Victor Ndlovu. So I head up business development for East Africa, based out of Nairobi. As usual, very happy to be here in Kampala and happy to see everyone here. Now, I think your question is pretty loaded, but I think where I want to focus on today in terms of my response, and also in terms of the trends that we typically see in the payments business. So Sharia Ali initially this morning spoke about, the past, spoke about the present, and spoke about the future. And this is where we need to pick up the conversation. As you all know, MasterCard is a global technology company, a company that is really driving payment innovation across the globe. But the question that keeps coming up is, how relevant are you in Africa? How relevant are you in Uganda? And what can you do to actually change the landscape of the ecosystem?
Yeah.
Today, what we typically see is a lot of the consumers are still using cash as a form of payments. And obviously, our mandate is a world beyond, right? So you saw the video earlier on. It actually is a world beyond. Obviously, the first thing is beyond cash, but beyond other means as well to achieve digitalization across the ecosystem. And just to also just build on the conversation that was started earlier around, first of all, we want to open an office, which Sharia spoke to. But what does it actually mean to open an office here? One, the first thing is we want to work with the local partners, the fintechs, the banks, the government, the merchants, to actually provide locally relevant solutions to the consumers. I think if we use our global prowess to be able to actually harness and bring the local players together with our global capabilities, we have a very powerful proposition to be able to actually start driving the conversation where we start to see more and more transactions happening digitally and again to solve the locally relevant question. So that's where we start off from. The second piece is around how do you achieve that without collaboration and partnership? And I think this morning, a lot was spoken about how we collaborate, and I think you spoke about collaboration as well. Now, we want to partner with all the stakeholders in this payment ecosystem. And for us, partnership is really about not competing with domestic players in this market. So there's an old adage that says, because you're a global partner, you are actually going to be competing with local schemes. I think the world has moved beyond that. And if you look at the opportunities to actually digitize payments today, there's a 99% opportunity to be able to actually build and scale on payments. And therefore, we think that the best way in which to actually collaborate and partner is actually to come together and actually form a body that actually then helps to actually drive local relevance, as I mentioned before. So that's one of the solutions that we think will help us. We've been in this business for 70 years, but we certainly are learning the new trends out there in this space. So we also speak about the multi-rail, which again was spoken to in the morning, our multi-rail strategy, which means that we've moved beyond just your cards as a form factor. We're now also going into e-commerce. Obviously, e-commerce is also not new, but we want to scale it up. We also want to play a lot more in the mobile space. And I'm sure some of you might have seen the announcement this morning with one of our partners, MTN. We're actually collaborating to partner to actually grow the ecosystem. And we believe that is the direction to go. We cannot do it by ourselves. We need to come together and provide those solutions. Yeah. So we also want to then think of not only just what is happening in the present. And I think, again, during the Sharia's presentation, there were diagrams to do with how quickly did companies get to 50 million customers, obviously from the likes of your airlines all the way to Pokémon. And I think we'd like to think that, this is the way to go by partnering and also provide locally relevant solutions, but also to look at the futuristic payments, things such as blockchain, cryptocurrency, etc. We know it's a topical conversation today, but it doesn't mean it should be removed from the boardrooms. It should still happen, but find the right way in which to actually implement it within a country and to solve specific use cases that may be relevant for the local market. Let me also move on to financial inclusion. I think I heard the conversation around financial inclusion in this panel today. And we are saying as MasterCard, we've committed to actually bringing in 1 billion consumers who are either unbanked or underbanked into the formal banking environment. And 1 billion is not a small number, and most of these 1 billion consumers will come from our markets. And again, we've put out a commitment that says, yes, we are on that journey by 2025 to get to 1 billion consumers, of which more than half of that target has already been achieved. Now, obviously, the next half is very important, but also within a very short time span. But out of that, we also have identified within that segment that the SME or the micro SMEs are some of the most important participants in this ecosystem. And if that segment is not addressed either through the convenience that we provide through our products or even the economics that actually would dictate how the adoption will be taken up, then we are also not really speaking into these SMEs. And therefore, out of that, we also have within that 1 billion, 50 million that we are targeting to bring into financial inclusion. And of that, again, 25 million should be actually women entrepreneurs as a specific and deliberate target to get the women actually involved in financial inclusion. Now, as we proceed, you cannot do this without an effective regulatory environment. We work very closely with the regulators across all our markets, including here in Uganda. As we speak, our application for a PSO license is sitting with the regulator, and obviously we are exchanging notes around how we actually complete that process. But regulation plays a very important part in ensuring that as you are driving that financial inclusion journey, you are also providing solutions that address the opportunities in the market, but also providing them in a very safe, reliable, and obviously transparent manner. And that's what we stand for as MasterCard. So security is very high on our list of priorities. In fact, we are actually paranoid about security. Because if we don't live within that paranoia, then obviously there will be the usual suspects trying to enter and break our model down. And then last but not least, we can all do this, but we also need to upskill and skill the individuals or the participants in this ecosystem. And again, we spoke about some of our programs that we developed for fintechs, such as StartPath, where we bring in the fintechs, we work and mold them and help them to scale. But again, we also provide the relevant training and give them exposure to other fintechs that have made it, but also are wanting to learn about what's happening in, let's say, Uganda in this particular case. So again, we've got the digital safari, which was spoken about earlier on, which actually addresses the gaps that are there, the opportunities that are there, and how we can exploit that. So I think in terms of what MasterCard is doing in this space, Uganda is very important to us. And we certainly will be working towards that collaboration, that partnership, fostering a stronger payment ecosystem in the market, and again, working with all the stakeholders in the market. Thank you.
Absolutely. Thank you very much there, Victor. We're really looking forward to the establishment of this Uganda office. And we believe that you will play a role in catalyzing the growth of the ecosystem and making how we do things better. I think at this point, I'd like to open it up to members of the audience. Got any questions for the panel? Now's the time. I think the microphone is out there somewhere. Do we have the microphone? You could just put up your hand if you've got a question. I don't see any hands from up here. Should we say the panel has done a very good job? There's a hand there. No, we don't want your hand. Okay. There's someone there with a question?
Thank you. My name is Yvonne from URSB. My question is for, I think, Mr. Paul Chirunji on the digital lending. We thank you for the innovations that have been done in that area, but we have noticed that things like if you need to provide a guarantor, anyone can provide people they have not consented with. It is unhealthy for the financial services sector, and I don't know if there's anything you're doing to curb that. Thank you.
Okay. Well, I think the question is about the referees or the people I put as my contacts when I take that facility. Do you check that I'm agreeable to that? How do you address that?
Right, thank you. First of all, to be clear, Zofikash is a B2B, so we work with businesses to offer salary advances. which means we rely on employers to do our collections. So we do not go after people or individuals who take money from us. So Zofikash has never, ever, and will never, ever reach out even to the employee who took the salary advance. First of all, before we go into any business with any bank, with any employer, we have them, we sign an MOU, we have them commit that they will be responsible employers, deduct whatever the employees took, and then remit it back to us. But there is definitely a huge problem in the market, and actually it's not just Uganda experiencing that. Most African countries are experiencing this, and it's because digital lending has been one of the fastest growing fractions of the financial sector. I think we need to go back to the basics and understand why this is the issue. I think there's been some laxity when it comes to regulation and data protection. But the good news is, at least we are having these conversations. We believe like in the next 2-3 years, we should have responsible way of executing business. Yeah. So yeah, that's what Zofikash does.
Yeah. Thank you for that. I think in terms of your model, the recommendation issue would not be a problem, given that you're relying on the employer. But in terms of the other lenders, the quick answer would be to then seek the approval of the person who's being placed as a recommender or as someone who you can fall back to when the facility is not paid. But very good question there. Any other questions? Do I see a hand there? Okay. The microphone, please.
I have one.
Okay.
Thank you, Richard, and thank you to the panelists for the fantastic presentations. I am curious about my brother at Zofikash in terms of the frequency with which people need to be paid. In fact, from what we see, people prefer to take facilities where they pay in every 30 days because most of the bills are actually on a 30-day cycle. I'm talking about rent, utilities. School fees comes every 90 days, but when I look at my past life, we attempted to pay agents commission on a weekly basis, and we got a big backlash to say, take away the small monies, give us our money in large chunks. So I'm curious to understand what is the uptake so far with your, paying people much earlier, more frequently, probably 4 times a week. How is it panning out? And we may need to, if it's working, we may need to probably see how we can scale it, but it's an opportunity.
Okay.
Thank you, Richard.
Yeah.
So this October, Zofikash should be making 2 years. And we've onboarded about 1,817 companies as of this morning. And we have onboarded over 20,000, about 20,700 employees, right? And since day one, since we launched, these have been the same recurring users that we've been serving. True, they are people who would rather get paid like at the end of the month, but how about the fraction that should never have to run to a money lender or should never have to call friends and family for purposes of fixing an emergency? We believe there's much more opportunity. Of course, this is going to come with a lot of financial literacy so that we also control indebtedness. With Zofikash, our model is everyone who signs up to use our service starts at 30% of their take home. And as we build a relationship with the employer, then we can bump them up to 50%. So still, even then, at the end of the month, they will still have money left for them to take care of such things that they should be able to take care of at the end of the month. But at least we want to make sure that when you need your money most, you can access it.
Okay, excellent. Another hand? I think there was one there somewhere. We can take 2 more questions. I see that time is almost up. Okay, there's a lady here. Is there a hand there? Okay, go ahead.
Thank you very much, moderator. There's a concern. Most of the presentations are looking at mobile lending. But there's a concern whereby these companies that do mobile lending have a high interest rate. The question is, who regulates these companies? Thank you.
Okay, that's an interesting one. Do we have someone who wants to take that on the panel? Or should we look for one of our regulators? I think maybe I could give you a quick answer. So it would be the microfinance lending, microfinance regulator. That's the regulation under which they operate. Do you want to say something about who regulates interest rates?
Yeah, it would definitely be for us, it's the Uganda Microfinance Regulatory Authority. But this is the challenge that I pose, the question that I pose to the banks, right? The reason as to why many people are actually opting for the mobile apps, it's because they've been blacklisted. Okay, maybe blacklisted is too much, but they can barely access services from the financial institutions for maybe they do not meet their credit scoring systems in place. I believe, and of course also regulation. I think regulation also bars them from lending a certain class of people, but that's where collaboration then comes in, right? If Zofikash is able to get a bigger facility, let's say from Bank A at a cheaper cost, we've mastered the craft of actually credit scoring our clients. And these are not just clients that would need salary advances today, but these are clients that are going to actually come back for more services and more services as maybe they build their creditworthiness, then we can pass on them to you. But if you keep shutting our doors, and I'm not trying to justify this, but we, like, for example, Zofikash recently raised money, but do you know where we raised it from? Nigeria. Someone in Nigeria found us worth to give us money to lend to people here, but the financial institutions here are still hesitant. You know, with things like that, it's still going to be a little harder, but if we can sit on the table, collaborate together, I think we can deliver better services to our people.
I think the key element there to the credit rate is largely the rate at which the companies access funding. That is the main challenge that Paul is speaking to. There was a hand here. Have you got the microphone? Maybe let's start with the lady at the back, then come to you.
My name is Christina Lumkuse. I work for a Sigma Capital. My question is to any of the panelists. So we held a session with a few representatives from the banks, and maybe 2 weeks ago with the Uganda Bankers Association. So some of the CEOs who are here, I think who were with the heads of your retail banking, and some of them were heads of digital channels. And we were trying to speak to things around strategy, customer-centric, customer design around digital solutions. And I think it was, even when you hear at least I can speak for Nsibuka and Zofikash when they're speaking, it's very customer-centered. So there's this problem in the market, there's this thing that people are not able to achieve. How are you going to close those gaps? But my sense was there are all these reasons why not. Banks can't go digital in terms of products. And I just wanted, and maybe it's also opinion or otherwise, so partners are heavily available. I feel like the keynote speech from MasterCard was, there's partnerships. If you want from a partnership, there are partnerships. And the future is collaboration, which people have said. But and maybe Joe, you'd be good to answer because you've been on the outside and now you're on the inside. If your bosses let you.
Yeah.
But yes, what do you think is the real, most things is regulation and mindset. What's the real reason that banks in Uganda are going into the digital space with one foot? They are both feet tied, hands tied, yes. Yeah. So everyone is saying there's opportunity. Is it that they don't feel that the value chain, where they're playing in the value chain, is not the most profitable part? Because obviously the MasterCard is playing at the digitization of payments and things like that, whereas extension of loans. But maybe, yeah, what would you, so we have CEOs of the banks in the room, is it a lack of information that there are just too many lines between the customer and there are probably 50 approvals before the CEO actually hears that, oh, my customer is not happy, right? So what do you think is the real bottleneck? Is it really regulation? Is it the infrastructure and access to information for the banks regarding exactly what the customers want? Or do they just not know how to go about it? That's just factual opinion or experiential, whatever allows you to answer without losing your customers or jobs. Yeah.
We're sure Joel is ready to take that on. So Joel, the opportunity is there. We've spoken about it. Why are you just dipping your toe?
The opportunity to lose my job. No, I think if we're to be quite frank, when I started, I was saying that I didn't want to join a bank. And the nice way of me saying it is because I felt like the bank that my dad went to is the same bank I'm going to. Like the changes are not that many. I mean, when ATMs came out, they were like, woo, we've done something really great. And since then, only a few changes. So I would maybe give 3 answers. One is you have to understand, I suppose, the very nature of the banking business. It's been tried and tested for such a long time. And even when we talk about financial inclusion, having worked in that space for quite a while, often what's happening is we're trying to get people to fit a certain frame for us to be able to serve them because we can only serve that frame. I give a lot of credit to the telcos because they finally managed to do cash management better than banks were doing it. That's what mobile money is. It's cash management. Even if you're cashing in and cashing out, it's digital, but the digital is cash one side, cash the other side. So I feel like James really brought it out. It was a reaction for us to go into the digital space. Now we're trying to say, well, there's actual fruit here. How can we start moving towards that? You won't believe what it takes to, for instance, move a core banking system into a cloud-native operation. And that is primarily because there are some things that were built at a time when I was young enough to be in school, and they're still running on the bank system. So there's such a huge legacy that has to be dealt with. Turning a large tanker is incredibly difficult, and I know it's frustrating. I suppose the best thing for us is that there is actually competition, because now you have another. Before I joined the bank, I was working with Jumo, and when I came for the interview and I asked how many customers the bank had, it was 1/3 of the customers that Jumo had in only 1 year. In 1 year, we had already outpaced them. But when I looked at the profit margin that the bank was making off of the customers, I said, well, maybe I was in the wrong business. So, I mean, you can imagine it's switching someone over to something that's more risky, and you're saying you're going to get the next customer. One of the questions that was asked was, why is the interest rate so high? It's because as you go deeper into the population, you have such a thin file of understanding of who that person is, that every time you lend, the risk of you not getting that money back is much higher, and the cost of you trying to retrieve that is so much higher. And the decisions are not just made by the CEO. I know sometimes it's quite crazy. The CEO seems like they can just wave a wand and something happens, but there are layers and layers of controls. There are layers of making sure that the institution will survive the decisions that one individual makes. So I think I appreciate that frustration, although I do see that the movement towards making those changes is happening. And the biggest one, I'll say, is the application of data. We haven't talked about it as much here, but for instance, now it's possible for you to go down to the granular level to see what behavior Joel has in an ecosystem so that I can get a service. But that means that the kind of products that we're selling, it's not just pushing them, it's then causing those products to be changed. So there are so many things, Tina, that have to change. And I suppose it's a good sign that they're bringing in outsiders to try and make those changes happen. Hopefully my children will see some of the result of those things. For us, we're probably the generation that's seeing that change and that overhaul happen. All I'll say is for the Bankers Association, for instance, to move towards agent banking, to me was, such a huge move. If anything, I'm even looking at Jabel here, one of the things I dream of is I could go and cash in my neighborhood bank, and someone who's in South Africa can cash out. Because as much as we're looking towards becoming cashless, the fact is most people on this continent are not paid digitally. Most of us, our money starts as cash. So if we build something that's meant to have fully digital, we are sort of going the other way around. It's still a cash-to-cash thing. We have not yet solved that area. So to your point, I think more people speaking up like you and being frustrated makes us hot under the collar and forces us to make some changes. They're happening. It's probably not at the pace that is going to make everyone comfortable, and probably that's why competition is such a good thing, because no one will cause us to have sleepless nights like competition that's getting numbers. Like, listen to Zofi, for instance. They're doing things we should be doing.
Thank you, Joel. I think that part of the solution would be new models. I think you've spoken about the fact that the banking model has largely remained the same at the core. So being able to create new models, being able to interact with customers, particularly at the last mile, is important.
I wanted to contribute a bit to that.
Go ahead.
3 years ago, we pitched the opportunity for digital lending to VSLAs to one of the banks. And it, no, I can't name. And it took 2 years for them to eventually come through. They did eventually come through, which was the good part. But what we learned throughout that journey really was that there's still quite a lot of knowledge gaps between fintechs and banks. And it's not even that they don't see the opportunity, they don't see value in these types of collaborations. I think it's really that there's still a lot of unknowns about the dynamics of fintechs from the banking side. And there's also quite a lot of unknowns about the dynamics of banking from the fintech side. And I think that it would be useful. I think we have a common agreement that there is real opportunity in collaborations between banks and fintechs. I think that as a next step, it's important, if banks are really interested in these types of collaborations, it's important that they have someone internal dedicated to exploring these opportunities and actually getting these partnerships closed. Because my experience has been that you start conversations here, with the CEOs and senior management, and then they pass it on to, let's say, the products team. And that's where it dies. So I think it's really important that banks have someone that makes it their responsibility to source these opportunities, to assess the market and see which fintechs are a good fit for the bank, and to make sure that those partnerships actually happen, to talk about business models, talk about pricing, to talk about security. And it helps when this person actually, like Joel, has been on the other part. So that was my experience, and I think that actually will help, quicken a lot of these collaborations.
Yeah, every bank clearly needs a Joel. The last question.
Good afternoon, everyone.
Good afternoon.
Thank you so much, moderator. I am guest to be here because two of my OGs, one that I am seated next to, and the other who is a previous question asker, Christine. It's been an exciting moment for us. My question is really for Gerald. You mentioned that you work with VSLAs, and a lot of what you do doesn't really require a bank account, which I know that with telcos has been done, but I am curious to know what your automation of operations looks like and how you're able to meet risks therein, especially with this non-formal of operation. Thank you very much.
Okay. Gerald?
Yeah. Thank you very much. So bank accounts are important. It's important at least that the VSLA itself is formally banked. I don't think it's necessary that every single individual in the VSLA must have a bank account. It is possible to still bank them by recognizing that the VSLA is the primary way that they bank and do collective banking for them, where all you really require is a single bank account. And what we've done is to build the infrastructure that allows that particular VSLA to be integrated to the formal banking system and enable them move money to a bank account of their choice. But also, like I just mentioned just a moment ago, we also have partnered with a bank here to do digital lending to VSLAs. So typically, we don't alter the VSLA's operational model. We don't alter how they make their lending decisions. All we do is use the data that's available to us from the VSLA platform to provide credit to the VSLA as a group. And how the VSLA lends that money to their members is entirely their business. The loan is really group collateralized, right? So the individuals in the group are responsible for making sure that the repayments happen. Now, like I said earlier, it took a really long time to get a bank partner on board for this particular product. But the results have been amazing. The product has been running 18 months now, and per 30, month by month, has stayed at 0%. I think those are the kinds of, those are the kinds of examples that we hope other financial institutions will see opportunities from.
Okay. That's very interesting, Gerald. We see that your credit ratio is better than for most banks, so maybe there's a real opportunity there. I see the MC wants to take over. I'd just like to thank you, gentlemen. Though the gender balance was not right, but I believe you have done justice to the topic. Please join me in giving them a round of applause as they take their seats.
So Richard, thank you very much for engaging these gentlemen. And gentlemen, thank you very much for such a detailed conversation. We appreciate your time in this. So, I think I'm going to, I can see depreciation happening in real life here. The faces, some of us are beginning to nod even without any questions. You're like in approval, but it's totally acceptable. So can I request us to be upstanding? Now, I will not do what people normally tell people, spell with your bodies. The last experience I saw was not exciting in terms of, and I'm not very good with this. So this is what I'm going to do. I'm going to ask you to move, count 10 steps and talk to someone for 1 minute. 10 steps. Move. And please crack a joke. I want to hear some laughter in the room. So move. 10 steps. 10 steps. People are moving 1 step. Can you imagine? Okay. Hello. The next instruction. Hello, 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 hello. Stay where you are. Stay where you are. Next instruction. Okay. I want you to stretch in this direction. Make sure you have enough space. Stretch, stretch. And then move to the back. Move your hands to the back. Stretch. Stretch. Hello. Stretch, stretch. I see people discussing and exchanging business cards. Guys, we are stretching. Stretch. Okay, to the front. To the front, to the front. Okay. If you want to primary, touch your ear. And then the next one. Then you can pull your head. Make sure that the neck is still intact. Then the next one. Let's take our seats. Now, sometimes when you want to see who will be your next boss, you can only tell by how people respond to instructions. There are those who didn't move an inch, but people walked to them. Clap for yourselves. I mean, if you moved, you didn't move and people still found you and you had a crowd, you are definitely our next CEO. If you're not yet one, then you're sure going up for something great. But we are on to our last panel, and let me invite again Maurice Mujisha to come and take it on from here as we bring this to a close. I also wanted to let you know that, and to clarify, that the training session tomorrow has received overwhelming registration. And so registration does not guarantee attendance. The Secretariat, with its powers, is going to communicate to those that have made it because there were limited slots. And so, like any of these things, there are terms and conditions. Apologies, we didn't indicate the terms and conditions, but I'm now notifying that if you don't receive the email, we are very sure there will be those that show up, even when they have not received the email, but attendance will be purely by confirmation through email. And so if you have registered, thank you very much, we appreciate it. But because we could only accommodate 80 people, we are going to look for the 80 people. We had over 200 people register, which shows significant interest. But also that is an opportunity for us. In September, there is another conference that is happening. That is the TICON Africa, the Confederation Conference that is happening in September in Entebbe. This cybersecurity, and there will be master classes as well in that regard. And there will be another conference, if I'm not mistaken, by FITSPA coming up around the same, in October. Yeah, October, around cybersecurity. So this is a topical area, and there are quite a number of opportunities coming up. Our encouragement is that if we miss tomorrow, it doesn't mean the opportunity is gone. Let's maximize on those opportunities. Over to you, Maurice.
All right. So I keep standing very far from Michael because every time somebody meets me, says, I think you spoke at a function where I was, and I say, well, that's not me. And half the time they say, I think I've put on weight when they are measuring me against him. Somebody told him I have lost so much weight. They thought it was me, and then it was him. Yeah, but that's, we are now used to it. So I have to always ask, where exactly was that? Then I say, that's my brother. So we'll quickly move to session 4. I really hope we'll keep you awake because a lot of data, the information, and probably technical language, and I'm hoping my panelists do not make it more complicated. So I want to invite our panelists, and I really want to appreciate the Bankers Association for making sure all the panels are gender sensitive. This was really excellent. But I'm told it's gender sensitive, bordering on more male than female. So I think Wilbrod will try to do better next time. May I invite the manager for cyber and intelligence, East Africa, MasterCard, Ms. Diana Majimbo. Round of applause, ladies and gentlemen. Mr. Ronald Azaire, Managing Director, Pegasus Technologies Uganda Limited. Mr. John Patrick Okiring, CEO in Fortify Uganda. Please come. Round of applause, ladies and gentlemen. And finally, Frank Moller. Frank Moller is Managing Director and Head of Sub-Saharan Africa, PBC, one of our sponsors. Please welcome him. Round of applause, ladies and gentlemen. All right. So, lady and gentlemen, quite the conversation this entire day, and everyone at some point, every single session at some point did touch on cybersecurity. But here we are talking about the role of the ecosystem participants, which is who you are, in managing fraud and cybersecurity risks. And allow me, I think, begin with Patrick. But maybe let me begin with Frank. Frank, you had a presentation you want to show us, and I don't know if while you speak, the technical team will show this. Regarding the scale and complexity of cybercrime in Uganda, is it increasing, and do you believe the adequate measures are being put in place by our regulators and by government? But I know you have a very interesting highlight you wanted to show us on the screen.
Thank you. Thank you. So Frank Moller is my name, the Managing Director for Banking, Payments and Commerce, that is BPC, headquartered out of Switzerland. Really, really excited to be here, and thank you for that. So when I was coming in yesterday, and I decided I always want to keep myself abreast with the local dailies. So I picked a daily, and I saw some very interesting insights. So maybe the production guys can just put it up on screen, and I can, you can see what exactly I'm talking about. It was a report from FIA. I don't know how visible that is, but I'll quickly tell you how dirty money is washed in Uganda. And if you can look at that, it's talking about money laundering sector risks rating, right? And it starts from real estate, there is dealers in precious stones, money value transfers, virtual assets, mining, fisheries, forex, microfinance, private money lenders, banks are there, casinos, lawyers, circle, insurance, security, all the way down. Now, I don't know how many of you read this yesterday. Just a show of hands. Did anybody come through this newspaper? It's a local newspaper. And I think one of the things Dr. Twine was talking about is knowledge, is how do we keep ourselves, ahead of knowledge and information. And this caught me thinking, the content I'd carried to come and speak about just changed, and I had to align it to this. So, ladies and gentlemen, that is a true fact of what you have. When you talk about collaboration, there's a whole list of information that you have, but how are you using that information? You're seeing their lawyers there, their circles, their accountants. Where are they playing in this ecosystem as far as fraud is concerned? But I'll tell you something. One thing is, where there is money, there is always fraud. If there's one thing I want you to go with today, as far as fraud is concerned, is where there is money, there is always fraud. And why do I say that? It's basic. To the question he asked me, cybersecurity is going to be the third largest population globally after US and China. Uganda is no exception, guys. It's going to be part of it. So yes, it is increasing in Uganda. It's one of the major challenges that you're going to have. But guys, as you look at innovation, as you look at how you can mitigate around frauds, innovation doesn't have to be sexy. Innovation doesn't have to be that fancy thing that you need to do. No, it doesn't have to be. In fact, the way I define it is innovation is just thinking and acting differently to achieve a desirable goal. Now, again, most of us, what usually happens is we try to fix our houses when it's raining. You cannot fix a leaking roof when it's raining. The best time for you to fix your house is when the sun is high up, as far as fraud is concerned. And there are a lot of things that has been done in Uganda in terms of mitigating. The conversation we are having today, where you have different players and panelists, is one that demonstrates that, yes, we want to collaborate, we want to move together, and UBA, Wilbrod, I don't know where Wilbrod is, somewhere here. Wilbrod, UBA has done an amazing job over the last 7 years. You know, talking about KYC, talking about the agency banking. There's a lot of conversations that is happening in Uganda to make sure that we are able to mitigate around fraud. But is it enough? No, it's not enough. Is collaboration enough? No, it's not. Guys, we've been hearing about collaboration the whole day today. But you know what? You cannot collaborate in absence of processes. I had a lot of people talking about banks. You know, banks are taking this time to do this and that. But do we appreciate that as much as you have to collaborate, there are a process that needs to be taken care of. There's a certain angle that everything needs to be looked at. And finally, what I want to let you know around this space on Uganda and how things are happening, my advice is a number of people always take the railway approach in solving issues, and mostly around fraud. It's a high time we start looking at things from a highway approach. The risk of having a railway approach is you're running on one rail. If the train stalls, you're done. But the moment you get on a highway approach, what happens? You have 6 lanes. One thing is moving, the other one is following, and everything is following. One is on the speed lane, and the others are following together. So as I sum it up, it's more processes have to be there. We have to sit back and collaborate, but let's also appreciate there are different ways to do that. But remember, where there's money, there's always fraud. Thank you.
Thank you, Frank. Again, the profiles of all the panelists are on the QR code in the magazine, the conference magazine. But you won't find Frank's on our panel. It will be on the panel before. We had to import him. Well, he also came from outside countries, but we had to import him onto our panel. Very quickly, Patrick, in your own reading, the scale and complexity of cybercrime in Uganda?
Hi. Am I audible?
Yes.
Great. I'm a bit choked up from a cold. Thank you, Maurice, and thank you, UBA, for having me. So I am tempted to set my own question in answering you. So our footprint, our technology footprint has grown quite fast, but many in that footprint are locked out of the cybersecurity economy for various reasons. Many will, it's out of not understanding the cost of risk that they carry. But even where that risk is understood, especially in the corporate market, particularly the banking or the financial services space, there's distortion. There are all kinds of ideas. There are those who are approaching cybersecurity from a perspective of, piling up on technology, thinking that the more technology you have, the more security you have, and that's creating some fatigue. That nobody's excited to spend. And then there are those who look at governance of security from a point of it's a secondary thing. The business must prioritize bringing in the money. And in the end, they fail to realize that somebody will pay for the lack of security. And as it is, digitalization is very exciting in terms of the possibilities it has created. But the complexity it's brought about and in terms of risk is very immeasurable. And the complexity is even emphasized by the need to integrate new and old technologies. But if I may shift quickly to what I see to be the problem with our architecture, central to a secure architecture is the issue of trusted identities. You must know who you're dealing with in terms of the people in your ecosystem, and you must know the device. What device is this? Who does it belong to? Speaking of the people, we are suffering a broken identity, or rather broken trust in identity issuance. You look at a trust center like NERA and perhaps URSP, they have a challenge achieving an issuance that is perfect. You have broken trust around where the ID originates in terms of the LOC, systems, and that affects accountability. We can't account for everyone that identifies in the system. You have a problem of how we verify. We do verifications. We are using archaic methods to do verifications. I think Dr. Twine earlier mentioned something to do with how one can be impersonated. We have a problem of broken authentication. How we connect is reliant on legacy methods like, a supply of a username and a password. And lately we have a trend of two-factor authentication. But the problem is that they are vulnerable to man-in-the-middle attacks. They are vulnerable to phishing attacks. These are the OTPs, the SMS type of best authentications. Now, all these create a situation where we are exposed to a lot of problems as far as security is concerned. And then we also have increasingly identity theft. It's commonplace today, perhaps unlike a couple of years before when the national ID was not emphasized. It's commonplace for someone to want to take your ID, to use to consume a service. And these are all architectural problems relating to trusted identities. There are a couple of things that can be done. Perhaps I can get into that after.
All right, and that's where I wanted to move to, and I wanted Diana to come in, because when we listen, I'm listening to the risks, Diana, and listening to either the lack of the necessary infrastructure to protect ourselves against this. And I'm wondering, are there adequate measures being put in place? And what can the financial institutions here in this room do to be able to protect, first of all, their institutions, but also their customers?
So good afternoon. I think in terms of what has been put in place, there's so much that has been put in place in some scenarios and not in all. I agree with what Frank was saying, where there's money, there's always fraud. And Uganda being not an outlier in this situation also has put in some significant investments. So for me, what I would say in terms of how organizations can prevent or just work around or mitigate this fraud is by looking at this in twofold. So one, inside out. I mean, from the inside, what are you doing? Are your staff appraised? Do they know what is happening? When they receive an email and they don't know the source of that email, there's a link and there's an emergency, click on this link. Are they quick to click on that link? Other than that, have you done as an organization the risk analysis? And I'm talking about proper risk analysis, not that one of just there's an Excel sheet, there's a box to tick, but proper risk analysis, looking at the residual risks, putting in mitigations, mechanisms and all that. So there's ways you can do that. And as it has been said here also, it does not have to be complicated. It could be something as easy as do not click on this link. I mean, you can do phishing simulations. If you see, the organization can just try and bring in a culture of people not being able to just click on links carelessly. So phishing simulation is one of those things that can be done. Other than that, I think there's also the approach of from outside in. I don't know if you guys followed. 2 weeks ago, we had a fraud attack in most of the government institutions in Kenya and even in mobile money networks. And there was denial of service and, everything was at a standstill. And that shows you how reliant we are on some of these digital services. So in such a situation, then organizations need to have come up with mechanisms of protecting themselves. So who is your partner? Who are you plugging into? We are talking about collaboration, you're talking about partnerships, but some of these people you allow to plug into your systems are the risk. They're the ones who are bringing in the risk or, just enabling the channels for bad players to plug in. So we need to work on, first of all, vetting who are your plugins. And at MasterCard, we have a solution called Risk Recon that is able to help you know who is your plugin, what are the potential risks they're bringing in. And with this risk that we've identified, for example, they've not patched their system in the last 365 days, then what is the way forward? So you're just not seeing what the potential risk is, but then also giving you a way of mitigating that. So that's another way, just look at your plugins. Number two, I think we also need to have large-scale education on just the exposures that people are onto. So not even on the fintech level, but even on individual levels. So if you get an SMS and there's an OTP and somebody calls you and they're like, please give me this number and all that, you need to know how to just be abreast with that and take charge of that. So for me, in terms of how we look at it, is inside. What are the staff or the team or the organization itself putting in place, and then now looking at how to plug into organizations that can give you the capability and not really expose you to more risks.
All right, and I'm really happy that Ronald is on this panel because as a fintech, as a financial service provider, I think not so long ago you had a hit, and you're the perfect example to have on this panel because you've experienced this firsthand. Have we done enough, first of all, to curb ourselves from future attacks like that? Or is this, work in progress? You continue building the necessary infrastructure to curb the risk?
The short answer is, I don't think we ever really do enough in the sense of to stop it altogether. Again, most of my predecessors, and especially what Frank said, a lot of the time we concentrate on the technology. And let me give you an anecdote on this. Recently, I think as early as recently as last week, there is a bank I'm supposed to partner with on a certain product, and they sent their team ahead to come and do their 3PP, that's third-party participants, and they were all about the technology. What do you have in place in terms of technology to make sure no fraud occurs? And of course, we went back and forth, and they upskirted us and checked everything to their credit. Now, the irony is I found out about 2 days later that the same bank had hired 2 of my former staff who essentially had let go of because I suspected they'd been involved in a fraud. So you see how we focus on the technology and forget the people, and we forget the processes. So it's people, processes, and technology. And a lot of the time we put emphasis on the technology. Do you have an EDR, endpoint detection and response system? Do you patch your systems? Do you have firewalls? Do you have, when was the last time you did a penetration test and so on? And all of these things are good. And that's why I said you never really do enough. But we forget that the biggest cause right now of any risk are the people. Do we vet the people we hire? I mean, I don't know why that bank could not take a telephone call and ring me and say, these people worked for you, under what circumstances did they leave? Or anywhere else they've been, because they've also worked for another company that ultimately was hit and ultimately closed down. So the problem is that we are focusing too much on the technology, and that's not a bad thing, but we forget the processes. How does a product work? How is information exchanged between parties, like she was saying? Emails, email phishing attacks, and so on. Do you sign your traffic as it goes? Is it encrypted over the network? What's your method of connectivity? Are you connecting over the network? Do you have a VPN? Do you have a leased line? So the threats are nearly in every sphere of the operation, from the time a transaction is initiated to the time that it does what it does. But let me also step back a bit. I was speaking to a cybersecurity expert who was doing forensics on one of the players recently in the market who was hit. And he said in the early years, the hacks they saw were usually from people outside taking advantage of infrastructure and so on. Said increasingly, we are beginning to see a trend where internal staff are involved. And that's a bit scary, because what happens when someone breaches your perimeter wall? If you had threats from outside your house, you could put a wall fence and raise a wire and buy a dog and get a security guard. What happens if it's your wife that wants to kill you? So, and that's a very scary thought. So, Maurice, have we done enough? Yes, in terms of technology, yes, in terms of processes, but there'll always be a problem of what happens to the people that we employ.
I see where you're coming from, and you talked about the wife, and then I remembered there's also the house help, yeah? Yeah, and then there was always the challenge of the insider lending and all that. Anyway, Diana, let's move to what can be done, recommendations, proposals, and you have all these layers. So you have security, which is where you have police and CID, then you have, are we safe? And then you have prosecutors, that's the DPP's office. You have legislators, the members of parliament in terms of legislating the necessary frameworks, and also the courts of law, the judiciary. What would you recommend to be able to provide the necessary safeguards for the industry?
Okay, so I will speak from,
yeah, it's okay.
I'll speak from the MasterCard perspective in terms of just engaging with all these bodies and institutions. So we are working in very close collaboration with governments, with all these bodies that you mentioned, the police. And what we've identified as a gap is mostly knowledge gap. You know, it was earlier said that, you know, from the ATM season, the next thing we went into is digital, and we are still struggling with it. So most of the bodies or the government institutions we are working with are kind of stuck where they were. So we are working together to ensure that, you know, we are bringing them up to speed in terms of, first of all, capacity building. And I'll give an example of what we've done in East Africa. We have worked with regulators and, you know, just offered them trainings in terms of, you know, blockchain and crypto. That's a new space. And they're looking at regulating and, you know, just coming up with papers and documentation and laws to put that in check. But most of the times we've identified that there's a gap in terms of knowledge. So in terms of our engagement and what can be done is, one, build capacity. Now, the other funny thing is, yes, you've trained them, you've empowered them, they know what this is, they know what the risks are, they know what their exposures are, but then what? So what you're also doing is giving them the tools and the systems to be able to do that. So we have CipherTrace, which is one of the solutions that we're giving the investigators and the fraud teams. They're able to go in and check, yes, this person has come in and they've been defrauded, let's say, X number of virtual assets. They're able to track that. So we're giving them the tools. Other than that, we're also giving them the solutions. You know, it's one thing to identify a gap, it's one thing to give them the tool to use, but it's also another thing to work with them. So we have tools that we've given government institutions, like in the industry, in the tourism industry. We've given them a payment gateway, because previously the issue was, you know what, money is being stolen. As where there's money, there's a thief. So we've given them the systems and the capabilities to be able to collect that money and just channel it in the correct way. And, you know, also working together in terms of giving them collaborative spaces to do marketing. We are partnering with them. We are like in the tourism industries. We are branding. We are using the Ministry of Tourism and marketing our country as a destination for tourism. So we are not just telling them what to do, but you're giving them the knowledge, you're giving them the tools, and you're also working with them towards that. So that's just an example of what MasterCard is doing and what we will keep doing.
Patrick, speaking to the same space, and I want you to link the answer to what Ronald spoke about, the insider risk. So, you know, you can have the necessary tools, you know, MasterCard is speaking to, and these are really excellent. They've gone a long way in supporting the infrastructure that the government needs and the different institutions need. But, you know, like everyone says, technology keeps evolving. Anyone putting together this technology will always leave a gap somewhere for a rainy day, going by the old, you know, the old adage. What interventions are you then proposing, you know, as techies? That's the language you people like to use, as techies, to be able to then protect the institutions, but also protect the customer. If you look at the Kenyan challenge they had recently, because this was across the board. How do you build those walls? Because we are used to these walls you're building for outsiders, but you're not building the walls for the insider who is able to also hit you.
I will take advantage and belabor the point of trusted identities. It's important that you can identify the people involved in your okay, I'll use the broad word being thrown around, the ecosystem. People exist either as customers or as staff and third parties. So you have to adopt a more effective identification mechanism, certificate-based particularly PKI. It's very effective in identifying, in being able to attend to processes such as authentication, authorization, or verification. You're able to use more effective options such as maybe facial verification if you're trying to, you know, process a request, as opposed to a scenario where someone has to just look at your physical ID, and that can be, you know, manipulated to steal, you know, one's identity. So an effective identification mechanism, a certificate-based, would be very helpful in helping to identify people and devices. It's important to look at things like, you know, practicing safe, secure, you know, code life cycle management. Many times as techies, if I may borrow your word, as techies, we are so in love with what we've built, and we don't subject it to rigorous tests. It's important that for code, you're doing the right security tests. Traditionally, people have focused on functional tests. It's working, that's all that matters until there is an issue. So security tests are very important. Code signing, again, that is a method of identifying that the code is coming from the right source, and firmware, you know, signing, an update is coming from the right source. Again, there will be a way in which the trust, the inbuilt trust element helps to ensure that the ecosystem is functioning from a point of we can identify who the source is, and if there's an issue, we can account. Those are some of the key things that can be done. But as far as the other actors is concerned outside of, say, the enterprise. You have government, for instance. I've seen there is a campaign, I think it's called Vera Steady. I think it's an attempt to take the conversation to the community beyond the corporate marketplace. This helps in creating a sense of awareness and personal responsibility. Otherwise, we are dealing a lot with scenarios where people willingly give out their identity and it's manipulated, or rather it's used in perpetrating some of these incidences we're dealing with.
All right.
Such campaigns should be emphasized in the community.
Okay.
It will help to bring about more accountability and more personal responsibility. And then there is also the other aspect of strengthening the trust center such as NERA. That can be an effort where, say, an entity like UBA can be a voice for the ecosystem, engage, the state, the security state, to look into what happens when somebody begins the journey to acquire an ID. How can more responsibility, how can more accountability be brought to that origination to ensure that you don't have a Congolese claiming he's occurring. That fails accounting, it fails non-repudiation. You have a scenario where nobody knows who was responsible for an incident.
All right.
And the last I checked, ghosts do not participate in this ecosystem. It's always people or devices. So trusted identities is a very key element of a secure architecture.
All right. I will come to some point, and I would want everyone to share with us, in their own, with their own expertise around data protection and how that can be managed. But I'll come back to that when we pick some questions. Frank, I want to come to you on lessons we can pick from other jurisdictions in regard to the cyber risk and how to manage that. What are the others doing, and how is that going for them? And if it's working, why not pick it and use it here? What is it we should be looking out for?
Yeah, and thanks for that. I really want to contextualize this. Guys in the room, I know we are among the last panelists, but let's have your heads up. I know you're checking on your phones, and I'm sure you're not checking on us online, right?
They are probably checking on the cyber risk on their account.
But I want to give you guys an example of when I like contextualizing my conversations. So yesterday I came in and I was talking to one of the guys at the Serena, and I was asking her, what's your best mode of transacting? And she said she can't use her mobile because the last time she went to an agent, the agent told her, there's a push transaction, and then she has to put her PIN, and then the agent told her, well, I haven't received the funds, but on her phone they've been debited. Then they tell her, you need to go and maybe check with your telco. She doesn't know what happens. But now, this is something happening in Uganda currently, right? And, guys, I'll tell you, there's no shortage of service providers. Even as BPC, we have a range of solutions, from fraud solution, card management, switches, marketplaces, and all that. So you'll never fail to find a service provider. The conversation now needs to come. When I learned what this lady was saying, I had to take a step and ask myself, what really happened? And so I had to educate myself. And interestingly, when I was talking to one of the people in the ecosystem, they told me what happens in Uganda is the agent has two phones. One is a featured phone, the other one is a smartphone. So what do? They show the client the featured phone, but the smartphone is hidden. So when she's giving the numbers, the guy is typing it on the smartphone, which has APIs and all that stuff, pretending to be typing it on the featured phone. So once she gets a push notification, it doesn't come from the telco, which is a featured phone, but it comes from the other one, which is a smartphone, which is a fintech. So what happens? The funds go to this other app, and then she shows the lady, I've not received your money. And what does she do? She has to go back and think. But the thing has really happened, right? And these are things that are happening. So what do you have to do? You have to expose yourself to the fintech world. And that's the absolute truth. I mean, the panelists were discussing on, Maurice, the collaboration part, and these I just want to give you guys a summary. Before you collaborate, you ask yourself a few questions. And guys, remember, as a takeaway, when you start your fraud conversations, please start with where there's money, there's fraud, and then continue. That's the base. Where there's money, there's fraud, then continue. But also remember, when, Wilbro, Patricia, everybody else is busy organizing these seminars, fraudsters are part of us. Guys, every time we talk about we need to leapfrog and move to the next technology, they are listening. So we also need to be very, very careful into these conversations. But what do we need to do? Number one, and these ones possibly you need to write them down. How do you deal with human resource onboarding? How do you hire? All right. Number two, what roles do police and jurisdiction play in the fraud ecosystem? Number three, how are MNOs addressing SIM card recycling? Number four, neglected controls. Who is to blame in your environment? Number five, did you know that you cannot do fraud prevention without proper controls? A number of us run for fraud solutions, but what about your controls? It has to start with you. Number six, I've already talked about it. Are you aware fraudsters are the same people in the industry? Number seven, do you know that focus needs to be more on the deterrence more than the recovery, right? And then as we close, do you know your enemy? Now, we all talk about KYC, and I like that conversation. Know your customer, know your customer. But guys, do you know your enemy? Now start talking about KYE. These are some of the conversations that are happening globally, regionally, and I think we should embrace them in Uganda as well. Thank you.
All right. I want to open this up, and I know there's a lot of you who've probably had your own experiences when it comes to fraud and cybersecurity risks. Quick questions. Yes. Microphone here, microphone there. I also want to be gender sensitive in taking questions. UBA has told us to be gender sensitive.
Thank you very much. My name is Emmanuel Chagara. I'm the CEO of Milima Security. Milima Security is a cybersecurity company based in Kampala. I have a question and also a small experience to share, which I think, again, also the members can comment on. Now, let me start with the experience, which is also some sort of guidance to the members in the room. I like what Ronnie raised, the issue around people, processes, and technologies. It's very critical. Very often, we apply a lot of effort to technologies and ignore the element of the people, or rather the processes as well. Although I want to throw the armor back in the works, especially on the discussion of technologies. We have had the privilege of investigating several cases of these cyber frauds within the banks and fintechs. One of the most interesting experiences I've seen in recent times, with about 4 separate investigations, was down to poor coding practices. Now, I know that in recent times we have been pushing for Buy Uganda, Build Uganda, which is I'm fully in for it, otherwise we would be out of business, right? But then at the same time, to what extent are we applying the necessary controls when it comes to monitoring the product development? I give an example of an incident which we investigated, a fraud that basically was committed by someone who was able to run.
I think they'll get you another mic. This mic must have run out of battery. Or somebody hacked into it. Anyway, since we're talking about cybersecurity. All right.
My English was too heavy. The thing was fearing. Yeah, so in this particular incident, we have a system, a core banking system that has been built locally. The code is entirely available in the Git. And someone who could do a Git repository recon was able to get API keys, which were the actual API keys that were running in the production server. And in mind, 200 million was moved out of the system. This was done through an aggregator in the middle, a fintech. A separate incident where there was hard-coded passwords everywhere in the system, okay? We all know, I like the way Diana is shaking her head. Hard-coded passwords were everywhere in the system. If you ran a basic wget on Linux, you're able to pull down the entire PHP code script and get all the passwords and run a basic API attack, and you're able to pull out the money. All of these were simple, basic negligence, mistakes that could have been avoided if there were efforts towards penetration tests or even just security by design development processes.
I may also want to pose the question, is that
No,
the
no,
institution...
I'm sharing an experience.
No, I may want to also pose a question around
Yeah,
that with the
yes.
experiences.
Go
In
ahead.
your view, would that be negligence on the part of the institution, or in terms of wanting to save money because there were options on the market that could have made them safer?
So first, we
Or was it boo-boo? I don't know. I mean, it's up to you.
No, it is not a blame of boo-boo. Even a white man can make the same mistake. The thing is that institutions are quick to push out products without efforts towards security analysis. And I think Patrick mentioned it. Yes, we may talk about penetration tests, but I'm also saying that over and above penetration tests, we need to think about security by design from the ground up. These are principles for most of the products that we build. We only think about security as the final exercise. All right, so we have checked the functional requirements are in check. We have seen that the user acceptance tests have been performed. Oh, can we please do a vulnerability assessment? Then we run a final vulnerability assessment, run a penetration test, product is ready for the market. At that point, even if you came across certain vulnerabilities in the system, you can't tear down the entire software. No one has that time. You probably built it for a full year. But if at the beginning of the development phase, you had integrated the security team at the user design level, at the functional requirement level, initial modular development, then we go to the integration, all the way to the final rollout of the product, I can guarantee you, you will have minimal to zero security weaknesses of that nature. Yet we see that some of these, you see, guys, I don't want you to undermine Ugandans. Ugandans are hardcore hackers. Sometimes we have the mindset that, oh, these are white people, these are guys from maybe Eastern Europe who are trying to hit us. There are boys at Makerere there who can do crazy things. They are able to pull out your money. Recently, we worked closely with CMI on arresting a group of hackers. These were boys based in Chira. They were hacking fintechs upside down, but they were all locally. These are boys from Makerere and all that. So let us not imagine that these hackers are far-fetched. But what I'm trying to drive to is security by design is a concept that we should bear in mind while building our products.
All right.
Thank you.
All right.
And then secondly,
Yes.
just one more.
Yes, very quickly.
So the question, this one is a question, and I'm happy that Mr. Yeko is still here. I would want to understand the efforts from the MNOs in averting the ongoing threats, especially all the money that we have seen are cashed
Yes.
out through SIM cards.
Yes.
2,000 SIM cards have moved out 1 billion shillings. What are the efforts that the MNOs are doing in this area?
All right.
Thank you.
So please, Ayeko, you'll come to that. I think there was a question there. The gentleman with a red tie. Ayeko, from there I'm coming to you. So
Good evening. My name is Waswa Moses from Swift Minds. Majorly a human resource. I've had a whole panel talking about human resource. Okay, my question is, there are times when we do online payments, yeah? For example, you're buying a car from Japan, you're buying something from, using your card. I think the only bank where I've seen they even call you to confirm whether it's you, it's StanChart. The other banks, in most cases, it's one-way traffic. Because, once you put in and punch in your numbers, sweet, your money has gone, and they even send you a message. A transaction XX has happened. At what point do banks really double check? What are those, what point do banks check that is it our customer that actually is transacting? There's only one bank that actually I have proved that they actually call you and ask you, are you the one transacting? They take the other banks have used. Yeah?
All right.
It goes through, and some time back I actually lost money, and I don't even know how I lost it. It was about $100.
All right. And I keep hearing this, especially for people who have subscribed online for either, if they're on not Android, iPhone. You iPhone people. Some of us are on Android. So you iPhone people who subscribe for music and all these things, and then you forget it's an annual fee or... Anyway, Momo, do you want to speak to that? How much are you doing to secure your clients online?
Thank you, Maurice. So the name is Diego.
Yes, Ayeko and Diego. We were trying to own you, in our own way.
Yeah, so that's a very good question, my brother. We have learned some lessons in the past, very tough lessons. I think the biggest lesson we learned was in 2020. We have since put in place very stringent measures. Today, if you went to buy a SIM card, you wouldn't have a limit of 20 million or 15 million or 10 million. So we have what we call an onboarding profile. Initially, a SIM card, a new SIM card, because we noticed most of the cashing out happens on the newly acquired SIM card. So that was, a weak link. So we decided to internally, set a threshold. For any new SIM card purchases, you will find that the limit is much lower, probably about $1 million. So you wouldn't buy a SIM card and then take out 10 million the next day. So there's a process we go through. We've also put in place a monitoring mechanism to detect unusual behavior, unusual activity on that SIM card. So for any unusual patterns, we automatically block these lines, and that's why you've noticed that from way back in 2020, we have really minimized in terms of how much can easily be taken out of the agent outlets. I think the highest we've seen so far is about 82 million. Even for something that would have been in billions of shillings, we do detect them quickly and then, get these accounts blocked. We also made an enhancement to be able to control any SIM swaps. We have the SIM swap API that we then integrate because we noticed the fraudsters would go beyond the mobile money wallet but attack the bank account because the bank account is linked to the SIM card. So to again protect the bank account, we've been able to develop the SIM swap API, which we then integrate with the banks to be able to send an alert that there's a SIM card that has been swapped, this number has been swapped, and therefore, can you block mobile banking? So another control in place, you cannot swap a SIM card and reset its PIN the same day. You would have to wait for 48 hours. So all these controls have to be put in, we have to put them in place to be able to protect the funds of the customer, whether at the bank side or on the wallet itself. But the most important one is the awareness. We develop new products, we bring convenience, but the fraudsters get to know how they work much faster, and therefore they hit on consumers who are not yet aware. I'll give you an example. Previously, you could send money through one long string. You dial *165, *1, *1. You just dial one string and put your PIN and the money goes. That was a fantastic shortcut for sending money because imagine sending money going through 6 steps. So as a way of getting innovative, we felt we needed to come up with a shortcut for the consumer to send it more conveniently but faster by doing a transaction in one step. But the fraudsters they moved much faster to then call the consumers who are not yet aware of it by telling them, I mean, most of us have received these calls, to tell you to dial a certain long code. You're actually not realizing that you're sending money to someone. But it's actually a P2P journey. So we decided to block the P2P journey. You can't do it anymore. Why? Because so many consumers who were not aware of it were losing money. So some of the solutions we roll out in the market, we believe are convenient for the consumers, but then fraudsters take advantage of them. So for me, I think the biggest one is the awareness. The Better Steady campaign, has given us a lot of traction. The previous one was Tom Ferrer. And I think we've seen these cases really reduce. But the most important thing is we need to continuously drive awareness to the consumers because most of them are not aware of the brilliant things we're doing. Thank you.
All right. Ronald, I'm speaking to what Emmanuel was saying, the controls. How much more can institutions do and invest in to be able to put in place the right controls? Because the examples he is clearly giving is that at all levels, whether it's at the technical point or even at the human resource point, you still have controls you must put in place.
I'll add to both what Richard said and what he asked, what he ended with. Ultimately, money must be cashed out. No one steals money to just keep it in a digital form, because that would be silly. So the ultimate form of cash out is you go to an agent and you cash out that money. And I'm glad with the steps that MTN has put in place. I hope the other telecom or the other platform can also adopt those. However, there's something Bank of Uganda is working on that I'm privy to, where they are going to require that someone cashing out must show ID. And my colleague here spoke about ID. All the hits that have happened, you have someone cashing out from 12 SIM cards. I mean, like, how is that even possible? Why do we have someone having the ability to cash out from agents, of course, who are also complicit? I do not believe the agent for a minute imagines all these SIM cards belong to this individual. So why don't we put in place things like that? Why does someone have the ability to go to an agent with 20 SIM cards and cash all of them out for a maximum amount? And obviously, the agent doesn't even have the cash on him. So the agent simply takes the money, then runs to a bank, and together with the fraudster, they cash out this money. If we can stop the exit part and make it much harder for the fraudsters to cash out that money, I think that would be a very big win. Of course, now, unfortunately, some other new avenues have come, like using that money in cryptocurrencies and so on. And I'm hoping that we can have an engagement with the central bank to see how we can also stop that kind of thing where money in the digital mobile space in Uganda finds its way into crypto wallets and so on. How can we stop that? Because once we stop the cash out option, then the next option is these guys are going to start going through the cryptocurrencies and ultimately exiting money where you can't find it. So that's a conversation that needs to be had. How can we stop it at the exit level? Of course, the people are also important. Some of the people that we think are probably just doing careless coding practices, some of them are either being intentional about it. Of course, some don't know, and that education can weed out. But we also have a case where the fraudsters are actively recruiting these young coders and saying, you just do this, leave an open door here for me, leave this loophole, I'll exploit it. They have approached many of my staff. In fact, as early as I think 2 weeks ago, I was trying to deal with the National Task Force on Cybersecurity and giving them leads on some of these people who are going around recruiting staff of these entities. In banks, they have a myriad of people in banks who are willing for next to nothing. I mean, when you interview some of these people, someone is willing to get a bank defrauded for 5 million shillings. It's a bit inconceivable, but that's the kind of monies that are changing hands between these fraudsters and the young men who have been recruited to work in these institutions. So I think we need to do a whole lot more due diligence on the people that we hire beyond even training them.
All right. Director McKay, feel free at some point I'll ask someone to give you a microphone to speak to, what BOU is doing because you are very integral in the payment space, and I know a lot of the conversations we are sharing speak to some of the things you want to do. So I'll get a mic to the director. I'll come to you, but I'll first go to Diana. Diana, again, Manuel was speaking to product development. The fact that the banks and institutions need to, at all levels in the product development, look at the loopholes that they are in and work with security teams within the institutions themselves to be able to build, a watertight system. Does that speak to the systems you've developed at MasterCard?
Yeah, so I agree with what you're saying, that from experience, most products are tested, quality assurance at the end of the build. So quality assurance is just like a box to check. So if we incorporate that, incorporate solutions in the products themselves. So for example, I know like AI is the biggest thing that is happening right now, and some of the solutions that are being put out in the market currently, you should demand that they should have AI components in them. Now what AI does is that it's not based on the rule set or the static information that you've built in your solution to be able to act like a risk mitigation, but it's able to pick out data from several data points and build intelligence in-build. And also look at customers' behavioral tendencies. If you've built an app that knows how quickly I put in my password, that knows how I hold my phone, the angle at which I've done it, that knows, okay, you do maybe 10,000 worth of transactions in a month, so anything that falls out of the usual customer behavior then is flagged off as a fraud, or it's escalated to the next level of checks. That will be good because it's going to help mitigate the ever-changing nature of fraud and cyber attacks. Fraudsters don't sleep. The same way you as developers, you as builders are constantly looking at how to get this product quickly on the shelves and how to build it to offer the services you want. They're also looking at ways of penetrating your system and just causing you harm. Some of them don't even want financial benefits. They just want to show you, you know what? We got you. We'll penetrate your system. We can do this. There's no financial benefit or implication out of it. The other thing is that, just be aware of the data that you allow to be, pushed out from your builds. So look at how you protect customer data that is already inbuilt or already taken into your solutions. So those are things that you need to work on. AI is the best things that we have right now in the market. And I'm proud to say that most of the solutions that MasterCard is actually offering now is AI-based. And, we are looking at you as an individual, not we are not looking at standard rules. Don't do this, check this, check this. We are looking at how you do your transactions, just your personal behavioral tendencies. So I think that would be good if you want to have a foolproof product development end-to-end.
All right. Director Mackay, I was told you're giving the closing remarks, so it's okay. You can handle my issue also in your closing remarks a little later. Frank, let's speak to the issue around, and I like that she's spoken to artificial intelligence and how using AI, you're able to detect the fact that it's somebody else and not me who's actually logging into my system at a given hour. But I'm also mindful that a lot of the time we think the hackers are, when we go to bed is when they wake up, because for them they don't sleep, like you said. But Frank, the issue around data privacy, data protection, the big elephant in the room, I know we're doing our bit on the regulatory front, but there'll always be loopholes, especially, and listening to our previous panel, where we are our own problem and our own threats because of the amount of information we give and provide on all the platforms. So we have all these platforms, we register, log in, provide our data, but the same data is actually what is going to hit us later, and they are using against us. How much would you want us to share, and how much can institutions protect us from this, market where we throw all our information and we are hopeful that somebody is protecting us, and yet we've literally provided all the information that the hacker needs?
Yeah, thanks. I think I'll still insist. Let's focus on deterrence more than controls. Because, if you have a deterrent and you think of about a country that wants to go to war with another country and here they have nuclear weapon, you have to think twice. Because there's something they have which if they unleash, you're done, right? So it's the same way we need to think about it. If somebody commits any fraud, if somebody commits any data regulations or the deterrent, the penalty has to be so heavy that whoever is thinking of doing that, even before you get to controlling yourself, you're going to think twice. So number one, from an institution perspective, as much as we're talking about controls, it is good to have controls, but how are you deterring the behavior from recurring? It has to be a very heavy penalty. That's on the institution side. On the consumer side, it's unfortunate, Maurice, that as much as you're going to tell guys, don't go to these websites, don't do this, don't key your information here, we still do it.
Don't log into freebies. You know the freebies that come to WhatsApp.
Yes,
Yeah.
we still do it. And you see, that's where we call something called liability shift. The banks and all these other players will do their best to protect you. They'll have all these fraud tools, they'll have one-time passwords, they'll have two-step authentications. But my friend, if you decide to go to a channel or a website that does not have that, you just have to bear the brunt. So again, as an end consumer, we can say ignorance, yes, but it is up to you to also take up the responsibility of your card details. I'll give you an example. Today you go to Instagram, you put your names, the way they appear on your card. You go to Facebook, there's your name and your address, your PO box. You go to Twitter, you've given them more details around your physical address. When this person gets your card, they have everything to transact online. So again, we need to be very careful what we share out there because the banks, the fintechs will do it up to a certain point, but it is also up to you as an end consumer to play your part. And I think as I close, I'll always say, where there's money, there's always fraud.
All right. Patrick, your takeaway?
There is an aspect, obviously the subject is very broad and we can't cram everything in here, but apart from the issues of behavior and accounting, and there's also the reality of cost. Cybersecurity seems expensive, or at least comes off as expensive. For the most part, the solutions are understood to be coming from out of the country. And we've also not made it easy. Most of us in the trade, we simply do brokerage. You will go to the big boys who are providers of technology and come and we are selling technology to our customers as opposed to selling security. So in the end, when the overhead is passed on to, say, a fintech, it's not within reach. So I think there needs to be a sense in which we invest in first of all, building local content around solutions. And I think many of us are a bit lazy to do that. We would rather go get a finished product and even misrepresent the product to mean security to a customer. So there needs to be some work done to build local content, and of course that will require support from the entire ecosystem. The problem we have also is that if I take an example of the financial services space, the tendency is everybody has the appetite to buy the finished product. Nobody wants to nurture a solution. And in the end, we find ourselves encouraging a scenario where people are simply brokers of products. So taking a step, rallying everybody to begin building local content around these solutions will help us to bring those that are locked out of the cybersecurity economy because of reasons of cost.
All right. Diana, I have 20 seconds.
Okay, so for me, I would say, in as much as you're trying to offer customers or people who interact with convenience, we should also not, because the challenge is when you give more convenience, you're losing out on fraud prevention. So for me, what I would say is we need to work on a way that, yes, you're giving you convenience, but you're also protecting you, protecting your data, and protecting even the transactions and the organizations you're working in or doing that transactions for.
All right, Ronald, you have the last 10 seconds. She saved us 10 seconds.
I'll save you the other 10. Again, people, processes, technology. Just those three. Look at those. The people, please, the people. I'll say it again. So the people, the processes, the technology. Just look around that, and pretty much that's where everyone will play to get into your system.
All right. Ladies and gentlemen, a round of applause for our panel. This is a really broad space, and I think the Bankers Association should talk to Yego. He could sponsor a longer conversation on fraud and cybersecurity because he's a beneficiary of that. But I like the conversation we are having, and I noticed, I think, Patrick's profile may not be there on the barcode. So Patricia, let's see how to provide Patrick's profile. He's the CEO of Fortify, and so you want to, what do you do anyway? Beyond just being the CEO.
We are, thank you, Maurice. We are a cybersecurity company, and our proposition caters to the all the three aspects of security, that is architecture, implementation, and operations. There's a tendency for people to acquire security, whether in terms of technology. They make it an event, I've arrived, and go on to deploy. And many times they don't even get it right in terms of the deployment. And then go to sleep, and they don't accrue the benefits of what they have invested in. So we have intentionally organized ourselves to see to it that our customers understand security beyond or even outside technology. And in so doing, we emphasize things like operations, security operations, where we work with our customers to do things like threat intelligence. You want to be, you want to have visibility of what's going on in your environment at any one time.
All right.
And so we are in the entire life cycle of security. We also do solutioning. We build solutions. We represent some products that we know would be good for customers, but we sell security, not technology.
All right. If you need more information, I'm sure they can find you. Ladies and gentlemen, again, we want to thank you. I want to hand over back to my elder brother. He has more gray hair than I have, and so I risk being kicked off the platform. And we'll have our photo. So, ladies and gentlemen, let's have our photo. It will appear on the UBA calendar next year. So,
I like that proposition. So please have your photo, and Wilbur, I think you've had the request, the calendar. But Maurice, who still prints calendars? Thank you very much. I want to thank you, our guests who are still here. Can you give ourselves a round of applause? Because you have, in a way, kept this whole thing running. Without this, it would be quite interesting for us to be talking to our sponsor, main sponsors, as well as the few that are still here. So thank you very much, ladies and gentlemen, for keeping the panel alive and speaking to human beings. And to the participants online, we want to thank you as well. Cumulatively, we've done close to 200 people online, and so we don't take that for granted. And so thank you for investment in the MBs and ensuring that you're part of this conversation. We are bringing this to a close, and I would like to recognize those that have put in the investment into this. Can we put our hands together to MasterCard for the investment, for being the title sponsor, and ensuring that we have fruitful conversations that are definitely going to impact the work that we do. Allow me to also extend our gratitude to MTN Mobile Money Uganda Limited, our platinum sponsor, good friend Richard Ego. Thank you for I-Fortify. Thank you very much for the investment. Raxio Data Center, and then eLab Limited and Checkpoint Software Technologies. So we want to thank you, as well as BPC and InterSwitch. So thank you very much for your investment, and it is these investments that make some of us have the opportunity to come here and speak English. Otherwise, we'll be speaking Mutunda Meka. Ladies and gentlemen, we are coming to the end of this, and without further ado, allow me invite, I think the first time I met Mr. Mackay Aumo, I had people here call you, in this space, call you Uncle Mackay. I remember that very well. So allow me invite the friend of us, a friend of the fintech space, and coming in from the Bank of Uganda, Director Mackay Aumo, to come and speak to us and close this meeting. Thank you.
Thank you, Michael, and indeed your friend. You can see I've given the whole day here today, and I always take these meetings very seriously. And today, again, I've witnessed another very serious meeting of mine, speaking the same language and touching on areas which make me not sleep. I'm as good as yourselves who are in the kitchen cooking, because when there's an attack, I receive it with the same shock, the same way you do. So at this point of making concluding remarks, I just want to say I think we observed the protocol as set already. I don't need to go through that again. But I have to appreciate the representation from government, ICT Ministry, and also my boss, the Deputy Governor. And of course, big thank you to UBA for organizing this. I would also want to express my gratitude to the chief sponsor and all sponsors who have sponsored this event. The moderators did a very good job, and also all the panelists for the good work done. The interaction has been excellent. I've listened and given it all my day today here. I've not reached my office, but what came from the panelists and also what came from the audience, the participants, was really very enriching, and I hope we have listened carefully to this discussion, very carefully. I'll repeat. I was asked to say what Bank of Uganda is doing. We have tried to do many things working with the stakeholders, and I'm happy that it's beginning to bear fruit. I want to congratulate or appreciate what came from the last session. I want to appreciate every issue that was discussed, and how I wish this was made. I wish this had come in early morning hours when we had a bigger audience in attendance. But all the same, I believe we will be the ambassadors to take this message and try to implement what we've heard from here, what we've heard from Diana, what we've heard from Rogers, what we've heard from Richard Yego. But I think the question I was asked is what Bank of Uganda has done. One of the things we did initially, because there was a lacuna, there was no law. When the law came in, we then went on licensing, but we were careful to do some key regulations. Then the cyber issues came up. This is an earthquake, a tremor in the house. And so we issued cyber guidelines, cyber security guidelines. And indeed, as Roger said, it's the big O. You have the people, you have the processes, you have the systems or the technology. Now, listening to Richard Yego of MTN, I'm really very happy, and I want to say this openly, that you have implemented our internal control guidelines for cyber, what we recommended. Because we identified those areas, which include the SIM card issues, new SIM cards being used to perpetuate frauds, swapping of SIM cards, and trying to put in some limits, system alerts, system prompts. And this war is on two fronts, I should say. And I'm sorry that I might take a few minutes or seconds longer than expected because of this particular topic. You have the final consumer. I think there we have done very well, and we're continuing to do well through collaborations. The Tom Ferrer campaign, then we had this Better Steady. At least today when you get a call from these fellows, and I think that drove them to become very rude, and I don't know what your experience is. I've received many insults from these fellows. The moment you try to interrogate them, they return with a lot of bubble artillery. And so I think on the final consumer side, but we still have a lot of work from system side. The controls which have come out clearly in this meeting. I think we roll out products quite quickly without checking the systems, the interfaces between the core systems. Even after sometimes hurriedly do user test, acceptance tests, but sometimes we don't even go into to conclude the agreements, and we kick on, we make the systems live until when the other guys get in and cause a tremor, then we start panicking, we check. There are many things that we didn't do. I think it's very important that the protocols have to be. So we created a lot of awareness about the need to have vulnerability tests, penetration tests, and of course, we do vetting of people when they change jobs, or when they are being recruited. The law requires you to submit those names to us, and we can do background checks. But this should be happening with every payment service provider. And this is key. And of course, so I've touched about the people, but also agents play a very key role. These frauds have gone through the hands of agents. One time the Minister of Security wrote to us and say, the law requires that over-the-counter transactions have to be on identification. So we wanted to enforce this immediately, but we got an outcry from the payment service providers that they kind of needed some time. So we thought of taking a tiered approach. A tiered approach meaning maybe we start with a threshold that this was going to come out, I think, when I get back to office, we will issue another circular to do with this. We could start with a threshold, say 200,000. Surely somebody receiving 200,000 should identify himself at a minimum. And then the agents, the onboarding of agents is very, very critical. Onboarding and continuous training. But we have also issued a circular about agents, and we went to clarify the provisions in the Data Protection Act. Section 7 says public institutions or companies like yourselves can seek consent. So we're now talking about amending the terms of agreements with agents. Let them provide consent that if this, the red points, the red spots, if this and this happens, you'll be blacklisted, your KYC will be shared, and you'll be locked out of the system. We want to make it extremely hard for things to just go on. Because we find that one PSP is hit, and maybe because there are too many providers, Airtel and MTN, but these fellows continue enjoying themselves. They drop the Airtel side and now move and work with using the MTN SIM cards. So we want to make sure that these bad fellows, we blacklist them and circulate their information to the whole network, so that not just the PSPs, but even the banks, the banking side. So it has to be punitive. It's going to be very punitive. Similarly, these fellows who commit frauds and then move from one institution to another, there should be another blacklist for those kind of people, so that we rid of this. What they are trying to take us is a way of life. Everybody has to work hard, and I don't think there's any free money we should just get like that. And so all these things we are trying to tighten. We issued the consumer protection regulations, but somebody asked a question that we kind of have piecemeal regulations, but we're trying to address what was urgent at a point in time. So now that the law came out, it was very important to have, because these are straight through transactions. You press a button, demand. So it was very important to protect the consumers. So we had to we want to make sure that we had national payment systems, consumer protection regulations. Similarly, we want to do agent regulations. And now we're looking at fair competition and also doing fair competition regulations. So ladies and gentlemen, you know, when you give me the floor, there are many things that, but I don't want to take a lot of time. I will not take that approach this time. I will make a few remarks and then conclude. So we're grateful to be here. And again, thank you, Uganda Bank Association, for consistently holding these annual bankers conferences. And this particular one has been very, very topical, and it's a meeting of minds again, as I said. As we know that technological innovations continue to transform banking services, and we have seen a lot of innovative products and services. We have seen digital credit grow, the savings growing, and in implementing the law, we see very promising results, and indeed, as Sarah put it, we have seen growth, both in deposits accounts and as well as in growth in credit. So this is good news. And when we look at Uganda globally, the World Bank Global Findex for 2021 reported account ownership at 66%. And this was 10% above the sub-Saharan average. So Uganda is doing very well. And most of this is driven by digital financial services. We note that there's very steady growth. If you look at, we're doing another FinScope survey currently. We're in the field, and I was happy when one of the participants touched on the issue of village savings loan associations. Because of the low levels of financial literacy, we need to reach the hard-to-reach areas. But most of these areas in Uganda, they have what they call village loan and savings association, and mainly ladies, women, are the ones running these groups. So a lot of emphasis of policy intervention is going to come through digitizing these services and connecting them to the formal financial grid. It came out that there's already some effort going on in this. We now have 27 institutions that have been given licenses. 25 of them are fintechs, but we also have 2 banks, Stanbic and Postbank. Something again which is undergoing, we're discussing is the unlicensed players. You recall the statistics showed us that there are 160 plus fintechs, but only 25 of these have come for licensing. The law says you cannot offer these services without a license. And then we have these partnerships and collaborative arrangements who have emphasized a lot of collaboration, and the same thing is happening at Bank of Uganda. So these third-party connections, they're proving to be a source of vulnerability in terms of frauds, cyber frauds, and all this. And we are discussing whether these particular unlicensed institutions should have collaborations. It is healthy to have the licensed ones engage in these partnerships and collaborations, because at least we know that there's a sense of accountability and transparency. The governance issues are streamlined and they can be followed up. But these ones who have not come out to get licenses, I know that it's a trade-off, because at the same time we should be talking about financial inclusion. And I know they're playing a big role. It's a delicate issue, but it is something that we're discussing. Indeed, we see very tremendous growth, exponential growth in mobile money. Today, we are seeing 16 trillion turned up monthly through the trust accounts. We are seeing a velocity of 16 trillion, and a very significant growth from about 13 trillion last year in June 2022. But again, as we do collaborations and share these networks, we appeal that we do not just focus on doing business or maximizing profits, but let's look at building economies of scale. Because when you have bigger volumes, bigger numbers, then everybody will enjoy. We believe the market is big enough. There's a lot which has not been exploited, and there's big potential for digital financial services. We have a big market here, and we also have a good competitive advantage in the EAC region now because of our location. It's our strategic location. Because we do business with South Sudan, we do business with the DRC Congo, closer than Kenya maybe would do, or Tanzania. So we have to exploit this and make sure that we expand the markets. We have to address these challenges. And therefore, we call upon you to let's be reasonable in building this business in terms of charges and also sharing infrastructure, because the high transaction costs discourage usage, and then we lose on use cases. Cyber threat, I think we have talked a lot about it. I will not go into it again now, but what are we doing as Bank of Uganda? One of the things which I was asked about to talk about was national switch, which I already explained what advantages, benefits may come from it in my earlier response to the question that had been asked. And this is we have done clarifications of bids, and we hope to open the bids on 24th August. Then we'll see how to proceed from there. We also have a revised national financial inclusion strategy, where Bank of Uganda is the secretariat, and we're still looking at reducing barriers to access to formal financial services, broadening and deepening usage of financial services, strengthening consumer protection and financial literacy. We're also looking at issues of inclusive green finance and gender inclusive finance. We are still grateful for UBA for the many collaborations that we have, extensive collaboration, which has also extended to the PSP associations and all the technical working groups. So like I said, we're working on fair regulation, fair competition regulations. Again, we'll bring this out to the stakeholders to exhaustively discuss them to move them to the next level. So these are some of the initiatives that are ongoing. But again, even from the bank side, we emphasize the issue of strategic collaboration. And we've been able to do this with other regulators like UCC. We joined hands with the development partners, with the UBA. There's a lot that we are doing with the UBA, Uganda Bankers Association. So we will continue to provide an enabling environment and to ensure that the environment supports cost-effective innovations and also promote the regulatory sandbox, which we are doing at the bank, and try to reach the bottom of the pyramid customers, and let's make at best use of what we are doing well. The mobile money is doing well for the country, and I think that's why we should put a lot of emphasis to streamline and close those gaps, cyber issues which have already come out. Otherwise, it's a good day for me. I'm always very available to join you on this subject. And I see that today I'm happy because many minds thinking the same way in one room. I know we usually have this kind of meetings, and we'll continue to be present when these issues come up. So I think in wrapping this discussion, I've gone into some talking, but I hope it has been useful with these few remarks. I think I was given another responsibility. I don't know when it comes that I'm supposed to. But thank you very much. Thank you, the moderators. We're very grateful, and you've done a very excellent job. Let's continue together in the fight. I want you to be counted as one of the Ugandans who moved, created an impact in this field of digital financial services. We want to give our best, all of us, all our efforts and all our attention. Thank you very much. Thank you for listening to me.
So we're going to, for those that are still here, we're going to present the certificates. And I'll request Mr. Aumo Ankomakai to come and do the honors. So we'll start with Richard Yego. Please do come. This one is not here. Paul Chirunji. And Richard, you'll stay there so that you can have a group photo. Paul Chirunji, Geraldo Tim. Victor Ndlovu. Miss Josephine Olok. Frank Mola. And then John Patrick Okering. Mr. Ronald Azire. Miss Diana Majimbo. Miss Diana Majimbo. And then the moderator of the day, Maurice Mujisha. So Mr. Makai, you're going to stand in the middle. My certificate is to be delivered tomorrow. And for those, because I still have a job to do tomorrow. But those, okay. So let's have that taken. Thank you very much, our speakers and our moderator. Those that left early, we will do some bit of photoshopping for the record. So thank you very much, ladies and gentlemen. Mr. Makai, I'm going to request that you stay behind, and then the sponsors, if you're a sponsor, please stay behind. Richard, yes, the sponsors, as well as Ali, Mr. Ali. The sponsors, this is your moment. Group photo with, yeah. So can we have that? Can give them a round of applause for their money, guys. Next year we need them. As you're still there, let me invite Wilbrod Awar, our executive director, to come and be part of this photo. When you're presenting to your bosses, you say, I was there also. And then I'm going to request, stay the way you are, I'm going to request the entire secretariat that has been involved in organizing this, please come and be part of this photo. The secretariat, if you know you've been involved in the organizing of this conference, those that are here, please. Can we give a round of applause to the secretariat? Now this camera, sometimes you're not very sure which is the official one, but you're done? Okay. And those of us that have had the opportunity to stay to the end, for thanking you, please come and be part of this photograph. We have a group photo. So please, if you don't mind, please come and be part of this photo so that, yeah, for the record, we are part of this. Yeah. Of course, Wilbrod will remain at the back. He can't go to the, otherwise the person standing behind him. Can I, okay, I know some of you are very important to ask you for these things, but those who feel like it's okay to be part of this, let's be part of this group photo. And those who can, yeah, we can use the staircase. So can I have, yeah, the official photographer? Let me know when you're done. So thank you very much. Feel free. I am pretty sure there is coffee, so you can still continue the networking and the conversations. So thank you. I have had the pleasure of being your program manager for the day. I want to thank you very much for allowing me to do this and for keeping with us all the day long. Have a pleasant evening, and for those that are coming in tomorrow, I will see you tomorrow. Have a great evening. Thank you.
MasterCard, we are focused on a world